and saying, okay, what's the lay of the land here? Bitcoin hasn't bottomed out yet, in my opinion. I could be wrong, but it sure seems as if it's poised to just go to 20 or below. You know, we don't have a solid time frame update on Pulsechain. You know, the market is bear. So you add all that up, and you know, I just say proceed with caution. So I've been leaning into limit orders on both sides, right? I'm trying to catch that Johnny Chaos, like 24 cent, 20 cent wick. And so far I haven't been successful, but who knows? Maybe that'll happen. You know, if someone makes a $1 million buy and there's not enough liquidity to cover it near market. And then, of course, laddering on down. And, you know, that's been successful. But, you know, I bought heavy back in early September. So my cost basis is still pretty high. So even if I don't time the bottom perfectly, which I've never been able to do anyhow, right? It's still going to help with getting the cost basis down. So I don't have a problem with that. But sure would be nice if BTC had already bottomed and we were following. But it seems like, you know, we've gone down a lot more. So that's just my thoughts at a high level.
Yeah, I would definitely feel a lot more position if we had seen the Bitcoin bottom, for sure.
It just means more opportunity down the road to get more hex at cheaper prices, likely capitulation. So save some money.
Yep. And now I'm at kind of a crossroads of like, well, you know, I wanted a bunch of dry powder to on ramp to Pulsechain, but am I better off with it being this low right now? Am I better off just staking everything right now and only bridging in USDC come Pulsechain and know that my hex is locked up and copied and locked up there as well, so I don't make any silly moves? Or, should I continue to hold a little bit of dry powder? Not a little bit at this point, but some dry powder, because maybe we're 3 weeks to a month away from launch. It's hard to say.
I think a lot of people buying more hex now that need some dry powder are gonna appreciate on the run up, and maybe take some profit. Not all of it, maybe all of it. I don't know. Get the copy and then take some profit and have some dry powder as well. Because we get that announcement, it's gonna run up. We know that for sure. So if you're buying now, you're gonna be all right for sure.
Yeah, for sure. I mean, the way I see it, if you're planning on sticking this thing out for at least 2 years, getting hex at anything less than 25 cents is a major discount.
Yeah, we're all trying to do the best we can, right? But I mean, everybody's gonna be fine. Looking forward, next bull run, peak, no matter where you bought. So don't fret.
So yeah, I mean, if you got in at 5 cents, right? It goes up a penny, your bag's up 20%. that's just nuts.
Yeah, I had my limit orders set just above 5. And shoot, if I'd hit that 4, it was instant. Like, yeah, it was instant, like 30%. Caught the falling knife. My bag went down 20% and then came back up and to where we're at now.
Yep, I couldn't move fast enough last night. I got a bump on my head because my tower's like under my desk, and so I was like, got a tiny little cord on my Trezor, so I was like shoving my head under my desk to navigate my buy orders and stuff. Bump the shit out of my head trying to get back up to the computer because I just saw it, spiking from 3.8. I'm like, go, go, go.
Yeah, it happened fast. Watched my limit order execute, and I saw the price at like 4. I was like, should I pull the trigger again?
Just wanted to bring up. I was just listening, and like right now, when it comes to TA, we're in the golden zone, meaning whatever you buy right now, the past has said 2 or 3 years down the line, you're gonna look like a genius. Meaning, like everybody's, everybody's like, will it go lower? Right now, you just got to have the confidence and the understanding of you're already buying in the golden zone where you can't lose buying at these type of corrections. And yes, it's a 93% correction, which if we're going to go with a hex 52-cent high to 3.5 cents or whatever. But some people caught it at anything 80 plus is just legendary. But I say that to say this. In my opinion, it's going to go down to about a cent and a half to 2 cents, bottom out. But people got to understand what hex is, just like any other coin. It's like you guys said, it's a Bitcoin bear market for the last year. In any bear market, it goes down. That's the direction it's going down with limp dick bounces. Period. So we're all doing it. Some is going to correct 97%. Some is going to correct 85%. It's whatever coin, whatever unique scenario, depending what phase they are. But I say that to say this is, yeah, if I had X amount of dry powder, because I have my limit orders also, but I think there's going to be 2.5 more weeks of blood in the streets, and the market's going to flip in about 2.5 weeks. And Bitcoin hex will go down, and whatever the price is from there, it's up to the right at that point. But so if I had dry powder to DCA in, which I do, and but my next one is about saving some dry powder for a cent and a half to 2 cents to 2.5 cents. You guys are like, man, well, that's 50% of where I'm at today. It's all good. It's all love. It's just hopefully you're still going to be in a position to DCA if it does get down there. It's like, because in the future, again, we all don't care about what the price is 3 months, 6 months from today. We care about what Hex's price is 2, 3, 4 years down the line, and you're going to look like a fucking champion looking back at, and you're not going to worry about, oh, I was 2 cents off from the bottom. But my 2 cents this morning.
I concur, sir.
Solid thoughts, Filipino. Solid. My whole way of looking at this is I don't half the time the bottom. I mean, I'm principally staked on the vast majority of my HEX, but I just don't want to miss the bounce, if you know what I mean. So you don't have to be perfect when you truly believe in this beautiful asset of Richard's called HEX. You don't have to time it perfectly. You just have to make sure you're there when it begins running. And the consternation there is, if Bitcoin hasn't bottomed yet, when's it going to do that? And then what is the impact on
So
HEX? We don't know.
so great question, Pepe, and I just want to answer that. You know, you know, people say you don't know, but in the TA world, you know, because people just believe in charts, and you can. So there's different charts that say certain things. Like, let me just give you an example. It's not just one chart, but there's many different charts. I'll just give you the example of like 2018. There was a chart that said if this happened, it's going to bottom out in 4 weeks. Well, you know, and so that's why people can say if it happened in 2017, when this part happened in the chart, it's going to bottom out in about 7 weeks from this happening. But ultimately, that's the reason why I truly believe Richard Hart, because he's a professional. He knows how to time the market, and they use the charts. But it's like, you know, the reason why they tell 90% of people not to do it, 100% not to do it, because there's only 5 to 10% of people that actually know how to read the charts and make really good money, because it's actually, you know, past history, and, you know, it's still gambling. It's just ratios and, you know, probability. But the charts are saying the bottom of the market is within literally 3 to 5 weeks from today, because that's what happened in 2014 and what happened in 2018. And I want to say this specifically: we are doing exactly what 2018 dip happened. Just look at the chart. So if we do exactly what go ahead,
And I am looking at the chart. You want to know
Okay.
what I see? And I'm
Okay.
not a TA
Okay,
guy. I'm not a chart.
Okay, so here's
I'm
here's
a
the
central.
TA.
Here's hold on, Filipino. Here's what I see. I see that BTC has fallen out of a descending triangle. Now, I may be the product of the Virginia public school system, but anytime an asset falls out of a descending triangle, that is mallow.
Gotcha. Well, look from the date of May 15th, 2022, which is a week and a half ago. Just look at the chart for May 15th to forward. Okay? There was something big that happened in the chart on that day. It happened on the 15th in 2018 too. It actually happened on the 15th too, specifically 4 years ago. Well, basically, when you look at from the 15th of this month, it's projected for the next 4 weeks. It's going to be nothing but a downward motion to the market bottom. So just when you start looking at things, this is things to look at, because it's all it is lower lows all day long. And but it's exciting, because I truly believe if the charts are right this time, and actually confirms in 3 weeks, that means that I truly, you know, Pulsechain will launch too. I'm just, you know, I'm not saying that there's not bugs to fix, but I think that if this happens and there's a market flip and it turns bull, or, you know, he's gonna launch Pulsechain, and for some reason everything's gonna be all good, and he's gonna press a button and he's gonna be like. So that's why I'm giving the dates specifically. I could be wrong, of course, but June 12th, 13th, 14th, and 15th.
So you think BTC will capitulate in 3 weeks?
100%. It just like 2018. Just like 2008. We're doing the same fractals on the chart, just like 2018. And the reason why I'm saying that to you is I'm trying to have you look at May 15th. Just look at 2018. It started, and look at the 15th when the dip happened. It took 4 weeks to get to the bottom. to do a market change. This is the last final dips. This is the last 2 weeks. This is happening to. I was there yesterday, 2018. I'm really big in charts. You know, I don't really talk on things unless I know really a lot of information about it per se. But this is just watch the Bitcoin fear and greed. This, you know, it's under 10. The next 2 weeks is going to be under 5. When there's extreme fear, you buy. You know, nobody's going to see the Bitcoin fear and greed this low ever. And within the next week or two, it's going to go under 5.
All right, so
Which
I'm
is
looking
still-
at the chart.
which is still-
I'm looking at the chart now.
Okay.
And what was 8,500 on the 15th of May?
So you'll see right there from that moment for the next 4 weeks, it's going one direction from that specific date for the next 4 weeks.
Yeah, down.
31
Straight down.
days, not 28.
Interesting. Okay, I'll keep an eye on it.
So, based on what he was saying, I heard some positive things like, okay, so right now is the time to accumulate, get as much as you can, stake, get your T-shares, and be patient for post-chain launch, right? Is that what you heard too, Pepe?
Well, he didn't say anything about staking, but maybe. My question is, how much liquid hex should you hold, or should you hold that in USDC, and just DCA down with limit orders? And if you get filled at 4 cents, great. If you get filled at 3, better yet. But that's kind of how I'm doing it. I just didn't want to sit there with a liquid bag of hex and be down 30% every day like I had been. So it took me a while to make that transition, but I got there. I'm a slow learner, but I learned.
Yeah, you don't want to lose your position, right?
Other side of the coin, Mello, we did really well sacrificing, right? I mean, we were sacrificing in a 20, 30 cent range, and now it's 6 cents. So, our sacks are fat relative to the market price of Hex right now. So I can't complain about that. I'm certainly not complaining that it's been the better part of a year that I've sacrificed for Pulse, and oh, woe is me. I didn't get a chance to earn a return. I have earned a return. It's just you have to put it into hex terms, and then you've done really well. I mean, so we're all sitting there with 25-cent hex that we sacked. That's fantastic. And so I look at the whole thing and I say, well, okay, if I were to convert my sacrifice dollars, not counting the bonus multiplier, I mean, I basically got 2,000 pulse per hex. That's a pretty good deal. So if that ratio comes out less than that, I know where I'm going.
had to step out for a quick second. But my final thoughts on that, though, Pepe, overall, it's a great time to be part of this community and accumulate hex, especially if you care about the price, 2, 3, 4 years down the line, and not where it's going to be fucking 1 month or 2 months or 3 months or a year from now. You can't beat a discount. I don't care if you go outside right now. Go to fucking your jewelry store or your grocery store or gas station, and you see 93% off of anything. You go, this is 93% off right now. Like, how can that not be a good deal? But oh yeah.
Hey, Hope H, what's going on? Did you have a question? Hope H.
Hello, yeah, thanks. Man, that Filipino guy, I have a lot of respect for him. 3 weeks ago, maybe 28 years, 28 weeks, 28 days ago, he forecasted the hex can go down to 5 cents, and that is happening now. My question to him: how far can the hex go down?
Hope, thank you very much for your testimony. It's not
Hey,
that
so Filipino, we remember you were in here yesterday, and you said the same thing yesterday. We already spoke on everything, so could we not get into any?
So I'm not 110%. I'm not doing any TA, or not, I mean, not TA, but what was the word you guys use? I totally understand, respectfully, but this is all positive stuff. But I'm definitely watching my words. I'm not trying to. I know what we touched on yesterday, but I was just trying to answer his question. So, not financial advice. It's a bear market, and as long as to answer this question is as long as we're in a bear market, the price goes downwards. It's crypto's been around 12 years, for example. It's 3 years bull, 1 year bear, 3 years bull, 1 year bear, 3 years bull, 1 year bear, give or take a few days. So you tell me a cryptocurrency that only goes up in a bear market. So bottom line is this is all healthy. Every single crypto, if you look at any of your favorite cryptos, it's always dipped and corrected a healthy 85 to 97% in the past, if it's been in the game long enough. So when an altcoin, let alone Bitcoin, do a 97% or less correction, it's normal. So I say that to say this again. It's a great time to buy and accumulate hex. It's on discount. But I can see it going myself
You don't have to say a number, but that was really
lower.
really good.
Lower. But who cares about lower? Now, what I'm saying is about percentage, on your dip. That's the question. Right now, we're at a 93% correction. There's only 7 more fucking percent to 100, right? But so even if it corrected a full 97%, like other past altcoins, do the math. Will it? We don't know. All we can do is reference the past. But good luck to you. Good question.
Hey,
One more
come
question
and stake it. Or go ahead, Hope.
to give me the chance. Melo, I have some dry powder on USDC, so I'm just buying from exchange. Can you advise me how to buy with the limit order on matcha or something else? I never did that, so
Do you have your hardware wallet? Do you have so right now? Do you just have an exchange? That's it.
I have exchange and I have hardware wallet, 2 hardware wallets. I don't normally touch them, so I'm just waiting for the launch.
Okay. Have you already so you sacrificed and you've migrated from these hardware wallets? I didn't hear you if you were saying anything.
Yes, I did. I did.
Okay, so these funds that you have, do you have your hardware wallet? Like, do you have the funds in your hardware wallet that you want to make the limit order with, or do you want to know how to take it from your centralized exchange?
I normally buy buy hex on changenow.io, but now I want to do it on instead of just watching and see when it's go down. I don't catch it basically. When I go back and I try to buy it, it already went up. So I just want to do on limit. I've never done that
Okay,
before.
it's called Matcha. Matcha. If you go to matcha.xyz, MATCHA, you can connect your hardware wallet to MetaMask. Connect your MetaMask. You can connect your MetaMask to Matcha and use USDC to make these limit orders for Hex, or you can use ETH. Now, when you use USDC, you only pay one gas fee, so you can place as many limit orders as you like. So you can pay one gas to make 5 limit orders.
You mean an authorization fee or a gas fee?
Well, the authorization takes some gas. The first, when it asks you to confirm the USDC, when it asks you to allow the spending of the USDC.
All right. Sounds good.
Mello, got a question for you.
What's up?
Is this a fair statement? The very first day when main launch happens, you're going to be able to provide liquidity. And people bring it up. Is usually in the first day or two, you gain more percentage wise because there's not many people on the network per se in the liquidity pools. Is that I don't know if I'm wording it right, but are you following me a little bit?
Yeah, I know what you're saying. So the more that there's the more people that are invested in the pool, the lower the percentage goes. The less the less people that are invested in the pool, the higher the percentage.
So, is it a fair statement, like in past history, like there's like you can get, there's reports of like making 1,000 to 2,000% APRs the first day or two, and that's why there's like hundreds of millions of dollars dropped into the liquidity pool in the beginning because those gains are there per se. Richard Hart was bringing it up in a statement before, and I was just trying to bring it back to memory.
Personally, I think there will be some volatility in the beginning stages. So I wouldn't recommend anyone do LP, even if they know what LP is and impermanent loss is, because that volatility can cause some impermanent loss, and that percentage might look sweet and juicy. You might gain that incentive token back, but yet again, how is that incentive token gonna perform, and um, what price can you actually sell that incentive token at and make your money back to cover that impermanent loss? So it's just I personally don't recommend in the beginning, but there are people going to be taking chances and I think big players in the game will be definitely playing that
Good
game.
statement. Is there anybody on here that's confident that we will be playing that game that we're talking about?
I don't think no one is gonna come out and tell you that, bro.
Yeah, no, I know, man, because I'm telling you, I have no, what's funny is like, I know these are real technical. I always try to find those those gems per se, but
Yeah, but though that specific, like I think whales and like big players hide. Like they don't.
they don't
Most
want
of
to answer.
them,
No,
yeah.
right, but I've gotten it out off a few people that, if they had money, they would try to make these plays, and or there was some people on here that knew exactly how they're gonna play it because testnet, you can see which pairs are making money and which ones are not, and that's why you get to play with it, and you're like, oh, we all know it's just testnet, but it's like, okay, this pair is like, making 225% this and 125% here, but this is now, but in the beginning it was more. But I'm just researching as much as because I definitely have a bag uh, to risk and see what happens. Because that's just the buzz on the streets. That's just, that's I just know that's the reason why smart money is gonna put their money in liquidity pools as soon as possible. Because they know the first 1, 2, 3 days it's stupid massive gains. But
But now a good play, like I would
because the money's got
recommend
to go to somebody.
a, a good play that like I would recommend is to utilize the network is by delegating their pulse that you can benefit off of um passive income wise, and you won't lose out on any pulse, and you can also benefit off the volatility that will be happening in the first couple days or months.
110%. I'm with you. I'm 100% delegating my pulse chain 100%, and I'm single-sided staking 100% of my bag if the feature is there when it comes to PulseX, and not have to worry about pairing it up and dealing with impermanent loss. But I do have a separate bag for that play. But I hear you. Good
Same here.
comment.
I got two bags. I have one for delegating. I got one and for
Exactly. I
staking.
know. All right, there's an in crowd. There's no secret, but I know there's an in crowd. Within the community of smart people, and it's hard to get into that in crowd per se. And this is just my feeling around the. But I know when it's like a class. It's like high school. The the buzz goes around, but you gotta keep asking sometimes. And sometimes you get in, sometimes you don't. They ain't telling you shit.
Hey, yo, what's your occupation? If you want to tell me.
Uh, I never had a job, entrepreneur ever since 18. So
Nice. And how do you?
it's just middle, somewhere in the middle there, somewhere in the middle there, but yeah, yeah. Life, they don't teach you how to make money, let alone uh how to invest the money you do make. And that's the secret gem of cryptocurrency. That's the secret gem of Richard Hart. It's where you can fucking mow the lawns, you can fucking work your 9 to 5, and you can make legitimate money. But where can you fucking put that spare money into something that's going to make more money. You know, without having to do that
any
much.
of your businesses finance?
I'm like I'm a entrepreneurial, you know, whore per se. You know, I've done it all. You know, selling everything under the sun that was legal. You know, from phone sales to door to door sales to managing hundreds and thousands of people nationwide. You know, but thankfully I'm in a position now where I found Richard Hardy a little bit over a year ago. So now it makes sense. It's all coming together. Timing is everything. You know, but the secret in life for a grown ass man to make money that's the secret sauce. Where do you put the money, the extra money? What investment do you? So where can you put your money to make money? And the more money I've put into Richard Hart, the more money it comes back to me. It's like, just, if I would have known this long time ago, I wouldn't. Hey, man, accumulate, guys. Buy.
Clearance
What up,
on
Filipino?
ILHEX.com.
Definitely a better price today than it was a few months ago. For some, anyway.
The reality is, if you got into Hex the last 11 months, maybe 10 months, but ever since the top of 52 cents of Hex was about 10 months ago, so if you are somebody that bought Hex for the very first time from 10 months and on, you're like, you're going to second guess this whole fucking program. But guess what? Don't sleep. The only way you lose is sell it when you sell it for a loss. Just because your bag looks a little low, don't worry about what it is now. Just know that Hex 2, 3, 4 years down the line, the price of it is potentially very good.
What's up, Mando? How was your night or morning?
Night went well. Had a good time in here. Giving you my thoughts last night, if you were in here, and everything is great. Everything is going well. We're in a bear market, enjoying accumulating Hex at these prices before the fork. It's just crazy. I'm also having fun watching Richard do his thing. Just out there in the world. Those are kind of fun videos and shots lately that are coming in.
Am I gonna see you at Pulse?
I do have plans to go. Right now, I have some issues with my parents' health that might prevent that, but I do have plans currently to go.
Oh well, definitely, yeah. Way more important.
I think the debate over whether or not he's timing the market is over with, though, in my opinion.
What's cracking, Mando?
I'm just in pause mode. I'm just enjoying this time, to be honest with you. I know that sounds crazy, but just been through too many of these cycles, and these have always been the cycles that make you the most amount of money. I'm very much enjoying it. It's definitely a time to batten down the hatches and really decide. It's kind of like drawing the line in the sand mentally for yourself. Just pulling back, enjoying family, going to the beach with my son. Not like trying to be on Twitter 24 hours a day, 7 days a week right now. There's not much to do in terms of crypto, right? Helping people onboard, not staring at the portfolio as much as just trying to inject more into the digital assets I believe in at this point.
Yeah, I understand. It's hard to look at the portfolio. Your percentage is down, all crypto is down. People get emotional, but you've been there, you've seen it, right? You've been through this cycle before, but and a lot of the new guys haven't, and that's why they're probably emotional about it. It's a lot of the Hexicans, they haven't been in it. This is the first time that they've actually been in it, a proper one, like with the market going down and Hex going down. And the emotions there, so they're not. It's not just their heads going down, everything else. But we've got to educate ourselves that this is normal behavior for crypto, and we shouldn't let our emotions overwhelm us, right? Bitcoin. How many times did it drop? And if they were screaming and pulling out their hair and they sold, then they lost when it came back up. We don't want to be the guys who buy the tops and sell the bottoms. Unfortunately, it's the only way to make money. You need people to buy the tops and sell the bottoms. But we don't want us to be the guys who buy the top and sell the bottoms. We want to control our emotions. We just look at the chart, look at the history, and know this happens over and over again. It's normal behavior. Do not let our emotions get to us. I know a lot of people put a lot of money at the top because of emotions. They saw the green candles. And now it's down, 90%. It's a good time to buy, but it's hard because they've already spent their money on buying Hex. Buy what you can. If you can't buy any, then just hodl. It will go back up. Don't be one of those guys that just sell back to even as well. It will go and keep going. You might just get there. It might bounce off there. It might come up and down. But that's what's going to be. You're going to have to learn to control your emotions. And then one day when it does break and you did hold, and if it does break, you'll be happy. Like, keep in mind that this is, the Hex pumped because of two reasons, because of Pulsechain. It brought more attention, it brought more adoption, so you're going to expect a bigger dump. Now, it may take a little longer for it to go back to all-time high, because people just want to sell in profits, and then it'll come back down again, and then eventually it'll break it. Once it shakes up the way it can, and it happens to all crypto. If you look at it, it happens over and over again. It goes up and down, up and down. Eventually, it'll break it, and the people who did hold will be happy. So just look at the history of crypto, and this is normal behavior. Do not let emotions get to you. And man, I hope your parents, or whoever's sick or whatever the case may be, I hope it's all good in the end. I hope it brings your family together and brings more love.
Yeah, I just, I have a lot of people call me because they know I'm a go-to place, for legit information. I just have two things to tell people right now. And it's not just specific to the RH ecosystem. It's just in crypto in general, but, we can definitely talk about Hex and, this is the time to take a break from crypto in a lot of ways. This is the time to, if you've just been inundated on, crypto Twitter and inundated with watching live streams and being in the spaces and doing all these things, this is really a time to just enjoy your life for a minute. There are bear markets and there are bull markets. And the bear markets, there's not a lot that you can do to make money in crypto without a massive upside potential to wreck yourself, because liquidity is low and there's a lot of things that are going on. So this is the time to say, you know what? I have a son or a daughter that needs my attention. I want to go visit my sister. I need to go and start to do a 2-month round of, dropping that 20 pounds and just kind of focusing on my health, right? At the same time, the engagement with crypto for me is just simply identifying those digital assets that I absolutely want to own for the long term, minimum 4 years, and dollar cost averaging at these prices. So it's a simple, very simple strategy. Go get healthy for yourself and for your life and for your family, for your friends and your peers. Go enjoy yourself during this downtime. We only have one life, guys. Like, you could be dead tomorrow. So, living this every day, 24 hours a day, 7 day a week, just sitting on crypto Twitter is just retarded, especially in this market. Go enjoy yourself. And as your capital gets up, dollar cost average into the things that you think are going to have value over the long term. Very simple formula for me personally right now. You absolutely don't sell your digital assets, your blue chip digital assets at these levels. You don't do that. You will absolutely hate yourself if you do that. And I've been through a lot of cycles. Go back and just look at the charts. Every single cycle has a 3-year up and a 1-year down predominantly. And then it goes to find new all-time highs. Crypto's not going anywhere. Bitcoin's not going anywhere. Ethereum's not going anywhere. So you just have to remove emotion and look at data. Look at the reality of what the cycles do and what it means to be in the place that you're in right now in the cycle. We're at capitulation, in my opinion. We're not at that, oh my God, I want to, I'm dying yet. We're not there. I mean, I could actually see it go lower. Because Bitcoin could definitely do like a bull trap and then tank down to that 20,000 or less range. And that would be the ultimate capitulation on absolutely everything. So this is a time to just chill, relax, accumulate the things you love, that you believe in, and maybe just take a little bit more of a break. Maybe if you're spending 5 hours a day on crypto Twitter or on crypto stuff, maybe you do it for an hour a day or less. That's just where that's what I'd give my advice to my friends. Just go enjoy yourself right now.
I appreciate that. I would only counter in right now. I mean, it's even my birthday this weekend, but I'm still trying to learn from maybe some of the mistakes that I made over the last couple weeks. And also just trying to recourse so that I'm setting in a good position. So without
what is a mistake that you felt? Give me your top mistake that you felt you made.
So, well, I think first was trying to kind of time the launch, but I didn't fully take into account the fact that I didn't fully understand liquidity pools, and I wasn't really listening. I mean, I was listening to Profax and Benjamin, but I was more mooning on Liquid HEX. So I had a good bag of Liquid HEX. Average entry is probably around 12.5, 13. And it ripped up to 18, and I thought that we could expect potentially something in May for the launch, and Richard was going to kind of blow past some of the downside of the macro. But beyond that, cool. So but I also knew that there was the potential that we could be down here at 5 or 6, and that even in at 12.5, I was okay with that, knowing that I would get a copy. And still think an entry at 12.5 is a good deal. So what and I kind of felt the narrative switch a little bit too, where it's well, if you're holding Liquid HEX, not that you deserve to get wrecked, but that there's always that potential, and the real value are in the T shares. So I was okay, well, I did get a good deal on some T shares. Let me set some of this out. And I felt more relief actually, just being okay, cool. I can see this like 30% yield coming through. I like that. Where if we're at, even if we're a year into the bear, you know, if it's anything like last couple bears, excuse me, like, you know, with the macro, like it could, you know, worst case, it could be 3 years, right? So I'm okay with those, with setting those out. Now I have other things that I can sell. So, you know, and I knew that I probably could have preserved some of my value by being in USDC, but I still really like the idea of these copies. I'm sacked for Pulse and PulseX, and I've actually wanted to get my hex bags up closer to, you know, the trifecta of the, you know, units that I have in those just for the long term. So I also have a stake ending in 2 days. I didn't really know it. It was kind of like one of like the larger stakes that I had set. Unfortunately, at the top of the market, probably in November up until now. So that stake is down, whatever. But lesson learned, and I can at least pull that out and kind of counter it to what I send out in the stakes. So I can, again, like I'll still have a good amount of liquid hex again. That, you know, that's kind of the bet that I made. So
yeah. So Mango, let me just interrupt. I don't buy into the narrative that you were talking about regarding people saying that, you know, you're just wrecked if you're not staked. I don't believe that. If the way that you lock in T-shares is to get hex at the best possible USD value, because you're going to get way more T-shares when it's cheaper.
Right.
Okay. And the fact that you're not staked does not mean that you're wrecked. You know, staking over long periods of time is great, but the reality is that all that matters is how fast that T-share rate is ratcheting up against you. That's it. But when you're able to buy hex at a 90% discount, you just fell into a gold mine, because now you can buy those T-shares for way less money, right? Regardless if you're staked or not. So the APY is great. It's amazing. It's phenomenal. Like, there's nothing like it. But to say that you're wrecked because you're not staked is just incorrect, in my opinion. It is the X on the token that gives you the most amount of gains. It is not the APY. Okay. People might not like to hear that. I'm just telling you my truth. It is the X's on the token that gives you the most gains. It's not the APY. So don't buy into this narrative. Hex is phenomenal, even not staked. Okay. When you stake it, it's even more phenomenal because you are getting yield. But right now, we're in a bear. It's pre-Pulsechain fork, which means that if you're not staked, your only, your only opportunity cost is the amount of T-shares that you're losing based on how fast it's ratcheting up against you, based on how much you could lock it now versus when you locked it in later. But if the price of hex is going down 90%, that voids it out, in my opinion, for a short time frame, right? This is my personal opinion. I think that there's advantages to being liquid in a down market pre-Pulsechain fork. If the Pulsechain fork wasn't coming, that would be different. But there are some things that you might be able to do if you're liquid that you can't do if you're staked. And we just don't know what those things are. But it really depends on how many T-shares that you could lock in. Like, for example, we were just at almost 20 cents. Now we're at 5, right? 6, whatever. Which means that you could buy way more T-shares now, even if you're not staked. So
yeah, no, I see that now. That it really is just about getting into that right position. So it was interesting actually listening to John last night too, because I'm like, man, like everyone was giving him such shit. He's just like, I'm just following the pattern for the best entry because even if that order of his filled at 4 or 5 and we're up at 9, like that's a solid double. And I guess I didn't realize I didn't fully kind of experience the correlation of price to also price of T share, which
If you're able to buy HEX tokens for on an 85% retracement, that means that you're able to lock in Chi shares that used to be over 10 grand for under $1,500. Okay, so it's all about what you want, but just have an understanding. We shouldn't be telling people that they're dumb for being not staked or this or that. We shouldn't be doing it. It's contingent on things based on how fast T-share rates are ratcheting up and based on the token price of HEX. What's up, Walrus?
What's up, gentlemen?
Good to see you in here, man. How you doing?
Not bad, not bad.
Saw you in those spaces, man.
So Mando, theoretically, if you buy at 12 or 20, you're theoretically locked into the T share of that price, right? Like even if it goes down, you're still
the T-share price is based on HEX per T-share, right? How many HEX per T-share? So if you can get, X amount of HEX for half the price, right? You're able to lock in that much more T-shares with half the price, for half the price. It's just the way that it works. So that's why when you're in a down market, like people that understand HEX, it's like, my gosh, like you were paying, 12,000 for a T-share. Now you're paying under $1,500 for a T-share because the price of HEX went down. This is where millionaires are made, right? This is where this is why it's so contrarian in people's minds. But it's like if you don't understand how HEX works, this is when you buy HEX, because when the T-share rate ratchets back up and it costs 12,000, 15,000, 20,000 for a T-share, and you were buying it for under $1,500, and you're generating yield, and HEX went to do all-time highs, you're going to come back to this moment in this chat and wish, my God, I wish I was backing up the truck at 5 cents, right? Liquid or not, you locked in the amount of HEX tokens. So you got that much more HEX for that dollar amount, which means when you go to stake, you're locked in for that much more T-shares. And the only thing you have to kind of be looking at is how quickly the T-share rate in HEX is ratcheting up against you over a month, 2 months, 3 months, 4 months, 5 months, right? Right now, I think it's a good pace. I think that regardless, this is the time to definitely be scaling in. Not advice, but you have to understand the difference between T-shares and the fact that when you buy HEX at cheaper prices, you're locking in that HEX, which locks in T-shares at a much less valuation.
Yeah, I did a stake 51 days ago and locked in 0.723 T-shares, and that is now worth around 0.669 T-shares last I checked.
Yeah. Now, if you would have took the same amount of money when you bought the HEX then, and you bought the HEX now at these prices and staked it out for the same length of time, I guarantee you've got way more T-shares.
For sure.
On that same note, I'm going to step up on my soapbox for just a second. I think there's a statement we say a lot that we don't understand, and I think it's important to qualify it so that when we tell it to other people, they don't immediately think that it's invalidated, and that's that HEX outperforms in a bear market. And I think that we've said that a lot to new users. And if you look at the chart, the first answer is no, it effing doesn't. What are you talking about? But I don't think that that's because they're looking at the chart and not understanding sort of some of the magic of Hex. So I think that the Hex chart will underperform in a bear market, which is a good thing. So the two things about Hex that make it outperform for an investor, for the person who's actually using it, not the chart, because the chart doesn't make me money in a lot of ways. All that makes me money is where I bought and where I sold. I don't care about candles on a chart. No green candles ever paid me unless I hit the button. So one is that you're collecting yield along that time, right? So if a non-yield bearing coin is down 80% and you're down 80%, if I'm collecting yield along that whole time, I'm wildly outperforming. The other is that the locking mechanism sort of works on leverage. So if we didn't have the staking mechanics, more people would have sold into, say, that 54-cent high, and it probably wouldn't have hit 54 cents because you would have seen sellers along the way. They couldn't sell because they were locked in. So we got a higher high. And that same thing applies in the bear market. So right now, if we didn't have staking in most ways, if you look at a lot of those big sales that we've seen over the last couple of weeks, couple of months, they're not the way we portrayed them, is that these are a bunch of stupid weak hands who are selling. Nope. There are a lot of people who have a wildly different cost basis than what the current chart shows, because they're 300, 400, 500, 600, 700, 800 day old stakes. And those people are wildly in profit. So if you're doing Hex the right way, it means that you're accumulating at these times where other people who have wild profit margins are selling the price down lower than what we would probably see if we didn't have staking. So if we didn't have staking, we wouldn't have had that 54-cent high. And we also wouldn't have had this, what scraped down around 2-cent low. The point is, if you're doing things right, then you're staked through these points, waiting on a nice high, and then waiting in 2 years, again, that 300, 400, 500, 600, 700 days later, when you're going to be in massive profit. But you also got this beautiful entry right now that you wouldn't have gotten otherwise, right? So as all these cats that are early OGs, 300 or 400 day stakes are selling down this price low, you're getting a chance to enter at 2, 3, 4, 5, 6 cents. That wouldn't have existed without that staking mechanic either. So you can easily look at the chart and say, look how wrecked it is. Hex isn't outperforming. It is if you're buying, which is what you should be doing. If you're actually buying at this exaggerated dip, then you have a lower cost basis for 3, 4, 5, 600 days out. As you collect all your yield, you had a better entry, and now you can go sell. And that's how Hex actually outperforms in the bear market. So the chart is actually giving you entries. Don't look at it and say, oh my God, I'm underwater. What, this is the worst thing that ever happened. Go thank all those clowns who just made bad decisions, who sold the price down to an unrealistic level that wouldn't have happened if they didn't have gains. They would have already sold way beforehand, and we'd have a more stable chart, right? Dips are in the game. They're a feature, not a bug. Let these guys take their 200-300x that they were in early, cash out, accumulate off of that, and then you stake, and then you're going to hit those same gains in, again, when your stakes end.
I think for someone like me, right, like I've only been here about a year and some change, and you know, it's like I spent a lot of time now in the community and kind of seeing who some of the key players are and who's been here for some of these different things. Like I saw the pump for PulseX, I saw the pump for Pulse for PLS during the sacrifices, and just in terms of like my own game theory, I was like, okay, well those were about, you know, dollar value for SAC versus now it's, you know, the game theory is more about, you know, accumulating hex. So I think it's, yeah, trying to zoom.
Did he get rugged, guys, or is that me?
Yeah, I don't hear him.
Rugged.
Yeah, well, Rollins, what you just said was a phenomenal summary, man. Very powerful summary. It's like, I wish that was recorded and written down for people to read about 10 times. Thank you.
Yeah, it's something I've been playing with to try to add some clarity to that statement, is because I've seen people like shuck that statement, and I get it, like, but as I always say, like, we we want to under promise, over deliver. And I feel like that's a statement that we sort of tell new users, but it's almost sort of like our market cap thing, right? Where we're like, oh, market cap sucks, don't use it. But then we just stop and we never say like, okay, what do I use then, right? Like we don't give them the alternative. So if we explain that, hey, Hex does outperform in a bear market, here's how you use it, right? Then people will be a lot more inclined to understand, believe, purchase, and then they're going to have positive results. So maybe that's something I'll do, like a short clip on, like a 2-minute deal. Try to make it a little, again, make sure that it's really digestible.
Yeah, take what you just shared and like get it on a blog post on How to Pulse or something, dude. Like that was phenomenal.
What I have told you. My man.
Room Hex won't stop teasing me, man. He wants me to do more.
Do it. Told you.
Well, the issue is that, you know, we have some community members that have a lot of years been in Hex since day one, and have just a better understanding of the mechanisms and the proper way to look at how the machine works. That was just a perfect case in point. But it's no good if only 110 people that were in a chat get to hear it in a soundbite, because that's like super alpha, right, Walrus? So like if we could get that stuff down, it just educates in such a short time frame, like how to properly see what's going on. And those type of things are the things that just, you know, the light bulb goes off in people's minds after they hear something like that.
Yeah, and another quick one on that I don't think, another thing that we don't explain well enough is like slippage, right? So sometimes it's easy for us to say, look at the chart, right? And we'll look at last night and we'll look at so for people to know, I'll give a quick summary. Part of the reason that we saw that massive, nice wick in Hex is a liquidity provider removed their liquidity, which was a pretty good chunk of Hex, and then immediately hit the sell button. So what we see is that Hex was roughly, let's just call it 4.5, 5 cents. I don't remember exactly. And then all we see is that for a brief second, it was like 1.8 cents, 2.2, somewhere wherever that wick went. And as thinkers, all we see is price A and then price B, right? Cause and effect. What we don't see is what that guy just did for everyone in the space. So if that had been my bag, what I would have done to everyone, which again, this is one of those things I always try to say, we're trying to educate on what to do best, but at some point this is a solo sport. So everybody should be very thankful that that guy wrecked your chart and that wasn't my bag, because I would have taken a lot more value from you guys. So let me run through these two things. So that guy removed liquidity, which makes that pool thin, which means it's now more sensitive to buys and sells, right? And then he committed a big sell. So when we see that price of like 4.5, 5 cents, and then it wicks down, he didn't essentially sell all of his bag at 4.5 or 5 cents. And the new price is now 1.8, 2.2. What happened is he hit a market order, and a market order means that he is going to sell every single Hex in that order as soon as they find a buyer. So he sold some at 4.5, and then those people at that liquidity level ran out. And then he sold some at 4.4, and then 4.3, and then 4.2, and then 3.8, and then 3.6, and then 3.4, and then 3.2, and then 2.8, and then 2.6, and then 2.2, and then all the way down to the bottom. So he didn't move the price. He created that price all the way down. So what happened for that guy is that had he actually sold that constructively, he would have literally made about another $3 million. So that's what I would have done. If I was trying to remove that position, I would have taken that value, provided liquidity in a different way on V3, and I would have basically sort of DCA'd out in an intelligent way. And I would have taken $2 or $3 million worth of economic energy away from all the hexagons, and it would have been in my pocket, right? Now for me, that would have been very beneficial. And for when you sell, that is what you should do. But this guy did something better for all of us, even though the chart looks dirty for a second. Because what happens is when you accumulated and when all your onboards come in and purchase and bought that wick back up, rather than us paying that guy to leave, everyone else got a better deal. onboards bought at 1.8 and at 2.2 and at 2.3 and at 2.4 and back all the way up that scale. And all those people got a better entry. And that's what I'm trying to get at about this thing overperforming. It's overperforming when someone does that because we made a seller pay the tax to leave the system, and onboards and accumulators are the ones who benefited from that. So it's one of those things that don't put your heart on the chart. Put your heart on your own cost basis and what you're looking at. Because even though that guy wrecked your chart, it only hurts if you're selling right now. All that did was benefit people who are accumulating and onboards right there. So that was a great thing for the Hex ecosystem, even though that guy's kind of silly.
Hey, Walrus, I got a question for you. So if he would have sold that correctly, maybe did some limit orders or, took his time selling that, with the amount that he did sell, how long would it have taken him at current prices or volume across the exchanges for him to get rid of that? That's what I'm kind of curious about, because I can't sit here right this second and say, oh, that was the worst move ever, right? I mean, obviously, if it dipped that low, I mean, it's pretty obvious. But my question is volume. If he would have done it smart, how many days would it have taken him to get rid of his bag correctly?
Yeah, that's actually a great question. So it's shades of gray, right? So he removed that liquidity, and so he didn't actually give a chance for that liquidity pool to adjust at all. But within reason, he could have easily probably 2.5x his return in about 48 hours. So that guy paid a roughly, again, I'd have to sit down and really do some math and play with it. And it's a bit of a moving target, but in general, for everyone listening to Benjamin's question, like what was the alternative? Probably in roughly 48 hours, an intelligent seller probably could have extracted about at least another $1.5 million. And if you sort of extend your time from out to probably a week, probably between $3 and $4 more million.
So
When did this happen? When did this happen?
So it's not, we can't say that it was the dumbest thing yet, right? Because it hasn't even been 24 hours.
No, I absolutely can, because even right now, the price already has moved against his position at least 100%. Like you literally saw that thing wick down to like less than 2, and within 3 hours, it was back at 4. So like even just piecemealing that down, he would have already been orders of magnitude higher.
When did this happen? I'm confused.
Yesterday.
Because I've been watching yesterday trying to buy low. I never saw that go down, even on the charts. It never said it went down that low. You know where they say the high and the low and the volume?
Yeah, it was last night. You can look at that wick on the chart.
Unfortunately, I was asleep. Very
That was
sad.
around midnight.
Walrus, don't you think he was dumping the price and he had a limit order to buy it back all with even bigger bags at the bottom of where he dumped?
Yeah, I'm actually glad you asked that. So I'm gonna kind of like quell a rant. So don't take this personally at you. This is more of like addressing that as a wholeness. I think a lot of times when we see certain activities, we sort of have these galaxy brains about like, man, why did that happen? And a good rule of thumb is to never attribute to malice what you can attribute to stupidity. So when we see a very knee-jerk reaction, we're always trying to like galaxy brain and be like, man, that's a whale. What was he thinking? Was he doing this? Was he trying to trigger a buy? It is possible in some world that there's some big strategy. I can tell you guys that on chain, that guy just looks like an idiot. And I don't mean this in like an opinionated thing of like I would have just done X and he did Y. I mean like with very, very small differences and a slightly, and I mean when I say slightly longer time frame, I mean hours, he would be $1 million+ ahead. So that's why I think it's Pulse don't Hex. That's why I describe that slippage is even if the idea is like, hey, I want to move the price down to try to accumulate down low. The way he did it moved it so fast that he's the one who ate all that slippage and he never even got a buying opportunity at the bottom. So that guy moved the price down, and the people who took advantage of that were all the people on the other side of it, not him. He wasn't able to like move it down, trigger an event, reaccumulate, and then ride it back up.
Don't you think?
I didn't even have time to see it because when I woke up, it was already at 6.
Yeah, it was pretty fast, but maybe he used a different wallet to buy back in with limit orders. That's not seen on the chain from his original wallet that he dumped with.
Sure, but you can look at who hit those and see that a lot of those were previously placed. And even if he lowered it down and bought when the price moves back up that fast, he wasn't able to fill his bag back up, right? So like, let's say that he moved the price down. Let's say it got down to like 2 cents, just as a nice round number, and he had a big limit order at 2. There's not a lot of liquidity there. So even when he starts buying back at 2, it starts to slip back up. So for example, let's just say that he made like, let's use dollar terms, right? He used a $1.5 million sell. Or I guess what happened is what really happened is he sold roughly $3 million worth of HEX, and the slip ate up so much that he only actually pocketed 1.5. And if he had tried to essentially move that energy back in and write it back up, he would have ate slippage again, and he would have ended up at, I don't know, roughly $800,000 worth of HEX, similar to the original price. So that's why I was trying to just explain that slippage mechanic, because sometimes people think that they just push it down to reaccumulate and then move up. And that's not how that works.
Yeah, and there's no way that even if he did have some limit orders set at the bottom, that he could get over the loss of the slippage he paid selling. He might have picked up, some cheaper HEX, but he lost so much money selling it the way he did that there's no way he could have overcome those losses by buying cheaper. It's impossible.
There wouldn't have been enough time for people to put buy orders or sell orders.
How could it be that such a guy that makes such a mistake? That's just such a gigantic mistake. It's almost
There's a lot of
reckless.
people that got into HEX that are very lucky that don't know a lot about crypto.
Finally, somebody says it.
I've been saying it for a while.
Benjamin was saying that for weeks, no? Benjamin was saying that for weeks.
At what percentage though? Like, and how long?
A lot.
How long?
It's the same in every single cryptocurrency, guys. I mean, a lot of people that knew absolutely diddly shit about crypto got into SHIB at the bottom, right? And put in $1,000 and became multimillionaires. Didn't know damn thing about an AMM. It happens, guys. People just get lucky, And so when they've got the gains, they don't necessarily know how to sell, like Walrus is saying.
And this isn't like an attack of like the sort of Pulse community being like, haha, you OGs are stupid. This is everywhere, right? So for every VC that goes and says like, well, I was in Facebook and I did this and that, it's like, yeah, but you missed on Amazon, right? Like you missed on Google, you missed on this, you missed on this, you missed on this. So like, don't talk to me about like your hit, right? Show me in totality what you have going on. So it's always a balancing act, right? Like this isn't us like massacring OGs. Like this is just the social side of how all these things look.
Hey, I'll add one thing. Being there, like literally being there in the moment, the people who knew about crypto, the end people in crypto, shit on HEX. Like they didn't want to be in HEX because they knew everything. Now there were people who knew about crypto and then saw through that and invested in HEX. But there was a huge, 90% maybe is a good number of people who were like new to crypto, saw HEX as an opportunity, pulled the trigger on it, and were indoctrinated by like other like cryptos or whatever it is what you want to say, right? A lot of people. It's not all luck, but people who saw through to what the opportunity was and then invested a couple $1,000 made out really, really well. Like this gentleman or lady who sold 3 million, probably put in maybe a couple $1,000. Yeah, totally doable.
And to Gamma's point, that's another one too, is this is something that I've experienced over the last 2 years as well. So again, to Gamma's point, there's a lot of factors that go in. People put in a few grand, they get these outrageous returns, right? So making good decisions with a few $1,000s is you couldn't even get a bus ticket to what it's like to be financially literate enough to maintain portfolios of 7 and 8 figures. So even some of these things where we're being critical, even I want to dial it back a little bit and say like, hey, it's very different between being someone who works a, you know, median to above average job and you're managing, say, $30,000 to $60,000 a year salary. Like, it's like, hey, you know, don't have too much credit card debt. Make sure that you don't have outside student loans. Maybe don't have a $1,400 truck payment. Like, sort of making good financial decisions in that range is wildly different than what does the slippage look like on a $140 million hex order? Can I do a limit order? Can I use an asymmetrical liquidity pool to try to exit this strategy over a week? Like, how many people in this room can actually do that, right? So again, we're talking in wholeness and trying to call spades spades. Like, this isn't a, you know, Gamma's a perfect example. He's someone who was in extremely early. He runs nodes. He's really knowledgeable, very savvy guy all the way around. So he's one of those guys that can say those certain things. So there's a lot of variables and there's a lot of nuance.
I have a question. You bring up a good point. There's a lot of individuals who have been very fortunate on their smart decisions, whether they do it or not. And there's been made millionaires out of a few $1,000s worth of chance, right? And that's great. And we know that the scenario we're talking about, it was more than likely somebody who was uninformed, unknowingly did something that they lost, you know, $1 million within like 12 hours, within 24 hours, right? Okay. Is there services online that one could pay, obviously a few $100s for advice and save $1 million on something like that? I mean, do people give financial advice like that? Well, we're always saying, you know, we don't give financial advice. No financial advice, right? I mean, what kind of companies would one consult other than learning yourself? Because I know there's individuals on here that could use such a service, but there might be people out there that, you know, make these bad things. Are there places that do that?
So what I would say, I'll speak to this. I mean, like if you go to New York, there's actual companies that say you had $3 million you wanted to cash out. You could literally like probably pay $30,000 or whatever the number is, and they will do it all for you. They will exit for you over like a couple weeks. You'll get X amount of dollars. You're gonna have very little slippage, but you're gonna have to pay a fee. Now, this individual probably isn't savvy enough to like be at the point where he's contacting those services and doing that. But if you have like $10 million, $100 million, you want to exit. Yeah, there are companies that you can hire to help you exit large liquidities. They're usually OTC market companies. Now, do we know of those? Well, I haven't contacted any of them because I haven't made $1 billion yet. But if I were to have $100 million I wanted to sell, I could absolutely find a company to help me do that. And I wouldn't be market selling. You know what I mean?
Well,
So
you know if that guy actually used 1 inch, or did you just market sell? Did he use an aggregator?
I need to go look again. I find it almost, he may have used an aggregator, but he still wasn't doing it properly. Obviously because he ate that amount of slippage. But crypto, like, I'm glad you asked. That's actually, that's really what I was trying to get at is, you know, you've been in here for a length of time. I think enough people have heard you talk to know that, you know, you're not an idiot, right? You know, are you a financial planner who hangs out with guys at Goldman Sachs all day? No, but you're not an idiot. And
right.
And I mean this respectfully, that you don't even know who to call, right? So while I'm trying to put into perspective that, you know, this guy made a ridiculous decision and lost a couple $1 million, your first question was like, well, who do I even call to make a better decision, right? And that's very good self-awareness. So again, like, you know that I've like you, we've spoken a million times. That's why I could say like, that's what I mean by when I say stupid. I'm trying to jar you guys to not do the same. I'm not really calling him stupid. If he had asked me, I would have just said, well, you didn't really know better. It's more of an ignorance thing, right? So your question is the right question. And that's why I think yesterday or day before I went on that rant of like, guys, well before you think you need it, you need financial planning. Like how you handle high 6-figure and 7-figure portfolios is just, it's not even remotely close to the same, right? You know, a lot of us know what we're doing because we don't overcharge our credit cards. And that's what I was trying to get at is, you know, it's very different. You even hear Gamma. Everyone knows Gamma's a brainiac, right? And he's saying, oh, I haven't even contacted those guys before. Now, again, Gamma has a very long time horizon. There's specific reasons why he hasn't. So that's really what we're trying to discuss in wholeness, right? That it's very, very hard to manage those things. Most people probably don't even know how to calculate that slippage. They don't know how to look at liquidity pools. They haven't needed to yet, right? But if you are someone who put a few grand in and you catch a couple hundred X's, you do need to. So if for all of us that are looking at not just making wealth, but being able to utilize that wealth and live the sort of the lifestyle that money is associated with, take some of those steps now. Assume you have already made your $1 billion or wherever your money is, and realize that how you exit a system with $2.4 million is radically different than how you leave with 24 grand, and educate yourself. But for me, it's kind of a win-win on whichever you guys do, because, well, use Drone for an example. When Drone catches his big money, if he exits the system smart and intelligently, well, then I'm really, really glad he's wealthy. And if you leave like this guy did, appreciate you guys giving my onboards a nice entry point, and I'll buy the dip.
Yeah, and the other thing too is that, to me, this looked like a full-blown fear sell. The way that it was done, not only did it look incompetent, but it looked like it was just super fearful. But that same position, if he would have sold it at 50 cents, I think it was like near 60, $70 million versus what he got.
Less than 2 million.
What's that?
He got less than 2 million.
Yeah, and at the top,
just grow.
It's astronomical that he sold all of it at this price and pushed it down against himself the whole damn way down. It just, it gave you guys an amazing entry point, like Walrus is saying, just astronomical.
What about the guy, what was it, like a week ago, that, I don't know, we were at 10 cents and then he pushed it down. You know, people were calling him an idiot too, right? And look where we're at today. In hindsight, the guy last week or 10 days ago or whatever it was, I think it was a lot less than that, you know, made some mistakes, right? But overall, look where we're at today. I'd say the guy did fine. And who knows with this guy today? I mean, obviously, that was that's a horrible one that he did today. But let's say in the next few days, we're down to, you know, I don't know, let's just say a penny. Does he look so stupid then?
Yes.
So I think we just need to,
yes.
I think we should give it just a little bit of time, just a teeny bit of time.
Well, that's what
Benjamin.
that's what the belief that it's not going to rebound. Like if you have a longer time horizon, then it's a terrible, terrible call or sell at these prices. But if you're fearful and you're like, you just have the short time horizon and you just like can't stand it, then you sell at these and you go, okay, well now it went down 2 more cents, so I must not feel better about selling at these prices because I sold at 8 and now it's at 4. I feel better. Probably not going to feel so smart when it goes back to 20. How long does it take to get back to 20? I don't fucking know.
So there's I'm one, absolutely, Benjamin. Like, it's always good to sort of like challenge and work through these things in wholeness. And that's where I was getting at, the cat you're talking about, that was like an 800-day-old stake. So one, as Gamma said, you know, someone earlier, that guy put in a few $1,000s and pulled out some crazy amount of money. So yes, it made sense in that idea as far as where the chart was for himself, because that guy has ridiculous unrealized gains. And also those gains are also probably something that he couldn't touch in any way, right? So if, you know, like I made this example many times, like the first time you make $1 million in crypto, yeah, you can spend it pretty quickly, right? Like everyone's got cool stuff. The second and third, you have much less of a need to pull that out. So for a lot of these cats that have 800-day stakes, they're not just pulling out and taking profit. They're taking life-changing, world-shaping, just lottery-winning type gains, right? And it's extremely different. The reason we're particularly critical about this guy is just because the actual way he executed the sell was so silly that he literally could have made himself hundreds of thousands and millions of dollars just doing it in an intelligent way. So his idea to sell now in whole is, again, maybe it does go down, he does get a better entry, but specifically how he executed it was clearly atrocious.
So, Walrus, when are you starting your companies? When we want to end our stakes and we can come to you?
Man, that's so one, very much appreciate that. But like, that's the same kind of stuff I champion. Like when I speak about like designing on the dev side is I sound smart because I'm speaking very much in my lane in a narrow path where I spend a lot of time. If you go sit next to a really good financial planner and then you listen to me, I'll sound stupid. When I talk about the HEX and Pulsechain and PulseX code, I sound smart. But if you go talk to Ag or any of the actual devs, I sound stupid, right? So it's always about those, kind of understanding, right? So I'm a translator. I try to orient people in good directions. There's just a wealth of hyper talented people who specialize in things, and they're who you need to go hand over your money and explain how to exit correctly. And thank you.
Okay. Your choices in bourbon are great though.
There you go. That you could take my opinion on.
I mean,
Could I add
it's pretty
something to
easy
this?
if you just never sell and you just restake, then you never have to worry about that problem, and it's like just goes away. You just restake 15 years and you're good to go, right?
Yeah, you got to realize gains at some point.
I know, I'm kidding. I know.
Yeah,
I've sold.
not in a bear
I'm
market
not.
though, right?
It's perfectly okay to sell along the way.
I want to say something though. With all that said, with a guy making a bad decision like that off his stake ending and everything like that, I'm looking at Hex Vision, and one of the biggest volumes of end stakes is tomorrow. So, in my mind, we can probably expect a little more of the same short term before launch. Just saying.
Yep, I agree.
Someone
Big candle
who's
on
muted.
instincts.
Someone who's muted just wanted me to mention something for him real fast. This person was basically just saying like that person could have also had like urgent needs for the money, medical bill, that kind of thing going on, or it could have been a hack. Looking at the way it moved through, I really doubt it's a hack based on the timing. But absolutely, that person could have had urgent needs and things like that, and that's why again we're trying to look at it in wholeness, right? People do need to sell in a bear market. If you look at what that guy's cost basis is, he made a lot of money. If we took out how it went on and just said, hey, I listened to this guy in a top hat on YouTube, I did what he told me, and then 2 years later, I turned $5,000 into $1.5 million. We're the dummies, right? Not him. So we're always trying to look at these things in wholeness and just say like, hey, good on you for getting into a project early, for delaying gratification, for providing liquidity and doing all these things, right? Those were all the right things. What you did wrong was in executing this as a market order and XYZ. And then we look at it from our side. Well, one, thanks, man. Really glad you paid the taxes to allow all of us to accumulate and move in an intelligent way. So again, all this is nuance and a balancing act, right?
Yep.
And,
Like I was saying. Go ahead, dude.
Yeah, I was just going to say that, regardless of, whether they had medical bills or whatever, was hacked or whatever, the way that it was sold off is an example of how not to sell something off. And that's really just what Walrus is saying, right? Like, even if somebody needed medical bills, he doesn't need to sell off like that, So it's just an example for everybody to learn from. That's it.
I'm just upset Walrus isn't going to take my phone call.
Good sir, I will always take your phone call.
Oh, I got Wallace on speed dial.
Oh, well. Put it this way. I hope to one day be so rich that I need to find the services to help me get out. That's for sure.
100%. And that, again, I won't stand on sandbox. I said a lot of it, I think, yesterday before. That time is way earlier than people think. There's like it just goes on and on and on. You can set up an LLC in places like Montana that are very inexpensive, and you can actually obfuscate a lot of the taxes that are on when you purchase new vehicles. And a LLC that takes you a little bit of time and a couple $100 can save you. If you're going to go buy a brand new truck, you can probably save $6-7 grand there. Like there's just the more and again, I say the same thing too. If you look at what rich families and affluent families did 30, 40 years ago, they were like, go be a doctor, go be a lawyer, go be these high-end professionals. Now, if you go look at what those families do, they go get their kids in the financial sector. Like, money is the big industry now. And so understanding these things and how to plan and utilize just so many tools, from LLCs to trust to where your LLC is at. There's, or very directly, like in the crypto sense of using a limit order or providing liquidity asymmetrically, like, a lot of these financial planners or tax attorneys and all these sort of professionals, a lot of the time they'll give you a free consultation or, a first or second meeting that's extremely low price. Man, go punch above your weight class a little bit, get some direction, like fake it till you make it a little bit. See what these guys tell you, right? Like, go to the golf course you're into it, figure out why there's a 45-year-old guy there who drove up in a $200,000 car. How come that guy's playing golf on a weekday? Like, go talk to that guy. Figure out what that guy's doing. He's doing something right. Right?
I try not to go into details on why I don't have a job at 45.
Yeah, me too.
I mean, although this is turning into a job because I just got modded in PulseX, so now I have a full-time job that's voluntary, but it's okay.
Yeah, that's what happened to me. I ended up being too indebted to the community that now I have a full-time job doing things for everyone else, which I love.
Me too, man.
Yeah, I'm already here, so it's might as well get some use out of me hanging out on Telegram all day.
Great conversation. All right, so the deck is cleared, and we have some great people here in the chat. If anybody has any questions about the market or Hex or Pulse or anything, let's have some people ask some questions. If not, we'll continue with the conversation.
Not so much a question, just a statement. Hey, believe me, I appreciate all you all do. It's just like a hooked on phonics lesson. Y'all just keep it dumbing down. Appreciate you, all of you.
Cheers, man.
Thank you.
Appreciate it.
Next level,
Yeah,
did you have a?
Yeah, I have a
something?
question. Yeah, thank you for unmuting me. I'm trying to understand the thing with the liquidity. I don't understand the concept of low liquidity makes a buy make the price go up if you have low liquidity on the pool. This whole concept, could you just explain it to me in details? Thank you.
Sure. So if you look at like Uniswap V2 pools or the liquidity pools we're talking about, what the price that we pay is in every increment that can be moved in, right? So let's say that there's 1 million hex and or I guess what would it be? 10 million hex and 10 million USDC, right? Okay, that's the two pools. So since there's 10 hex for every USDC is $1, that gives us a price of 10 cents, right? So that ratio is the price. So 10 of something worth $1 makes your thing worth a dime, right? And then where the thickness and thinness applies is in how much is pooled on each side. And the reason that matters is, so if there's 10 million hex and 1 million USDC, let's say I go in and buy 5,000 hex, right? So what I would have to do is move in 500 USDC on one side, and I would pull out 5,000 hex. So that ratio is going to move a little bit now, right? Now it's 9,995,000 hex to whatever it was, 1,500 USDC. So that ratio is still almost entirely the same because that particular buy didn't really move the ratio much, right? So because that ratio, because there's a lot of liquidity relative to what I bought, the ratio didn't move, right? Which means there was very little slippage. There's the price is a little different now, but not by much, right? So when we talk about, that's what we mean by thick and thinness. It's however much liquidity is there means that ratio, which is the price, is harder to move from a buy or a sell. So now let's say I want to buy $1 million worth, right? Which means I add 1 million USDC to one side, and that would be 10 million hex, right? But it doesn't happen in one event. What happens essentially is I move in 1 USDC and I get some hex, and I move in another USDC and I get some hex. But because I'm trying to buy so much, I don't get to pay one price. I pay one price per unit. And because I added so much USDC, that unit price, that ratio keeps moving as my buys get. So even though my first couple buys were at that 10 cents, I'm going to keep adding USDC and that ratio keeps moving. And now the price is going to be 11 cents. And it's going to keep moving, and now the price is 12 cents. It's still my buy, right? I'm still adding USDC to that pool, and it keeps moving against me. And that movement is called slippage. It's the difference of where I started versus where I ended on a buy. And so the more liquidity that's there, the harder the ratio or the prices to move, and the more sensitive or the less sensitive it is to those buys. So when the liquidity's thin and I want to make a really large order, I move that ratio against myself. So even though we look at it and say, hey, I moved in X amount of USDC and I bought X amount of hex, it'll give you sort of an average price, but you actually paid a little bit different price for every single unit. But if there's a lot of liquidity, that difference is so small you probably don't notice. And if there's not a lot of liquidity, you'll see what we saw in the chart last night was where that price moved just a huge amount in a single movement. And that person ended up paying or being able to extract very little actual value relative to what they put in.
Could you give us a dumbed down version of that? I've heard people kind of talk about it, you know, how Bitcoin's everywhere, right? So that makes it, you know, anyways, could you give us the dumbed down version of that, please?
Sure. So let's take that same example where hex is 10 cents, right? Let's say that there's a single, or let's do it in order 10. Let's say that there's 100 hex in 10 USDC, right? If I put in a single USDC and pull out 10 hex, think about what I just moved that price. That ratio was 10 to 1, right? Which means it's 10 cents. But I just moved in one more USDC, took out approximately 10 hex. Now there's 90 hex to 11 USDC. Someone want to do that math real quick? Tell me what that price is. I don't have a calculator in front of me. I got to be needy.
Walrus, I have a calculator. What did you need to be calculated? I just chimed it back in.
8.18 cents.
Okay.
Okay, there you go. So 8.18 cents, right? So that means in that example there, by moving a single dollar in, because that liquidity was so thin, right? There was only 100 hex, thanks J Money, and 10 USDC. That price is the same, right? It's the same ratio as when it was 10 million hex and 1 million USDC. But if I just bought $1 worth of hex in that pool, the ratio that effect on the ratio would have been so small. But in the example of where there's 100 hex and 10 USDC, when I essentially sold, I moved that hex. Again. I should think it's the opposite. I should think it's like 12 cents. Because there's so little there, 1 unit of USDC makes a huge difference on the price.
Sorry, 12.2 cents. You're right.
Right. So in that example, again, if there were 100 hex and 10 USDC, buying 1 USDC worth of hex, right, would have got me 10 hex. I just moved the price 20% with a single dollar. But if that same ratio, that same price was there, but there was 10 million hex and 1 million USDC, the price literally would have moved, I don't know, a single digit, like 6 digits in, right? It wouldn't have moved at all. And that's an extreme example.
So that's why coins who are new at the market pump quickly at the initial stage because of low liquidity. Am I right?
Absolutely correct.
So what we are seeing now with low liquidity on the pool side, it just basically preparing for the price to go up.
That's why
there's a lot of
that's
sort
why
of.
I don't.
Go ahead.
Why people want. That's why I don't understand why people want hex everywhere and on all these exchanges. Like that just is not going to be good. There'll be more manipulation. You'll have more players, more liquidity. So be careful what you wish for, people.
I mean, there becomes a time in the future when hex being on every exchange makes sense, but for me, that's like 1 million plus holders, like a huge number more than we have now, and then it starts making sense.
Hey, Walrus, something, or Amanda, whomever, something I'm curious about. Top Cat had made a comment last night when John was in here discussing market cap and that kind of stuff. And he had mentioned something along the lines of, when you have a coin that's got just an astronomical, huge market cap, that really doesn't mean anything. However, when you've got a coin which has very low, very small market cap, that means a lot, and that has a lot of value there. And he said he was just going to leave it at that. I kind of get the implication, but I was just wondering if somebody could expand upon that a little bit, expound upon that.
Yeah, if you were asking me, man, I apologize. I thought Walrus was in here. What was the question?
The question was that someone had made a comment last night during our discussion of market cap with John about how having a coin that has an astronomical market cap doesn't mean anything for the reasons that we know, because anybody could make 1 million coins and put $1 in and they got 1 million market cap, whatever. However, he made a comment about how when you have a coin that has a very low market cap, that means a whole lot and that there's a lot of value there. And I want to hear a little bit of thoughts on that.
Well, people, when you're looking to enter a token, if you've got a very low market cap, that just represents an amazing entry point for anyone. So on that side of things, you're just looking at, do you want to buy in to something at a high market cap or a low market cap? I mean, it's basically the same thing as, do you want to buy in when the token's already at a high price or at a very low price? It's basically the same exact thing. That's all he's saying.
Well, couldn't that be flipped over? Let's say you've got only a market cap of 100 coins and they're $1 billion each, right? So somewhere there's a sweet spot.
Yeah, I mean, market cap to me, if I can get on a low market cap, it's just the formula of the price and the circulating supply, right? So if you got a very low market cap, it just represents an opportunity to get in very low on a project. In terms of high, when you invert it, high market cap, there is that vanity metric piece to it, but it does matter to a lot of investors if they're looking at just the market cap, but that can be a bad thing too, because like Hex can have a high market cap, but it doesn't necessarily represent that it can't do another 10,000, 20,000, 30,000 X. So you shouldn't look at the market cap and say that because the market cap is X, that means that the X's have run out. It really is contingent on a lot of things in terms of the supply, the market, the specific market of that token, a lot of different aspects. Like for example, the market cap of Bitcoin, right? It's way up there. Does that mean that Bitcoin can't do any more X's? No, but because of the token supply and because of the liquidity, it means that you're going to have a hard time getting a lot more X's out of that specific token, as opposed to looking at whatever the market cap of Hex is, and looking at it, you would think that, oh, it's the same thing, but the same thing doesn't apply. So it really matters. You have to look at the nuances and the specifics of what you're looking at in terms of a coin or a token on the upside.
Yeah, I mean, I've been thinking about this lately, and I've been kind of thinking about a framework in the classification. So here's what I'm thinking. I basically just came up with this today, and I have to flesh it out. But you basically have like 4 classes of crypto assets. Class 0, those are the scams, rug pulls, shit that goes to zero, is already gone to zero. Class 1, that's like a new project, just came out. You don't know if it's going to succeed or fail. It's super cheap, but it's new. You can get in at a low price, ICOs, like that kind of thing, right? That's what Hex was when it launched. It was like a class 1 project, right? It worked. Everyone in, high upside, blah, 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 whatever. And then there's a class 2 crypto, and that's more kind of like where Hex is now. It's been alive for 2 years. It's working. Those would also be, I would imagine, so like the Uniswap token and some of these other projects that have been around. It's clearly not a scam. They're not everywhere. It's not like in everybody's portfolio. Well, but like that's kind of like, like that kind of asset. And then you have a class 3 asset. That's like the Ethereum, Bitcoin, and they're like everywhere. Now, does market cap play a factor in that? Kind of, and not really, because the factors that make up market cap factor in to determining in what classification your asset is. So you have the price, the volume on exchanges, what's the liquidity look like, how many owners of the project are there, is the thing like been working for a few years, like all that stuff. So the problem is if you're only looking at one metric, market cap, and you're not looking at all that other stuff, then it's completely meaningless. But if you add it in to like a few things that you look at, then you can classify it as like, oh, this is a class 1, like ICO, new project or whatever. The market cap is this, blah, 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 blah. You guys understand what I'm saying?
Yes.
And then I also thinking about this is like as an investor, right? When you're if you're a new investor, you're investing in class 1 assets that are the ICOs and the stuff that's just come out. You can put in $1,000. You can like day trade it, right? When you get up to like a class 2 where there's a lot more liquidity, now you're able to buy and sell hundreds of thousands of dollars with like minimal slippage, and you're good to go. And then you end up, once that kind of asset like Hex, hopefully for me anyway, if we can tie it into Hex, we can say when Hex first launched, it was a class 1 asset, new ICO, lower liquidity, price moved a lot fewer wallets. It's growing in volume, reputation, but it's been in existence for 2 years. Now it's like, say, a class 2 asset. It's not going anywhere. Awesome. Hopefully it moves up to a class 3 asset. Huge amounts of liquidity everywhere on every exchange. You're right. And as an investor, what you're looking at, even if you're not thinking about it, what you're looking at is like you want to get into a class 1, a new ICO that turns into a project that is on every exchange and everybody owns it. That means that you just made a shit ton of money along the way. But how long does that take?
So what about Pulsechain? Put it in those contents. contents. Where are we at with that? Where
It'd be
do you
a
think
there'd
we're
be a
starting
class
off at?
one because it's brand new, and then could it move into, say, a more established project within a year? Possibly. You know what I mean? But what's the liquidity? Well, on Pulsechain, it's going to be massive. But how about off of Pulsechain? What's the liquidity going to look like on exchanges? Where is it going to be on exchanges? How much liquidity is there on Uniswap? How many active users of PulseX and Pulsechain are there? Well, we don't even know that yet. But I'm hoping anyway that it moves along that spectrum of project very fast, say much faster than Ethereum did. Right. And if I can put it into kind of a framework, then I can kind of think about it in a way that makes sense.
Well, the longer that takes, right, would be better for price performance, correct?
Well, I mean, the longer it takes, the more people would buy in early, make a gain, and then sell, and then new buyers come in, pushing the price up even more. So incrementally, right? These are the market cycles are. So, I mean, kinda, because you don't want pump and dumps either, but you have mini pump and dumps in cycles. Because I was just thinking about this, and because somebody made a comment about trading earlier, and I was like, okay, so you could like basically day trade Hex, but you're not doing that with $1 million. I mean, your slippage will just kill you, and you'd have to be like perfect on your market entries to make any fucking money, like trading the volatility on Hex, like over time, like continually, especially on exchange on an exchange, because the liquidity is just not that thick. But now, if you could do it with, say, $1,000 really easy, you could do it with $10,000 pretty easily. But then as you move up in market size and your portfolio balance moves up, then you're doing less trading. And I kind of thought about this as kind of the new player coming in. They have $1,000. They're not going to, well, hopefully they're not going to buy Bitcoin and think they're going to become a millionaire next week. Well, but you can move down to riskier assets, say like a class 1 ICO. You find a really good one, and then you can put your $1,000 into it, and then in a year maybe you can 10x your money, right? And then maybe that asset blows up, or maybe it doesn't, and then you either make or lose money in class 1 assets, get rug pulled or whatever, and then eventually, hopefully, if you're good enough, then you have a portfolio balance that's, I don't know, $100 to $1 million, and now you're looking at not putting all your money into ICOs anymore that could fail, but now you're moving into class 2 assets in my framework that are like more established. You're still going to get gains, but they're less risky, and those are the common assets that everyone hears about. You know what I mean? And then as your portfolio size moves, you own those over several years, then maybe you're moving your portfolio balance up to, like, say, 10 million plus. If you have 10 million plus, are you throwing $1 million into like every random ICO that comes out? And no, you're probably not. Maybe you're putting them into solid class 2 assets that have been around for a while, or you're keeping them in class 3 assets like Bitcoin and Ethereum, that you get less of a multiple, but you have higher likelihood that they're not going to just disappear tomorrow. If that makes sense.
I like that, Gamma, because I think it improves upon my classification, which is like micro, mid-size, and then macros, large, and it's more granular.
Similar. I just named it different. I mean, I literally came up with this morning when I was driving around, because I think about stuff constantly, and I was thinking of like, how do you explain this process of moving from, say, $1,000 investment in crypto over, like, say, a 5-year time horizon, right? And it's like, well, you have to classify the assets, because everyone knows what these classifications are, because you have the clear rug pulls. That's in one. Those are the class 1s that came out, rugged everybody, and then left. I'm like, those were easy. Then you have the other assets that are like the new hyped, awesome fucking thing that just came out, and you're like, okay, I put some money into that, but then how many of those do you? And then what's your portfolio size if you're doing those huge risks? Like normally there's like limits. Like if most ICOs, if you are doing them, and this is going to happen on Pulsechain too, so it's Pulsechain relevant, is like they have like a $500 limit, or they have like $1,000 limit, or maybe they have like whatever limit, right? And so you're not throwing 10 million bucks into a lot of these projects. You're throwing like $1,000, $10,000 maybe. So they're like, it's very low, right? You get 1,000 in, and maybe you get like 10,000 out. Then you do a few of those. Now you have a portfolio balance, and now you're not doing those anymore because you have enough money that you don't need to risk it doing these ICOs that maybe rugs. And the more relevant example is if you have $1 million, do you really want to like be managing like a bunch of $500 investments? Because that would be just insane. And then you have to move up the scale to like projects that are like less risky. You can put more money in because there's more liquidity. There's more places to buy and sell it. They have more wallets. The communities are much larger, so it's safer. Well, you believe it's safer. Like Luna was a clear class 2 asset in my framework, and then it became a fucking zero in like a day, which is like the craziest fucking thing, right? So it's not like it's impossible, but that thing was on every exchange, and it was doing really well. Everyone liked it, and then it went from a fucking solid class 3, like good solid project. You put your fucking $2 million in, and then it went to a zero within like 3 days, which is just fucking bad luck for all those investors, I guess.
Well, I would add a certain caveat to those layer 2 projects, or layer 2, no, stage 2 projects, right? Because their tokenomics matter a lot. And that was the problem with Luna. It was viewed as a category 2, but in reality, it wasn't, if you really understood its tokenomics.
Yeah. Oh, there was a video like 2 months ago that laid out like everything that happened like last week. I watched it and I was like, oh my God, this guy actually knew exactly what was going to happen 3 months in advance.
It would be a matter of time based on the tokenomics.
True. So that's what it is. So that would be a project that was because of a lot of the external metrics. You think that it's a safer investment, but the tokenomics and the way it's designed make it a very, 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 very risky, just gonna implode like any moment kind of a project, which is similar to like what everybody who doesn't understand Hex thinks that Hex is gonna do, which doesn't make any sense because Hex's tokenomics make it that, yeah, no. Can price go down 90%? Sure can, but is it gonna fail? Impossible.
So what is it that make a coin have a high liquidity?
People providing liquidity for it.
And why do they do that? Why do they provide liquidity? So do I provide liquidity when I buy, or is it another
No.
type of way of?
If we are speaking about a decentralized exchange, you would provide liquidity if you want to make some yield out of your assets, right? Because you put those on the liquidity pool and you are earning a fee from everyone trading with the liquidity you provided, right? And hopefully when you take the liquidity out, you won't incur permanent loss. And so you will be net positive by accruing fees, right? This is on the decentralized exchange. On a centralized exchange, for instance, the liquidity is, well, other than the exchange's fake liquidity, it's other people's limit orders. You have sell limit orders and buy limit orders, and those are the liquidity. And even though, unfortunately, you don't get any reward for doing those limit orders on the exchange other than perhaps lower fees or no fees at all, it's also a form of liquidity, and it has benefits compared to just do market buy orders.
So how do they lose money? Those who provide liquidity on a centralized exchange. Is it by the price fluctuation?
On what exchange? Centralized or decentralized?
Decentralized.
Well, you would quote unquote lose money if the ratio at which you take the liquidity out is a lot different than the ratio where you put it at, right? So for example, you provide ratio in a pair of tokens and it's at 1 to 10 ratio between each other, but after a year when you take the liquidity out, it's 1 to 100, you would have probably made more money if you just hold the tokens without being in the liquidity pool, right?
So the ratio changes with the price, if I'm not mistaken.
The ratio is a ratio. The price is the dollar value. Let's say it's based on that ratio. So the ratio defines the price, if you want to, between the two, or the price difference between.
So how does the ratio change during time?
I don't know if you were here for Waller's explanation, but if you provide liquidity into tokens and people buy one of them, they are buying the one they want and giving you back the one they do not want, right? And that changes the ratio between the two tokens in the pool.
Okay. Thank you.
It needs to even value on both sides. So you probably have like a $10 on one side, $10 on the other, right? But when someone puts in, buys one side, he has to sell something, so there's going to be more of the other token and less of the other, but they both have the same value on each side. That's another way of saying it. But also another reason why people provide liquidity is it's healthy for the system. Like, why would people provide liquidity for Pulse? Without liquidity, it's not real. No one can buy or sell, right? So like the early adopters may want to provide liquidity so you can get people to onboard and buy. You might have impermanent loss on providing liquidity, but you need people who buy. You have a bigger bag than everyone else, so you want to make the project real. Without liquidity, the project is nothing. It's just a token.
But do we want a high liquidity on Pulse? I mean, we want the price to go up quickly. So why are we providing that much liquidity on Pulse?
Ethereum has high liquidity. They all have high liquidity. It just means that it gives people comfort. They know that they can buy and sell. It will still go up. Like if it just because of that, just on that reason that it's got good liquidity, it gives more of a reason for someone to invest or bigger investors to come in to buy.
Really can go the other way too, right? We just saw that. So they pulled the liquidity, went down to 3.5, 3.9, and then it came back up above 5. Somebody added more liquidity in it, like 5.4, and it stabilized. So maybe they got their bag and they're trying to protect that bag as well. So low liquidity can, speed up the downside just as much as it can speed the upside.
I personally would prefer a thicker liquidity for Hex. Then more people will just buy and stake. And then there was more people staking because they know that the price appreciation might not be there. And then you'll see they'll actually use what Hex was meant for, to stake and delayed gratification. But with low liquidity, and then it goes up and down, there's a lot of emotions. I know we want to see a lot of X's, but the people who bought up high are not liking it, right? But if we did have thick liquidity and people actually would use Hex, people would buy Hex and stake it and use it how it's meant to be used, rather than just waiting for the X's.
So, So when we are talking about a rug pull, is it when the admin or the owner of the token takes out all of the liquidity?
Yes and no. Whoever owns that liquidity can just remove it and there'll be no liquidity. And that could be a rug pull, a form of rug pull. Another rug pull is one of the whales just sells all his tokens and there's no more liquidity left. He sells it like he drops it 99%. That's another form of rug pull.
I mean, well, the whole whale selling scenario, I mean, that only works if there isn't if it's like newer. So you have like if a large whale sells everything down, then liquidity is still there, only it's in an asset that maybe people don't value. But if a whale sells down and the asset that people still care about it, like, I mean, say somebody sells 1 billion HEX, people sell that down. There's still buyers for HEX. Because HEX is a smart contract that works and everyone understands how it works, and it's like a buying opportunity. A lot of times, these newer projects that come out, like the founder or like the VCs or somebody, like they basically sell down the project before they can even launch a product that even works. Now that would be a rug pull in my mind. That's usually what happens, right? There's a lot of hype. There's like they exit with as much money as they can get before a thing even exists that could possibly have any value. And they rode up the hype of a, like basically the backs of the retail investors got all hyped up. They bought this token, they pumped it up, I don't know, 1000x or whatever. And then all the early people, like the founder, the people who backed it, have a shit ton of the tokens, and then they just sell everything down. And although there's still technically liquidity, the price is so low, and they don't even have a product to back up the the value proposition of the asset. So why would anybody like put money into it? That's usually what I think by rug pull in that sense.
Well, not only that, but sometimes it's mostly on tokens with promises, right? We are going to do this, and then they have a partnership with that, and the token launches, but with only the token part, right? That you can trade or sell or do whatever. Sometimes not even sell, you can only buy. But with no real use case and no real functionality, just 2 tokens that you can buy and sell, and that's it.
Yeah, that's
And
what I was saying with the product. Like the product doesn't launch, and then like they just sell everything. And they go, "Oh, great, we made 1000x on our money. Fuck everybody, and we're out of here."
Hey, what about a bridge pull? When they rug pull a bridge, can you hear me? I'm driving. Anyway, because let's say I swap my money, I got my money, but the bridge gets pulled. Why? How does that get? Why is there liquidity in a bridge?
There's
There is a
no
type of
liquidity.
bridge. There is a type of bridge that's like a liquidity pool with assets on both sides. It's not the kind of bridge that we have because we're a bridge that creates wrap tokens, so it's a wrapping bridge. But there's other tokens that have similar to like liquidity pairs where you have, say, well, Pulse and Ethereum, right? So that would be a good. So there could be our bridge wraps the Pulse on Ethereum. So there's Pulse on Pulsechain and there's wrap Pulse on Ethereum. Now there could be a second type of bridge that's developed by some other team where they could be incentivizing you or the user base to like add liquidity, wrap Pulse on Ethereum and then Pulse on Pulsechain, and then you get back a token that may or may not have any value, and then they let that build up like in the contract, and then they basically just steal all the money in the contract. And
So
then
the
like that way.
liquidity providers get pulled. They'll get rug pulled.
Well, I mean, in the type of bridge that you're talking about, that's it's similar to going into a yield farm and then depositing your tokens with the promise of getting a coin back, and then they just use their admin key and they steal everybody's money. Like, of course, that's a bad bridge. No one needs to use a bridge, but like that's a hack. That's a way that people steal money.
And another way of people rugging I've seen, I actually watch this, is they provided a good amount of liquidity, but as the price was going up, they remove half the liquidity and then pump up the price to make it look like it's going up to the right. People start throwing money at it. You could sell, but they keep removing as the price goes up. They advertised everywhere. They threw this on Twitter. They fraud everywhere, and they just keep removing half the liquidity, using some of that liquidity to pump up the price. And people just start aping in. Oh, look, it's done so many X's, and it's still going up. And people start throwing money into it. Then they remove half the liquidity again and do the same thing over and over again. And in the space of like 24 hours, I calculated one token made about $13 million just by removing and pushing up the price with some of the gains that they've made. So you better watch how the liquidity pools have done. So someone told me, "Oh, look at this token; it's going up." So the first thing I did was see if you could sell. The second thing I did was look at the liquidity, and then I noticed it was one person, and he would just remove the liquidity, and he will buy some of it back, and it looked like there was big buys coming in, making people want to buy. But in the end, you couldn't sell. He just removed the liquidity in the end. He left a little bit there.
Sneaky bastards.
Yeah, I mean, I've heard of that before. It's happened. I mean, we don't have to say names, but I've watched YouTubes of people talking about how that scenario played out last year, 2 years ago. I don't know. It happens like all the time, I'm sure.
I saw it 2 months ago.
Yeah, I'm just not in the know. You know, since I'm not DGen trading anymore, I don't really. I'm not in the know as like I used to be.
Hunter, can you repeat that again, please?
One second. There was a token I was watching. Someone showed me this token. He goes, "Look, should I buy it?" And I looked at it and I noticed that what the liquidity providers were doing was, as the price was pumping up, they removed half the liquidity, used some of their gains to pump the price up more, so to get more buyers to buy in. And people will start buying in because they say these big buys, but it's actually them buying. They go, "Oh, look, someone just put 40K in." And it will just give people more confidence to throw in 10K, 20K. The price will go up again. It will do a few X's, and then they'll remove half the liquidity again and do the same process again. So they make it look like, oh, this is going to the moon. Because everyone likes green candles, everyone buys in the green. And then it got to a stage where he just removed the whole liquidity. So if the token did, I can't remember how many X's, but the liquidity pool should have been way bigger than what it was. So I went and looked into the wallet, looked down, and I go, okay, this guy was removing, and then followed what he was doing. He was sending it to a different wallet and buying the same token again, making it look really, really good. And people were just throwing money at it, and they all lost their money in the end. People were able to buy and sell.
How did you find which wallet that was? What did you use to find the wallet?
I just went to the liquidity. I just searched the liquidity pools, or who was the liquidity provider.
But like on a DEX screener or
yeah, on a DEX, yeah.
All right, okay.
I can't.
Okay,
yeah, I'll try to remember what I was looking at. Yeah, a DEX Guru, I think it was. You can click on liquidity, and you can see the liquidity there, and you just click on the wallets, go to Etherscan, and you see it there.
No, nice one. Thanks.
Also, why it's important for many people to have to be liquidity providers instead of one or two. You know, if one person owns most of the liquidity, he just has to remove it, and the price can dump straight away. There's more manipulation. The more people who are liquidity providers, especially the early adopters, the healthier the system is, the less of a rug pull it will be, and probably have hold the price more. You might not see a 50,000x, but you'll see stability in the token.
Can there be any type of coding to prevent this from happening in our ecosystem for PLSX and PLS?
Prevent what from happening?
This that Haunted was talking about.
That's just like a free market activity, right?
Yeah, you can't stop it because you're literally just adding and removing liquidity. You're not going to stop people from doing that because legitimate people have to add and remove liquidity every day. You can't stop trading because trading's a needed. People have to have the ability to trade. Permissionless systems have problems like this, right? You game them in a certain way and fool people, and then you steal everybody's money.
There is something called locked liquidity, but then you have to look at the biggest wave, the people who hold the wallet, the biggest wave, sorry, or the big top 5 wallets. So another way people would scam people is they'll say the liquidity is locked and they'll show the contract that is locked, but they've got enough tokens sitting on the side to dump the price, 99%.
So
yeah,
I
this
get.
is this is one of the situations where you got to understand who the people behind the project are. Is it somebody with like $1 billion, and then you're like, okay,
Bingo.
great, this dude's already a billionaire, so he doesn't really need to fuck me? Or is it like a dude in his dorm room, like a freshman in college that has like no fucking money? Like, well, that dude's probably gonna like steal all your money because he's probably behind an anonymous account. He doesn't have any money. He's all the reason in the world to screw everybody and then walk away with money, as opposed to somebody who's public, who's already wealthy, who just wants to become more wealthy, and he's willing to bring you along for the ride.
So how does he put money in the pool? How does he market it? This crazy college kid.
Well, he just creates a website, creates a Twitter, goes on some YouTube channels as an anonymous dude. Like literally, I'm anonymous in here. Like, you know what I
Tell
mean?
people put it in a locked pool. Hey, go ahead, put some money in my locked pool. Okay.
Yeah, I mean, anybody can make a liquidity pool. Anybody can make a website. Anybody can make an ERC20 token and then promise the world. If they do it in a creative way, it gets traction. And that's how all these are. They have like a formula that they figured out how to like just trick everybody. And it's not just one, it's probably 10, 20 times they've done this. A lot of them. It's almost like a cottage industry. Well, it is. It is an industry, unfortunately.
I got a DM once about you can go buy Pulse on, go buy Pulse and whatnot, and I knew obviously it was a scam, but so I went and looked at it, and I want to see who fell for this. How many people actually bought this fake Pulse token? Thankfully, there was only a few buyers of like $2,000 total, but it had $500,000 in liquidity on one side, USDC. These scammers have done it so many times where they can afford to put $500,000 on of liquidity on one side, make it look legit, just so you can come and buy, so they can just sell on your head. You're not able to sell the token. You're only able to buy. So, like Gamma said, knowing the people behind the project is important.
I would say that's everything. If you're not 100% sure, just don't even deal with that particular contract or that particular project.
So the problem is it's not 100%. Unfortunately, but Sheeb is like this huge fucking thing. Anonymous developers came out of nowhere. It's a fucking meme coin, and people made shit tons of money. Well, how many, like, of the 10,000 projects that came out like in the last 10 seconds. Like that's the one that made it. I'm like, okay, it's incredibly risky. And then unfortunately, there's bias. There's a success bias. I forget what the bias is the name, where you only look at the winners, you don't look at the losers. And unfortunately, people are like, well, it worked with Sheeb. I'm like, yeah, that's a bad example. It's the worst example, because you're literally like, if you try and buy Sheeb before, the next Sheeb, before it becomes Sheeb, then you are literally like probably gonna lose all your money. And then, I mean, so like with Hex, right? Hex has been very successful. It's in a dip. I understand bad times. But from the very early days, it's done really well. So people take that and they try and replicate it, but they can't replicate it because they fuck it up somehow, a lot of different ways. But they try and replicate it, and Hex is much more complicated. It's harder to replicate it, but you can replicate a yield farm. So you can just copy and paste the template for Pancake Swap, and if you know a little bit of Solidity and you know a little bit about front end dev, then you can like alter the website and the contract, and then use it for your own goods, and then like have no intention of actually creating like any other value other than, hey, I created a yield farm with the code with the contracts that are already public. I altered it. I'm not even going to steal money from you. I'm just going to create a crap product and then market it, and hopefully it takes off. And like people do that now. They literally just take a vanilla. It's almost like analogous to like a blog. Like you take a WordPress blog and you create a website, and then it's not even anything special. There's nothing special about the website other than it functions. So you're not going to become a billionaire off of this website, but then the developers say that they're going to make this into like the next Reddit. They're like, oh, okay, but it looks like a WordPress blog right now. They're like, oh, believe us, we're totally like competent devs, and we're going to be fucking awesome, and we're going to turn this into the next Reddit. It'll be awesome. Everyone's going to make billions of dollars, but there's nothing innovative about it. Unfortunately, forms are the new of like that in crypto, where somebody takes already templated Pancake Swap version with the contracts and everything, deploys it with different color schemes and different names like 10 times on the Pulsechain, and it's literally like 3 dudes, and they just deploy like 10 times with a bunch of anonymous accounts, and then they just create the thing
and they rinse and repeat.
Right. And then like they might exit liquidity, or they dump on everybody's heads, or they think this time it'll work, and then it fails, and then they just fucking leave, or maybe they do an ICO, which is actually probably more common. They do an ICO, or they do something for this bland vanilla, like worthless project, get $1 million, we get $2 million to do development to make it into the next Reddit. And then they just do that. They pocket $2 million, leave everybody high and dry, and then move on to the next one, because they actually deployed this like 5 times, all with different anonymous accounts. They all did ICOs. Everything is like, they just have like 5 different computers in their house, and they're just scamming everybody. It's what happened on Matic when I was there. It's gonna happen on Matic too, unfortunately. I basically got rugged like this on Matic, and I didn't even like think of this until it happened to me, and I was like, this is a thing. I am like, this is the first time I've seen this, and it was like, fuck, because I wasn't on Binance, which is my problem. So it was already on Binance, but I wasn't on Binance, so I didn't see it. I went to Matic, and I saw this shit happen in real time, and I was like, oh god, this sucks. And so I know that shit's gonna happen to Pulsechain.
Gamal, you all know probably in the same project. I saw the same thing happen there. That's how I learned about all this shit. But also, just to keep in note, there are people out there that will shit on a project that is actually good, just so they can buy lower. They will shit on it, create fake articles, create fake, like a lot of fake stuff, just so the price can tank and they can buy in lower. They actually do the opposite to good projects. There's going to be FUD.
Huh. That's all crazy. What happens if there's no more adopters to Hex? Hex gets a bad name. Does Hex go away?
No. The easier price always ratchets up, creating an incentive to restake and maintain it. So
Right.
In my mind, the way Hex works, there's no scenario. Well, I guess there's one scenario, and this is something that's very clear. It's like if the OA like dumped all of its fucking coins, then yeah, that would be really bad. That's like the only scenario that could possibly conceivably exist for me where Hex like is close to failing, quotation marks.
So it's more of a stable Ponzi scheme because it.
Well, even then, even if the way sold all these coins, the code would still function. You could still provide liquidity. You could still do whatever you do today.
Yeah, that's why I was in quotation marks. It would still work, but it would be a much lower price. It'd be like a reset. It'd be like a complete reset of Hex from like day one again, but without the OA.
Yeah, probably.
There'll be a less APY as well because more people will be staked. But that's about it.
Actually, the only problem with that, if we're going to go devil's advocate, no problem there. The OA does actually get half of all penalties, so that it could reset itself, and that would be a problem. But it has such a huge amount of coins now. Yeah,
well,
I don't know. It's not a scenario that I really want to like talk about much, but it's there, so we can talk about it. But
it would be a lot harder to get any real amount of supply because right now 50% of the penalties, and the penalties is not this. The way got as much as it did because it got a copy of all the bonuses at the beginning. So only for gaining 50% of all the penalties would make it a lot harder to get any significant percentage of the supply as it has now, unless people start to emergency and stake 15-year stake all day, right?
yeah, I mean, and it's only leaving with the amount of liquidity that would be. So if it market dumped everything, the way Uniswap AMM works, right? Is that you can't run out of coins. You could like literally dump every coin into the thing. It will just extract the other side, all the USDC, all the Ethereum. So how much liquidity is that? Is it 20 million, 300 million bucks?
Right now, if it sold everything to the XUSDC pool, it could probably extract maximum of $10 million.
See, so you can over say the next 20 years, you can extract, I don't know, $50 billion, or you can just screw everybody and exit with 10 million today. Like I think I'm going to take the 50 million over the next 20 years.
Right.
You know what I mean?
Hex has the ability to extend it a lot longer. Like any other coin that wouldn't get any more liquidity, that would pretty much go away. Whereas Hex still has the beautiful code of yield. Yeah. So,
yes, the contract would function the way it does now. People could use whatever assets they have to provide their own liquidity pools and to add to those liquidity pools. Because if the OA would market dump, well, everyone that was on the liquidity pools at that time would get all that X. So in theory, you'd have a couple of people that would receive almost all that amount. Instead of one OA, you would be having 3 or 4 big wallets, right? You could call them whatever you want, but those could be used as substitute OAs if you wanted.
Yeah, I know, right? Because instead of having one OA, now we have like 4 OAs, all decentralized into like different people that are just random dude. Oh, I put $20,000 in, and then all of a sudden you're like, why do I have 50 billion tokens in my wallet? Where did this come from? Like, I'm a Hex whale. Crap, the price is shit.
The moral.
Let me
The moral of the
liquidity.
story. The moral of the story is no matter what happens, the Hex will still work. Like yes, if you were in and you were holding, you have a whole. Your value will drop, but it will still work. That's it.
Yeah, and think of it this way: if that scenario would happen, people can just take out the liquidity pools. Imagine right now, X liquidity pool versus USDC, and Ethereum disappeared. you could go there and create your own pool at whatever ratios you see fit. So if I want to sell X at 10 cents, I would go there, create my liquidity pool, pair it in the way I want, and that would be it. So if someone removes all the liquidity, people can just go there and create their own.
Yeah,
And
and then there's
just
people
just
like
so you
me
know, the
who
hex
actually know how it
contracts
works under
still
the hood.
work.
Yeah,
Sorry.
well, that's what I was gonna say. Is like, I mean, so people who understand that the hex code would function perfectly fine, and then somebody could even make a new front end, which already exists. What, another hex? I think, I don't know. There's like two, well, at least one or two front ends that already exist for the hex contract.
One
It's
is
already there.
Tech, and the other one I don't know.
Yeah, right. And then so like if that happened, then it'd be like, okay, this sucks really bad, but hex still works. I have a bunch of coins still. Those still have like some value. I just hold on to them and wait for hex to come back, and then add liquidity and like maybe do my part to like make it come back.
The
There's still a
community
bunch
can
of
come
people
together
in
and just bring
hex.
it alive. Yeah.
Yeah.
Yeah, that's it. Yeah, that's it.
Yeah, I mean, well, that's not only would that be shitty, but we all know who's behind hex, and then Pulsechain came out, and then you're like, oh crap. Now we have Pulsechain. Like, how decentralized is that? And now we start going into that problem. And then once Pulsechain is actually launched and like live, we could literally like fork. God, the system contracts, but like how much? Yeah, I mean, we could fork it, and then there's some problems with the system contracts because those aren't open sourced. But yeah, I'm sure there's a way we could make Pulsechain work too. But this is all scenario that's like the ultimate black swan event we're talking about here.
And it would be someone shooting themselves in the foot, because if
Yeah, like
anyone
Richard
wanted to
basically
do
just
that,
putting the revolver to his head. Like
exactly,
instead of being able
and
to buy all the Louis Vuitton for the rest of his life, Richard just basically put a gun to his head and just fucking destroyed his all his credibility, everything he spent the last 4 years building up, proved to everybody who fucking called him a scanner like that they were right, like made himself. Oh, he's not poor anymore. He was never poor, but like he just basically threw away like billions of dollars
Money, guys.
over like the next 20 or 30 years. Like it just everything just doesn't line up. It's like it's be crazy for anything like that to even happen.
and would most likely put a bigger target in his head, right? So
Oh,
there would
yeah.
be a lot of unhappy military people there.
Well, no, there's that, and there's a lot of people that are in Hex that have exited who have money. They probably have like huge stakes. That there would be money for like legal consequences. You know what I mean?
Well, of course.
Yeah, I mean,
guys, sorry, Gama, sorry, I think we're going the wrong direction. You're scaring the shit out of me, right? I'm joking.
well, I mean,
I'm
this
joking.
is a positive discussion. I'm saying how unlikely this could possibly be.
Exactly.
I mean, I can go down the rabbit hole, and I mean, and like I think maybe 3 or 4 times I've said how unlikely this is could possibly be ultimate black swan event that would Richard basically destroys his entire existence. Like if this would possibly ever to like unfold.
Gamma, this doesn't make sense. No, I don't understand you put the point. There is opportunity, there is a chance, there is a point in there that may happen. But the guy is creating a new ecosystem. The guy is literally makes so many people like financially free. Like I'm not talking, as I did say that before, it's not about, he make 20 million. For somebody 100 grand, 50 grand is shitload of money, man. A lot of money. It's a life changer. And he's creating Hex is nothing what he's creating now. And what is gonna evolve from this. I've been in the chat with Walrus on Twitter, and there was different group of people, Hexicans, and they was chatting. The guy said a really interesting thing is like he said only 4% people from entire planet are in crypto, right? On the next football event, World Cup, Crypto.com is going to be a main sponsor, right? Imagine that. What's going to happen then? The people in crypto gonna go. You know, the percentage the people going to join. They're looking about 3 billion people going to join crypto really soon till 2025. I think they've done some statistics. I think that they even sent a link for the YouTube video. Whatever he was saying was was really interesting. And he also compared our community to one of the fifth not well known, loudest communities in crypto now. Imagine what happened when Pulsechain come out. We're going to be in the first three. I cannot even cope this into my mind, honestly.
So, I mean, the reason I was talking about worst case is you have to be able to talk about worst case, and then you also need to understand how just ludicrously insane it is to even believe that any of that could possibly happen. So, you have to have both of those in your mind, and then you can move forward, right?
Yeah, carry on. I do apologize. Sorry.
That's it. Papa Boner wasn't in here to tell me to shut up because I'm scaring everybody.
I would say, if you're referring to Richard pulling a rug pull, nah, never. And I would say that the contrary is true. If something were to happen to him, he would make sure that Pulse lives on.
Well, I mean, the thing is, he's not writing code. He's got developers that have admin rights and funding. And it's like, yes, at his level, it would live on. It's his legacy. Right. And he even say if the worst thing happened to him, it continues to live on, and then he goes on to be like a Satoshi in aura of oh my god, everyone didn't believe this guy, but he's was so awesome, and he made Hex and it's so great, and he made Pulsechain and it's so awesome. We're all gonna remember Richard, and we're all gonna celebrate his birthday every year, and it's gonna be awesome. You know what I mean? But hopefully the dude lives longer than me. We're hanging out for the next 100 years.
How do you know he's not Satoshi?
When you said the devs have admin keys, I thought this was a project where there were no admin keys.
No, I'm talking repo.
No, he's talking about He's talking about the blockchain itself.
The code, the client, the PulseGo client on GitLab, developers can push code reviews and they have access to that repo. Where the code resides for the client for Pulse.
Yeah, Pulsechain itself
That's
is not
different than an admin key.
I gotcha. Yeah, well, that's the
blockchains are
the
the
project,
same.
I suppose.
It's not the Achilles heel is the definition of a blockchain. It's not locked code. It can be improved by consensus. Any blockchain is
you
like
gotta
that.
you got to be able to update the infrastructure. The blockchain is just the infrastructure.
Exactly.
The D apps can be immutable, right, or unchangeable.
Well, I mean, technically the blockchain is immutable because you just add blocks. You make changes by adding blocks to the blockchain database.
I mean,
client,
if you're using Windows
right?
10, if you're using Windows 10 and then that goes unsupported, you have to be able to upgrade that and then change all of the code associated with the infrastructure to work with the new operating system, the new servers, the new services or resources such as web services and things of that nature. That's different than the HEX contract itself, which is a D app that runs on the infrastructure, which is the blockchain. It's two separate things.
Yeah. So HEX contract resides inside of the blockchain that is immutable because it's literally a block and then a block that are all tied back with hashes. So it's a chain of blocks, right? Now, the client, which is written in Go, called PulseGo, is the client that does the networking and it does the consensus and it builds those blocks. So the blockchain is immutable, and then the contracts within the blockchain are immutable, unless they're, I mean, everything's immutable. I don't want to go down that rabbit hole where you're talking about proxy contracts and stuff. But the point is,
you're on the right track.
the point is, you can, you do development, like you were saying. If Windows
The ledger
changes
is
something in
immutable.
their software, then you need to be able to make changes in the client to make it run. Which
Correct.
is all I was saying about them having access to be able to do that.
Yeah, so the ledger is immutable, right? So you shouldn't be able to change any of the records associated with what's happening on the chain, right? But updating the chain and enhancing the chain and making it faster and adding storage and all of that stuff, making it more energy efficient, yeah, that stuff has to be changed as technology changes.
Right, I understand that, but couldn't it be done, or is it done in a way where like all the code that that's updated, has to be done like with a signing key or something that Richard could hold, so all the code that's actually updated, Richard would have to sign with a signing key?
Why would he want that? I mean, the whole point of Ethereum is like a marketplace, right? It's like Amazon. Hey, we gave you an infrastructure. Now come in, spin up your resources, and launch your project. The same thing on Pulse, right? Like Richard is not revolutionary, so he's not doing anything that hasn't already been done. He's trying to imitate Ethereum, but then enhance it, right? Make it better, make it more efficient. Don't try to take advantage of the lessons learned from the Ethereum platform into the new Pulsechain platform. That's it. That's all he's doing, and it's going to be a great thing for us.
So if you're talking about the client updates, the actual code repositories, Bitcoin has like 4 or 5 maintainers who push code to the main Bitcoin client, so that there's like a bunch of developers that all do development work, and they push their code changes through Git up to GitHub, and they push it into the Bitcoin D repository that have 4 or 5 main devs that can add comments in there, and all the node operators go to that Bitcoin D, and that's the client they use and the client they trust. But they could also fork that at any time, and then if the Bitcoin D developers turn insane or whatever, turn evil, then they could just fork that repository, and they could like make their own Bitcoin D client and then update that. And then now that's where the Bitcoin network, like that's where the majority of the network nodes get their software from. Well, Pulse Go has a repository. It has a limited amount of developers, more than one, obviously, that have access, so that people, community devs, whoever, can push changes. Those get put into the repository, updated, and then all the validators take the Pulse Go, and that's what they run. Like it's similar.
But Bitcoin,
it's very common.
But Bitcoin is different than Pulse, right? So Pulse is like a tenant, right? So it's like you come in, you pay a fee, you pay your lease, you pay your electricity bill to run on the chain. I compare Pulsechain and I compare Ethereum to Amazon or Azure, right? And then you have all of this stuff that runs on top of that, all of the apps in the marketplace, all of the projects. That's the biggest difference between Bitcoin and Ethereum, is that Bitcoin is a currency.
Joseph, I'm not talking about the tokenomics. I'm talking about
I'm talking about the whole platform, man.
I'm talking about simply access to the repository, which is what he was talking about.
Yep, I was talking. You answered my question, Gamma.
Very focused. Thank you. Very focused answer, and then all that other stuff you're talking about obviously is true, but I focused answer. Thank you, Martin. I have to get off and do something with my son, and I'll see you guys later.
Take care, Gamma.
All right, brother. See you later.
So, guys, do you think the OA might pump the price?
No, he's not going to give away any of his money. He's a tight person with his money. But who knows? I've got a quick little article I'd like to just read quick. It's a blockchain that's competing with Pulsechain, and I'm wondering why Pulse hasn't written something like this. But there's an ERC20 that says that it's already launched and has disrupted the crypto industry in a big way. This team managed to build a blockchain that alleviated two major problems that current blockchains are struggling with. This includes expensive gas fee and scalability. Major blockchains like Ethereum and Bitcoin are struggling with costly gas fees and slow speed chain. Blah blah blockchain can support 100,000 transactions every second, which is the fastest speed in the industry today. However, the zero gas fee feature is a major factor attracting thousands of new investors that have joined this. And it also, the reason why major chains are concerned about it, the reason why this zero gas fee chain is a major concern to the major blockchain is tough competition it brings. This chain has a 8.1 gas fee, which is basically zero. This is a time when likes of Ethereum gas fees are spiking to 3,300 and cost. This cost means that it will cost you almost nothing to transaction on this other chain.
Yeah, but that's GitHub. I was researching that chain.
Yeah,
Yeah,
that's a BRC20.
I can.
What the hell is it?
Well, look. Okay, Visa is 65,000 transactions per second. So, Solantra launched to actually go after Visa, and they're at 55,000 transactions per second. So that blockchain is not meant for something like this, right? So it don't have any
This is
associated projects.
BitGert.
Yeah, Bitgert. Yeah, Bitgert.
Oh,
Right?
okay. All
Yeah,
right.
Bitgert. 100,000 transactions per second, no gas fees associated with it, right? So that means that they have a way to hide the cost of goods sold, but it's meant to really launch cryptocurrency in the ability to say, if you had a card, you can go to Walmart, Amazon, gas station, and spend $1,000 in one day, and then 100,000 transactions per second will actually allow a cryptocurrency to transfer into fiat, right? Because the gas pump is taking fiat; it's
Oh,
not
okay.
taking crypto.
Okay. I thought it was a
Yeah,
chain that you could build on, like Pulse chain.
Not this type of building. Yeah,
Okay.
not this type of building. That's going after Visa and all of that stuff. Because right now, if you went to exactly. But we can talk about that as a community. Once people start making like millions and millions and millions and millions of dollars, then we could potentially talk about how to have something where you don't have to really, worry about cashing over in the fiat, getting burned away by gas fees. So I've been looking at this.
No. I just thought somebody was beating. I just thought someone was beating us to the
Nah.
fucking punch here.
No,
because
brother.
we're late to launch, man. Yeah,
Bro,
I'm like, what the fuck?
That is not a competitor. That is, to me, a great breakthrough for blockchain technology, underlying cryptography, and to be able to do 100,000 transactions per second and not have a gas fee is very promising, right? It's very promising, but that's like 10 years down the line from something practical. And we wouldn't do that. A private organization would probably come in, raise capital, build that corporation up, and then utilize that platform to really extend the financial sector, crypto into the financial sector, where it becomes
legacy.
practical.
That's how Legacy will get their little grubby hands in on this.
That can be us, man. Who knows, man? Some people
Who knows?
There's some people in this chat that's been thinking about stuff like that.
That's true. We got the brains, galaxy brains in here that could do it.
Yeah, we got some super bright people in here for sure. But trust me, man. Hey, you watching the same thing I'm watching, brother. So I'm actually excited about this, man. Like, we haven't seen it yet. Hey, yeah, we at wars. We funding wars off to the side privately, and people are fighting, and you're seeing a lot of dumping all over the place, not just in crypto. But when you see the market cap shoot up from 1.2 trillion, maybe it go down underneath a trillion, but then maybe it shoots up to like 3.5, 2.5. I guarantee some of that money is going to spill over into Pulse, because Pulse is a complete fork of Ethereum, man. So we just need to just keep it going, man.
Yeah, it could spill right over. Right,
It
you're
will
right. It could
spill over, man. It will spill
right
over.
into it.
Yep, it will. It ain't. It
Well, did
could.
you say? Did you say totals going up? Did you say totals going up on the market cap? Or
oh yeah, 100%. In a
no, I
good
mean
market,
right now it's 1.2. It's 1.2. I'm just
yeah.
wondering.
It's 1.2 right now, so it dropped down from 2 to 1.2. But my thing is, in a good market, you got a lot of economists that are like changing their heart on and their mindset on crypto, because nobody want to be wrong on it. A lot of them believe that a big transfer of wealth is going to happen in crypto, and you got to understand that at the end of the day, you're going to have a bunch of people that's going to jump in Ethereum. Ethereum is made up of a bunch of crap coins and some really good projects. You got Bitcoin, but that's super expensive, right? I don't know too many people that can really make money on Bitcoin that's really worth anything of value. But then Pulse is going to give people an opportunity to be part of an ecosystem where $500 could potentially turn into, $50 a month. And, $1,000 might turn into $100 a month. So if you make $100 a month, that's doubling your money in 2 years, right? It's a lot of people that's a lot of money for it, bro. I just see it. I just see people finding that and then telling other people as they find it. So, especially if we keep the gas fees low, that'd be a good thing.
I think a fiat on ramp's going to help us a lot too if we get it.
Oh, bro, it's all adaptation, right? So we got to make sure that we got this thing airtight. And then, like I say, Richard Hart is the only one that did a fork of Ethereum that really makes sense to be able to onboard, people away from Ethereum itself. He's the only one that has done that. Everybody else is going after something different. Or they didn't do a complete fork, right? So they don't have all of the ERC20 copies floating around. The only way to have a ERC20 on that chain is through a bridge where it's wrapped, and then all of the money is going to go into the native, right, into the native token, or to actually physically go in and do all of that work to launch that project. And he's trying to make it easy for every token to launch on Pulse, which improves adaptation, right? And the better the adaptation, the lower the cost to adapt something, the more likely as a technology is going to succeed, right?
Sounds like you're at the zoo with all those birds around you.
I live in a natural reserve, man. So I live kind of like connected to a natural reserve. So
I tell you, man, it's like, where's all these birds coming from? What the heck is that, Tarzan?
Yeah, I'm outside, man, just listening. I talk to y'all guys more than you all more than I talk to anybody else, man. So
That's awesome. Yeah, I've been spending a lot of hours in the last, I'd like to say 6 months, but I'd say coming up on a year now.
Yeah, brother, I've been talking to you for a while now, man. You're talking more and more and more as we get deeper into it, and I like hearing some of the stuff that you got coming out of your mind. But then, more than likely, I just want to see everybody be successful, so I can start suggesting potential things that we can do to improve, our stance in crypto, right?
Yeah, when you hear this every day, things connect, the dots start connecting, right? And I got some of my friends thinks I'm a freaking wizard. I'm like, easy, cowboy, not a wizard by no means, but there's a few things you got to know, this and that. My onboarders, of course, a couple of them, either handheld, and just one of them just is not going to do it. I'm like, man, all right, I'm trying to help you along, but you got to lift a finger or something, right? But that's all right, my boy, I knew him for 35 years, so I help him out. I don't mind. But some of the others, man, I got to teach them. You know, you got to learn. You know, you got to learn how to. You know, you got to learn how to make your own bread so you can eat it later. So that being said, you know, it's nice that all the minds going on here that we can sponge off of, things start to make sense, and to the point where, you know, you can start to explaining this to others when they come in. Maybe some of us can take some of the weight off of all the brilliant minds in here from time to time and answer the more simple things.
Yeah, we will, man. We just need to launch, so everybody's not talking hypothetical. I would like to see some of these minds get to work, especially with the yield farm and stuff, because that's like kind of a blind spot for me. It's so I can learn to kind of show somebody else, because I'm looking at the gas station guy, right? I'm looking at the guy that's like, dude, I don't have no money to freaking invest. And it's like, okay, I get it. And that before me and my wife made a pretty good, chunk of money. But then when we made the pretty good chunk of money, it still was a mindset change. Like to go from, hey, I want my cash just sitting underneath the pillow or underneath the mattress or in a bank account. I want my money working for us. That's a mindset. That takes a lot of courage, but you got to start somewhere. And if you can tell somebody, hey, just put together $500, man. I get it. That's the Christmas, that's birthdays, that's everything. And have that transition to a passive income, but they have to be handheld, because these are people that don't even know what to do with money. And the way he built Pulse, it will allow that. And I'm gonna tell you right now, $500 is not a lot of money to majority of this call. Majority of people on this call.
Right.
But to majority of the people that we know, $500 is a lot of money. So when you can give somebody a realistic vision of doubling their money in a year, which is incredible, by the way, but we got to drink our Kool-Aid first. So it's like, we need to see that we're making the money first, and then we can bring in people that really don't have the money. And that's where the power of this organization is going to really come into. I can care less about a whale, bro. They already got money. I want to see the guy that don't got no money go to the point where he's like, man, bro, I'm making money. Like, it's almost like that person got a second job just from the money that they're making on that little investment.
Right. Let's take a moment real quick. If anybody listening jumped in after work or whatnot, if anybody has any specific questions, now's a great time to chime in. I know we're chewing the fat here about stuff. So if anybody's got any questions, feel free to chime in, speak up, and we'll pause for a moment. So anybody can jump in if they have any question whatsoever. Jump in. While that's happening, somebody's taking a deep breath to ask a question. I will have to say, it's nice to have my own mindset, because I think a lot of guys on here, I can only speak for myself. So I am rooting for every single person on here. When somebody talks about things going well in the future, my mindset is, you know what? I hope to goodness you are as successful as I'm going to be. I hope that you are diamond hands when we go to 100x and we stay at 100x for 7 months. And then all of a sudden that 8th and 9th month starts going, and now we're at 375x within 4 or 5 months after that, maybe 8 or 9 months of a lull for a while. That's diamond hands, because we know Hex has done the same thing. When people sat on it, people get freaked out and they think it's the top. Oh my gosh, I've 100x my money. We've been sitting here for 4 months, maybe 5 months. You know what? I think maybe we're at the top. Let me peel some off the top. And then all of a sudden they get greedy and cash out, which is fine, because you got to live, right? It's all right. But if they take too much out and wait that 9 more months after that, you're looking at more, many more X's, because that's just how the charts go, right? We don't know, we can't see the future, but time in the market, keeping that longevity in the market is bound to be quite profitable with that delayed gratification, right?
Amen, brother. Some people gonna cash out, some people gonna hold for a long term. Economists are talking about crypto projects where is more long-term strategy versus a short-term. And I just believe that everything is coming together. It's taking time. So hey, if we take a little bit more time to launch, and more traditional investors are telling people about this, then hey, if they make it a Pulse, that's good, man, because then their money going to go even further if they have the right mentality.
I hear, nothing's more important than a person's life. Money's not more important. Love's not more important. Your life is what? Your own life is more important than money, of course. But I've seen changes in people with conversations saying, "Oh man, I'm eating differently. I'm doing things differently because I know I'm going to be wealthy in the future." Well, those kind of comments are great because I know I've thought about that myself. You know, and that being said, the thoughts of the thoughts of longevity being more focused because of future wealth, we know that people have worked really hard, and sometimes people get beat down, and they're looking to make good decisions. When they make those good decisions, they're feeling good about the decisions. People's lives are changing for the better because we like to say hopium. I mean that we throw this word hopium around a lot, but really what it is expectation. And that expectation, we have faith into what a smart gentleman has done. Who cares if he's got a potty mouth every now and then? Who cares? It's not a big deal. You do you, right? He do him. So, but yeah, we're making good decisions about something that has a utility that is, that works. And we're trying to figure out this whole crypto world. And now we have what do you call it, tier one blockchain coming out. Yeah, man, it is all good. And, I, for one, am fortunate to get in early, like many have. And I can't wait for 3 years from now to be on the similar Telegram and people are like, oh, you were 3 years ago. You're so lucky. You got lucky. I'm like, no, I didn't really get lucky. I just took the chance. Risk was given.
And you took the opportunity to come in here and learn and pay attention and be actively involved.
Amen.
Right.
Now, how many people outside are going to do that? Right? They'll go to their jobs and they'll work all these hours and do all these things. But when it comes down to truly getting financial freedom, most people don't have the time. They don't think they don't have the time because it's not a priority. It's strange to me that most people in this world, that's not a priority for them to escape the matrix and work. Though they say they would like to, but they don't put any effort into it. So that tells you inversely.
Yeah, but that's
a true
true.
statement, Benjamin.
In addition to that, some people don't know where to turn. I mean, you know how many fake stuff is out there, how many dreamers are out there. We're fortunate enough to get into something real on it early. I never will forget the gentleman who talked. He might be on here, I don't know, but there's a gentleman who talked about this guy who rolled up in this Porsche. It was one of his neighbors or something, and he had, I guess, a Porsche GT3 or something. A quite healthily expensive
That was the military
Porsche.
guy. That was the
Yeah, the military
friend of
guy,
ours.
right. And he asked him, he's like, what can I ask? How, you're working on the same base I am. What are you doing? What are you doing different? How are you rolling up in such thing? And that's what he told him, about his good decisions about HEX earlier into crypto. And that's how the conversation started. So some people just don't know where to turn.
Hey, brother, that's why everybody got to be successful, man. We got to keep, we got to keep backing Richard through the tough and the bad. And then when it get good, some people got to walk up the mountain. And you know what? Other people got to watch us walk up the mountain so that they understand that, It's possible, bro. So they're not going to get the deal that we got, but we can come down and say, look, you take the little, be thankful for what you have, and you can take that and you can just grow it, penny, dimes, and nickels. You know, that's how we grow our money, right?
I've even said to
Right, right.
like a lot of people, they ask what I do for a living, and you know, I'm retired, and I try to avoid it, right? Because I don't want to go into it. But at any time that I go into it a little bit, they never ask any more questions. And the more that I try to say, hey, you know, there's this good opportunity out there, there's this and that, you know, I'll help you anytime. The more that I talk about it, the more that they never ask any questions. And that's why I hate talking about it with other people, because I'm so passionate about it. And I get so annoyed because if I was somebody out there and somebody was making this money and had this experience and was retired, I'd be like asking tons of questions and wanting to know what they did. But I'd say, I'd inquire more, but I'd probably say 8 out of 10 people don't do that. And then that kind of, for some reason, that really annoys me.
It shouldn't, Benjamin, because a lot of people will waste your time, brother. You only want the ones that are really interested, and then they take the step forward to be interested. You can't save everybody.
Yeah, that's what Mando says, you know, and I believe in that. And that's what's so hard, because I really, truly want to help, like, anybody that comes in my path, I want to affect their life somehow. And, you know, so yeah.
You
You
going
can
to
help
affect
me
more
if you
lives.
you can help me if you give me your C words.
Yeah, right, brother.
Special 24 words. You can help me a lot. Help a brother out. Come on.
Yeah,
Hey, Crypto John, you give up your C words first, bro.
I see. It's always a cat. Nah, but that's great. I think that's honorable, and I think that shows a lot of character. I don't know the names. I'm driving. I can't see the names of everybody talking, but I know your voice, and it's definitely honorable to want to help people out. And if you're disappointed, I get it. Me too. There's a few people that I've talked to that they don't ask any questions. When I talk about a few things, and most people aren't around my immediate circle, but I know a lot of people in California, Silicon Valley. I know a lot of people around here, and I talk to them. And there's a number of people I really care about that actually pull the trigger. And I got one of them, bought at the 49 cent mark, and he's a little salty, but that's all right. I said, look, man, I said, I don't have a crystal ball, but just hold tight. The good news is you got the exact amount of coins that you spent your money on. So just be patient, So, but it's just is what it is. 49 cents. He don't talk to me that much anymore, but I try to keep it positive. But with other than that, everything's been really good.
Yeah, they got to be a tough situation to deal in.
A quick question, if I may. I was stake ending in 2 days, but there's a lot of stakes ending. And I was wondering if I end stake today, an emergency end stake, beyond the 2 days that I'm not, the 2 days early, like what other penalties would I incur?
Not much.
Not much.
Are you saying you're 2 days before your end stake promise is up?
Yeah.
Okay, so is there any particular?
If you paste,
You just want to pull tomorrow? You mean?
I'd like to.
so if you,
Everybody else. Yeah, go ahead.
so if you paste your address on the HEXradio app, they show you what your penalties will be.
Is that only on? Is that on like desktop as well? Or
I don't know if they have a desktop version, but it's you can just download the app and you literally just introduce your public address. So you don't need to buy their wallet or introduce any sort of private information. You literally just paste your public address, and they'll tell you, they'll calculate how much your penalties will be versus your yield based on the length of your stake and the amount staked.
So
That's
Elmire,
probably
is
the
it
easiest.
typically a big penalty if you in stake 2 days before?
Yeah, it depends on the total duration, but yeah, the difference between 1 day earlier, 1 day earlier and the actual day is significant.
Oh, so I'm wrong. It is significant. I didn't think it'd be that significant. 48 hours before completion of their stake.
Well, of course, it depends
I
the
stand
amount.
corrected.
It depends the amount you have staked, of course, and the duration, but it can be significant. Yes, that's
Well,
why
okay. Well,
usually the
let me
best way
just
to see it
let,
is
let me
to
just.
the best way to see it usually is just to place it on the Staker app. You'll see the penalty you incur, and if you're fine with it, just go ahead. But why do you want to end stake 2 days earlier just to try and sell before all the other guys that are ending their stakes after?
Yeah.
Maybe if that's your play, but you need to go and see if it's 43. You're going to ask something, Crypto Drone?
No, I'm gonna have to sign off and sign back in. My audio is messing up. I'll be right back.
Sure, no problem.
Yeah. So for example, since our gentleman's asking a question, I'll just pull out a number out of thin air. So for example, our gentleman had like $2,000 he staked for 2 years, right? So he's 48 hours before end stake. So out of that $2,000, what type of ballpark do you think would be a penalty end staking, 48 hours before it's over? I'm just curious.
It really depends on the length of the stake and
$2,000 for 2 years. What kind of possible penalty might that be?
I would
It
have
would
to do the
be.
math. Go ahead.
I was just gonna say the penalty on a normal stake wouldn't be that large at all, but in the case of a 2-year one, he'd give up the big payday bonus. So that would be another caveat. Going forward, like today, if you made a stake for 2 years and then did it 2 days early, you're gonna take some small hit on the reward, but it would be small relative to the yield, and also you're likely to have so much price appreciation you wouldn't really care, but you still probably want to let it go full tilt.
Okay. So
I mean, for 2 days, are you willing to use like a few $1,000 for 2 days?
Hey, we
Maybe
just
not.
saw somebody who was willing to give up a couple
Oh
million
yeah,
for a couple of days.
yeah,
true.
true.
Yeah, well played. Well played.
True.
But I think more likely that was out of ignorance. That person probably didn't know what was happening. This doesn't make any sense. They knew what was going on. And like somebody said earlier, wealth doesn't equate. Uh, you know, wealth doesn't equate mind. Education.
Yeah.
I'll buy your hex at 2 cents if that's a better deal for you.
Yeah, see, if you sell your hex to him at 2 cents, and you guys don't have to worry about all these hard problems like what to do with all your money.
Solving today's problems one by one.
Just back here catching punts.
There's a website I pasted here a while back. I'm trying to remember which one. And basically it had the calculation for the penalties. Yeah, if you go to x.wiki/penalties, I'm going to paste it in the chat just for the curious people. You have the formulas based on the duration of the stake, how the calculation is done, with some examples. And if your stake is less than 90 days, you won't get any principal, any yield if you unstake just 1 day earlier, and you will get a hit
So you're
on
saying
your
my steak
principal.
is spoiled?
Well, I'm not sure.
That was a meat joke. Sorry.
No problem. But yeah, just I would just paste it on Stake app and see what they say, what it says there. It's basically easier.
Elmir, I saw y'all boys voted down taxing Bitcoin. Well done. To credit to civilized people.
What? Sorry.
Yeah.
I saw Portugal voted down adding some taxes to crypto. So well done from civilized people.
Congratulations for having a society of common sense.
Where did you saw it?
Popped up on a bunch of the Bitcoin notifications that they shot down that proposition over there.
I have been out of the news this week, a lot of work, but as far as I know, the government still didn't even have a legal basis for creating any sort of legislation. I'll take a look at what happened.
Man, Kentucky's got a ton of armadillos. We got an armadillo problem here. Who'd have thought? Today's random thought. Sorry.
It's too bad you can't just set a stake to roll over again. Like, would there ever be a way where you wouldn't have to end stake but just roll it over?
Yeah, stake longer.
Hey guys, I've been away for a while. I was wondering, did the mainnet get delayed? Yeah, I thought it was going to be during May.
Welcome back, man. Where you been?
It's life, man. Chasing life.
Oh my God! It launched and we're all driving Lamborghinis now. Where you been?
Just driving a Range Rover.
No, I'm just
joking.
I hear you. No, I'm just kidding. No, we're still we're still waiting. It looks like that there's a very good possibility that launch might not happen for till June, July, maybe August. Just because Richard Hart said, coding's difficult and we get it, so be patient.
Got it. All right, makes sense.
Still don't know, but the sentiment is before 2023. Probably, I think it's going to be I think it's going to be mid-July myself, but that's me.
Probably, yeah. Hey man, as long as before the market crashes, to be honest.
Do what? What'd you say?
As long as it's before when the market crashes and shit.
Yeah, it'll launch. It'll launch in a bear market, but if you've been listening, which you haven't been, it's not a bad thing to launch in a bear market because you only have up. You only have up to go, and that looks great to everybody.
Definitely. I'm definitely educating that. Yeah, man. Appreciate for the information, man. Just checking in.
You got it, man. Don't be gone so long next time. We missed you.
I try not to, bro. Appreciate it. Take care.
Late. Redneck, you got your ears on in here.
Yes, sir. What's up?
So, who do we contact about our shirts next year? What's his name? Lakin or something? What was that? Who was that?
Lank. L-A-N-K.
Lank. That's right. Lank. Okay, thanks. I'd be curious about how many people gave their information so far, but of course it's super early, of course. Just getting excited, that's all.
I think probably, 5 or 6 at least.
It'd be nice later on when all this stuff starts rolling, next year happens. It'll be nice to have 30 or 40 people for sure. It'll be nice to everybody get together. What happens when you guys have hurricanes down there? You guys just up and pack it up and leave for a while?
Well, where I'm at, I don't have to worry about it very much, but yeah, I mean, typically the smart ones do. It's the easiest way. I've been near the coast most of my life, and let's see, been through David, Andrew, shit. I've been through quite a few of them actually.
Just reminds me of one big tornado.
Yeah, for the most part. I mean, we always got out of the way of them. That's the smartest thing to do. Well, you always got these idiots that want to sit around inside of Category 5 and let's have a party. But, you know, yeah, all you can do is leave and pray and hope that they're all right. But, you know, it's stupid.
So do people carry like hurricane insurance down there near the coast area?
Yeah, well, down in Florida, it's probably more expensive, too expensive to even buy.
Yeah, because I had earthquake insurance in California, and I was just wondering if people had hurricane insurance in Florida and such.
Yeah, I'm sure there's some sort of rider for wind and damage and stuff like that.
How you doing, Redneck and Crypto Drone?
Doing pretty good, Mr. Jiggs. I'm getting me a little bit of rest. Got to drive down to see my mama this weekend.
Oh, that's nice.
Good to hear
Raining
you,
up.
Dixie.
Everything's good. I bought Hex at 566.
Ah, bless your heart.
He said it went down to 2 or 3 cents in the middle of the night. I didn't
Yeah,
see
I heard
that.
you. I heard you comment about that. I heard you. You asked a couple times about that. Jigsy bit. He wanted his 2.5 cents.
Geez, I would have had to get out of bed, go down to my office, open up my computer, and buy. But if I would have done that, my wife would have killed me.
Yeah, I think it just wicked down there for a short time. It wasn't really a measured bar. It's just a wick down.
I still got a bump on my head because I was moving so fast, and I got my tower under my desk, and the cord for my hardware wallet's so short. I was moving so fast to confirm and knocked my damn head on my desk.
Now that's pulling the trigger.
Did you get any?
Yeah, I got in at like 4.6, maybe even 4.4.
Oh, woo! Wow.
Right, I set a limit for 3.5 and thought about leaving it there for a second when it went down. And I'm like, but it was still nuts. Just about $800 order at 3.5, I would have gotten like over 25,000. I'm like, damn, T-shares for under $1,000.
Oh, you greedy bastard!
I'm still stoked on my position. I haven't bought in once for less than 12 cents. I mean, more than 12 cents.
Yeah, rub that in a little bit.
Not to rub it in or anything.
Thanks, Illuminati.
Yeah, well, I did a stupid move last night. Actually, I screwed up.
What does
All
that
right,
mean?
I'll buy.
Enlighten
What
us,
did you
brother.
do?
I had me a nice little limit order ladder going on, and I went ahead and right before bed, I went ahead and set another one. And what I didn't realize was that I had put all my USDC in that one, so I picked up a nice little bag at like 5.2 or something like that. But I was really mad because I woke
your
up.
limits below it didn't go.
Yeah, but sold all my USDC for that, and all of them said when I looked at it in the morning, 100% that it was basically would have filled. I mean, You're talking mucho hexes.
I think there'll be another opportunity.
That sucks.
If you guys want me to kick Illuminati, just say so.
Bye, Illuminati. Hasta la vista, brother.
Message received.
Just kidding, man. Just kidding.
That makes me wish my Corvette is sold by now. I still got it for sale. I have somebody. Nobody's pulled the trigger yet.
Man, used cars are flying like hotcakes. How the hell is it not sold yet?
Well, because I'm asking almost $20,000 for a 2000 Corvette. So I got it up there a little bit.
You know what God said about greed, man.
Yeah, that's true, but God ain't in this market right now with me. He's not right beside me, so I thought maybe I'd ask, see what would come happen. He ain't speaking up none right now, but maybe I'll just lower the price. Probably pissing a lot of people off with my price I got on there, but I got a couple calls about it. They're just too far away.
Decent condition, I assume.
Oh, dude, what you talk about, man? My stuff mint, dog. My stuff is clean.
Yeah, I can see all crypto. Yeah, I think it starts up. Yeah, it's only been hit against a couple trees, but it's in good shape, man.
Sell it to Jakeinator.
What's that?
Sell it to Jakeinator.
Jakeinator, you want a little race car? I got a race car out there. I got one for you.
You know, Jakeinator drives a Pinto.
Yeah, but it's got wide wheels on it.
He's driving around with a hat and listening to Bohemian Rhapsody all day long.
Motep, do you have any question? Imhotep, any question, doubts, comments? Remember to unmute yourself if you want to speak.
Yeah, I got a quick question. You guys got a potential launch date for Pulsechain, or you don't know at all?
There's no official date yet. Unfortunately, we all want one, but there's none right now.
What's your personal opinion? What you think is what would be your own personal opinion when it's going to launch, this year or next year?
Well, it changed based on what was said by Richard on the past streams and tweets. I still clearly see it launching this year and probably the next month. But again, until Richard officially says it will be this, there's nothing else I can really tell you.
Okay, great.
September.
I'd say probably next month would be nice.
September.
Yep.
Yeah, and then one more question. Once PulseX launches, do you know if there's going to be single-sided stakes immediately, or we have to wait?
There won't. There won't be. They need to be voted. The tokens need to be voted on. So Richard wrote a tweet about it like a month ago or so. So the communities or the founders that want to give a portion of their tokens to holders of X and create a single-sided liquidity pool need to create a proposal on the DAO with certain parameters, and when those parameters are met, they then move on to a core proposal where people vote on it, and then the pools will be created after the requirements are met.
Right. Okay, that makes a lot of sense.
Yeah, so the owners need to decide how many coins they want to give, for how long. They need to, of course, give some information about the token, and then after the proposal is accepted, they need to actually send the tokens to a specific address so it can be deployed to the single-sided stake.
How about the single-sided stake being basically to stake your PulseX for like the incentive token, whatever the official incentive token is going to be?
So the incentive token can only be received by farming the LP tokens, which are the tokens you receive when you provide liquidity to the liquidity pools. Okay?
Gotcha.
And for instance, if you provide liquidity for between Pulse and PulseX, you lock that liquidity, you receive LP tokens that represent liquidity you provided, and then you can use those tokens on the farms to farm the incentive token if the pool you provided liquidity for is an incentivized pool, or which means that it has a farm where you can stake those LPs.
Gotcha. Wow. Okay, that makes a lot of sense. Appreciate
Well,
it.
if you try the testnet, you can see how that functionality works right now. You just need to provide liquidity to any of the pairs that exist in the farm. You then get the LP tokens and stake the LP tokens in those farms. Very
Right. The only thing
straightforward.
I'm worried about impermanent loss, so I'm just trying to single-side stake in the beginning. So I'm just going to be patient till something decent shows up, because I'm not
Yeah, of
trying
course,
to.
but in the testnet, if you want to see how it works, just to get some knowledge and familiarize yourself, because even if you're not the one providing liquidity, it's always nice to understand how it works. So you can just go do it in the testnet. There's nothing to lose there.
Right. I mean, I've used the testnet for everything else except for farming, so I'm pretty good. I'm pretty bona fide about how to use PulseX as far as the testnet goes. So that's
Elmire, what am I going to look for to choose one of the 33 validators? I mean, I know we're going to choose, but I know there's some names that we might be familiar with. But what type of criteria does one look for to choose a validator?
Well, I cannot give you an exact criteria because it's very subjective. I can tell you that I would look for a validator that has no sort of felonies, or that it wasn't slashed. So 100% uptime.
Yeah, but we won't know that for a while, though, right?
Well, on the first day or 2 days, I guess we would see at least the ones that at the beginning were able to just start working right away, I would say. But yeah, it's a fact that anything can happen during the initial phase. But the next best thing would be to first go with someone which is from the community and that you know, that they have been providing value to all of us, either by being here or creating videos or websites or information, and that you know that they know what they're doing, right?
Question and answer.
1 second. So I would go
I'm
for
going
someone
with
that's.
I'm going with redneck.
So I would go for someone that I know has the know-how to understand what he's doing and what is needed to make sure that the node has 100% of time. And on top of that, that they have been a good actor and a good presence in the community. Those would be the two major factors I would look at.
And from what I understand, they've got to have a pretty good amount of skin in the game. Is that right?
Well, I would guess most of them will have a lot of skin in the game, and if not them, not the node per se, personally, many people will most likely delegate to them. So,
Thank you, sir.
Yo, Elmar, I got one more question.
Go ahead.
Okay, personally, are you more bullish on Pulsechain or PulseX? Honestly.
So after the initial phase where everyone and their mother will want to get some Pulse, I'm more bullish on PulseX.
Gotcha. Thank you.
Welcome.
I appreciate what you said earlier, Mr. Jiggs. Unfortunately, I have no pulse, but I gladly take donations.
All right, we'll start working on it for you.
Mandalorian was saying today that he I don't know, it's because he was able to catch the bottom. He was saying how he believes that Richard is trying to time the bottom of BTC. Couldn't Richard, if it was all ready and even if this isn't the full bottom, even if he said something to Rip and hit the go button, things started to move and people started to actually be able to see a product and understand what's happening, for that epiphany to occur, even if Bitcoin were to capitulate, wouldn't we kind of just be set and off the races? Don't you think there's enough capital potentially on the sideline where people would want to look and participate, maybe deploy, versus actually timing a bottom? I don't understand where it's we preach about timing the market versus timing the market, but then where timing the market for this product launch would be a good strategy.
Well, I don't believe Richard is trying to time the market. So I think he'll launch when it's ready. And if ready happens to be when the bottom is in, well, then that's what people call a coincidence. But I don't believe he's timing the market. I believe he wants just to release a project with as best chances of succeeding and with the minimum issues possible.
Yeah, I don't believe he's timing the market either. I think he wants to get it out also because it's I think he's eager to too, but he's just at the mercy of his developers and trying to get things done because it's a really difficult thing to do. But I don't think he's sandbagging anything.
Yeah, and again, like he said on the last stream, we heard him talk about it. Why launch with a known issue or bug that could mean that the network would be attacked and be down for a while? Why would someone launch with a flaw like that just to gain a few months on something that is supposed to run for multiple years?
Say, hypothetically, right? So, for the individuals that were lucky enough to get in at the beginning of Hex and could have potentially hit, a 10,000x, put in $1,000, made $1 million on it. Like, how, for someone like me who, is interested in what the next like 3 years looks like, right? Like, how many of those individuals do you think need to be shaken out? And are we experiencing that here at this like tight kind of inflection point? And then like, what do you think like a good sort of length out is? I mean, you can look at the end stakes and stuff, but even as I've kind of been doing that, obviously we see a lot kind of ending now, but it seems kind of light over the next couple of years. It seems a little bit more spread out. Average length in 6 years, we're at like a 2-year mark or 900 days. So like on like when we talk about kind of like zooming out, like where are we in that, like from beginning to middle versus like how far out do you think is a safe bet to actually be able to get out ahead of maybe some of the individuals that are wanting to realize gains here?
So I cannot speak for everyone. I can only speak for myself. And to me, what happened since the X stop was a combination of people just having 2-year stakes and wanting to sell them. And when you have a 2-year stake where you did 1,000, 2,000, 5,000 X by being staked before big payday and accumulating all the APY during those first 2 years plus the price appreciation, almost anyone would try to sell them, especially if they don't really like what was said this few hours ago. It's when it's life-changing money for them, right? So a lot of people most likely did that. Even the person that just had a 800 days ago stake that ended like 2 weeks ago or something and just sold his entire bag down, for him that entered at the beginning and was able to cash out thousands of X's the money put in, is probably a lot better now from it, right? But again, now that all those people are leaving the system, and as you can see right now, the liquidity pools are also getting thinner. We can go into the analysis and speculation why that is, and why it would be better to do this versus that. But you see a combination now of the liquidity pools getting thinner as you approach the post launch, and still some people with big stakes wanting to leave, right? Or just wanting to cash out because they see the drop and everyone is flooding. If you look at the text chat, everyone, at least the more active people that like to speak a lot, most of them just say X is done, rug pull this, rug pull that, and etc. And so you'll see the price going up and down, and it can go lower than it is right now. Like we had the dip, that big week yesterday. We can have more weeks, especially with the liquidity as low as it is. But overall, I still see it as a very good opportunity. I myself, I'm here from day one, not in the chat, but in X from day one. And yesterday I bought more. And I bought more at 12 cents a few weeks back. And I bought more at 18 cents also. So
Okay, cool.
that's because I see it as having potential in the future. And it's something that I have for the long run. I have half my stake for 15 years. So I wouldn't do it if I didn't believe in it.
Right. Yeah. I mean, I guess for me too, I've been on in terms of like the macro, kind of zooming out and looking at where we are, the amount of institution, and even what you see in the news on countries and financial system. Like I'm more interested in being in a product that I think has the correct product market fit. And that coupled with that type of capital, like when we look at the like $7.2 trillion that are in this type of product with banks, with its saving CDs and things like that. Like, that all makes sense to me. I think I've been well. I mean, it's nice to hear to say that you were buying at 12 and 18 too, because that's kind of where I was getting in. But yeah, just kind of, and I'm happy to kind of roll over my gains from the year like into this, but just I mean, so do you and obviously it hacks in the code and it's proven and it's done, versus looking at products like PulseX and Pulsechain, which are new. Maybe people are thinking that they can see a 10,000x there, but for some reason I like, and I'm trying to put my thesis towards like what Hex was designed to do in terms of like where I kind of weight my position. Also, I was able to get into PulseX and Pulsechain Sacks, and I'm late to Pulse. So trying to not catch the falling knife, but also like get into position and then figure out what my time horizon is. But I have 3, 10, and 15 year stakes as well. So I'm just kind of trying to look at zoom out and look at what the landscape really is, and then the fact that Hex has been out for 900 days. What do you think people's like? So when people start to learn these ecosystems and see Pulsechain and see everything that's happening on Pulse, what do you think would be a driving factor to why potentially people would want to come and then invest in Hex on Ethereum? Just a better t-shirt.
So for the X on Ethereum, again, when people talk about X on Pulse versus X on Ethereum, to me it's like a self-balancing system based on the APY, on how the APY is distributed by the stakers. And so if everyone leaves to the Pulse side, the APY on the Ethereum side will get a lot higher. And so maybe a $50 fee to stake and $1,000 fee to unstake doesn't really bother you if you're gaining the double or triple APY. And if you have a big stack, you bother even less, right? It's just free mining. compared to the Pulse side. So it will be a self-balancing system. It will go back and forth. People will move from one chain to the other based on their current expected yield and expected entry value and expected entry cost. But it will go back and forth. And that's why what I believe will happen between the two. And again, based on the self-balancing system that exists on X, sometime at some point in the future might be just straight up better buying it and staking it on the Ethereum side, and at other points it would be straight better doing it on Pulse. So who am I to know in 15 years what the outcome is on one versus the other? But I don't see X on Ethereum just dying overall, especially when you have, like you said before, an average stake length of 6.6 years. And to have an average of 6.66, you need to have a lot of 15-year stakes, and those people won't live at all and won't just say, okay, just forget my stake there, let's just live on Pulse now. Of course not. They will want to extract value on both.
And also, what I've heard people talk about with this is Ethereum or Hex on Ethereum. It's battle tested. We know it works. It's proven, right? So Pulsechain is a new chain. It hasn't been proven yet, though there shouldn't be any problem. But we know it works 100% on Ethereum.
Then were you surprised that John pulled that 4.5 bid?
I was absolutely surprised. If you would have asked him a week ago or a month ago, and even that day, right? He said he had a buy-in and he changed his mind supposedly at the last second. But those are his decisions, only time will tell if it's correct. But, I think by coming in here and talking, and John's trying to hit the ultimate bottom and he's boxing himself in a corner. I mean, there's no way that buying for your first buy at 4 cents, 4.5 cents, you're a legend. And by even just doing that, and he wasn't going to put all his bag in, and he has the right to do as he pleases. But I think mathematically speaking, and all, if you take everything into consideration, I mean, you can't say that was a good decision. I mean, that's just my personal opinion.
Benjamin, I was in here last night as well. I was in here yesterday, last night for me, or yesterday for you guys, when John was on and talking about the 4.5 and the 1.5 limit orders that he put in. And I was gobsmacked at the 1.5, and I was kind of shocked at the 4.5. And then I seen the chart as soon as I got up this morning at 6 a.m. and I was like, holy shit. And I actually messaged them this morning and they got back to me right away and it was like, I told you so. And the thing is that he knows the charts, right? And he's got there's no benefit in him coming in here and sharing that information with us. And when he does come in and share the information, he gets shot down. And it's kind of like, just listen to the guy. He's got all this experience. Thor was in here last night as well, and he was kind of trying to defend his corner as well. And it's like, give the man a chance to speak. We know that's not what Hex is all about, but there's nothing worse than buying Hex at 12 cents and then see it go to 4.5 cents in a matter of, what, a week. So it's kind of like just listening to the guy, and he's got the experience. It's a tricky one. It's a tricky one.
Sorry, I was pulled. Sorry, I was pulled by my Wi-Fi, and I didn't hear what Benjamin said or the follow-up. Can you repeat it?
Well, we're just talking about our friend John. I do think his TA is very, he's a great member to have in this community, and I'm very thankful that he comes in here and shares, right? But at the same time, there's a lot of people that, who understand how price goes down and that these are, realistic numbers that we could have seen and that we are seeing. Okay. I just think for my personal opinion for new people, I don't think that it's, John's in his own little category of what he's going to do and what he wants to do. But for, the new people coming on, trying to hit the ultimate bottom isn't really good practice. And I love everything John does. He comes in here and says, and even himself says, hey, you shouldn't be doing this, right? Trying to hit the ultimate bottom. But that's John's prerogative to do what he wants, to say what he wants. And, I personally like that every week now, John is getting more and more vindicated. Because when we were at, 15 cents, 12 cents, to think the price is just going to continually go up, that's only one side of the coin. So, sometimes you're right, sometimes you're wrong. But buying at a 95% dip and getting in at, let's say, 4 cents is a tremendous opportunity. And if you're not taking that tremendous opportunity, what are you waiting for? That's just my 2 cents.
So on the TA and etc., people can do how much TA they want. TA as some utility. It's like a self-fulfilling prophecy. If everyone is looking at the same numbers, everyone will see the same numbers because everyone will do the actions to cause those numbers to happen. That's the first. The second thing that TA does not account for is change in liquidity pools, change in people's behavior, fear that people want to just sell out, or things like that happen, like the other guy that sold a bunch and just dropped the price and wake the price down to a low price. And if the liquidity pool can keeps being as low as it is or even lower, you can see a guy sell and we go to 0.00 something, right? It's a function of the liquidity pools. And the same can happen to the upside. So TA only gets you so far. And you can look at how many moving averages you want. You can look at how many 5-minute charts and 15-minute charts and daily charts and whatever, but it only takes you so far. And the price doing something that happens to align with the numbers that you did TA on doesn't mean that it was caused by any sort of TA. There are multiple factors in it. And again, TA is very limited in that sense, especially in assets with a small liquidity pool, and that are not very viral or very diversified through multiple communities or multiple exchanges and etc. So
let's say you had $1 million, right? And I say $1 million just because it seems like you can move the needle a little bit with $1 million here. So let's say you had $1 million and you wanted to be in the Richard Heart ecosystem, right? Obviously, we have copies and things like that, but kind of putting that to the side. Like, let's just kind of look at Hex first, maybe. Like, say you had $1 million. Like, how much, if you wanted $1 million in on this project, and obviously proof of weight, you can stake some out, but then you also, kind of to Wallace's point today, you want to help support the liquidity pool, but maybe you don't know enough about it to really, you have to do more research and stuff. Like, what percentage do you, let's say you did know what you're doing, what percentage of that would you potentially put into a liquidity pool just to kind of prop up or give support to the price, or would that not have an effect at all if, say, you put in 50% or 25% or 10%? Is that a way to look at it? Like, if you're investing in the ecosystem, like, should you also care about liquidity, providing liquidity as well?
So if I wanted to provide liquidity, and first it will depend on the tokens and the risk you're willing to take with those. But if you know what you're doing, you can go as high as you want, but I personally would do it with 5 to 10% at most. And it would be on a liquidity pool from which I believe on both sides of the pair, right? Because that way, even if the ratio goes one way or another and I get some impermanent loss, at least I still hold 2 tokens I believe in. But that would be my perspective and what I would do. But again, different people have different risk appetites and different ways to look at it. But again, that would be what I would look at.
Right. And I'm sorry that you're repeating yourself, but so the liquidity pools have to do with the ratio of those 2 tokens, and you would, in what scenario would you add Hex to a liquidity pool? Just to hedge on your permanent loss by adding liquidity, or would you say, okay, like, I think Hex is going to pump, so I'd rather have my ratio more on the Hex side in the liquidity pool so that people are buying that? Is that how that works?
So if we as community members wanted to help build up Hex liquidity or whatever, or post liquidity or whatever else, that would be either to make sure the liquidity when people sell and what happens to the price when people sell does not really affect that much our backs, right? And that if we want to change one asset to the other, we know that we'll be able to do it very easily without worrying about the slippage, right? So it would be to sort of keep the value of the coin and be able to extract some value out of it whenever we need without really worrying about pushing the price down, right? At least that would be my perspective on it. And of course, make some fees in the meantime. But again, when you provide liquidity and the ratios change a lot one way or the other, you are always getting that impermanent loss. And impermanent loss doesn't mean you lose money in dollar terms. It just means that overall, you would have made more money if you hold the tokens yourself than by adding them into the liquidity pools. So it's not like you're losing money. You're just not making as much money, if you want to think of it.
The same way you don't lose unless you sell, you're only experiencing that impermanent loss until you pull the liquidity.
Exactly. And when you pull the liquidity, all the impermanent loss you have becomes permanent, right? And again, sorry, go ahead.
And just so because I'm actually finally tracking with you, and then so like the fees that you would get. So let's say you had an even ratio of USDC and whatever token HEX. By having the liquidity in there, you're getting fees on top of that.
Exactly. So I would receive the fees that people pay when they swap between the tokens, and if that pool happened to be an incentivized PulseX pool, I would probably be able to farm the incentive token, right,
What do you
or
mean the
whatever are the
fees?
tokens.
What do you mean the fees when they swap? Like the Uniswap fees, or
So every time you swap a token on a decentralized exchange, you pay the gas fees and you pay a swap fee. And that swap fee, if we take the example from Uniswap, that swap fee is paid to the people that provide liquidity. So a portion of the tokens that you want to swap from, imagine that you want to swap between USDC and X, so you want to sell USDC and buy X, a portion of your USDC will be used to pay the liquidity providers.
oh yeah, that makes sense. For some reason, I thought that was just going to the house or to Uniswap, but it's going to the liquidity providers.
Exactly. And in PulseX, a portion will go to the liquidity providers, and the other portion will be accumulated for the buy and burn of PulseX.
And then
for the PulseX buy and burn.
when you swap, say in MetaMask, they're providing liquidity there, so they're just taking their fee.
Well, when you provide liquidity pool on MetaMask, first you pay a higher fee than if you use a decentralized exchange, and that's for two reasons. They need to pay the decentralized exchange for you, and then they take their cut. Simple as that.
Yeah, I see that now. All right, thanks, man. That took me a
So
long time.
if you swap using MetaMask, last time I checked was 0.85% fees, and on Uniswap would be 0.3. So they pay 0.3 to the decentralized exchange and get 0.55 for them. But does that make sense?
Yes, thanks.
Okay, Elmar, I got a question.
Go ahead.
Thank you. Are SAC totals done? I mean, they haven't been updated in about 13 days.
Well, the probability is high. So we didn't have any other updates other than just Richard saying, go check them now again. And if they haven't been updated in 13 days, I would say it's a good sign. So most likely everything is accounted for at this point. But I believe it was said that even if there's some minimal discrepancies, they wouldn't delay the launch anymore because of it.
Excellent. Thank you very much.
Welcome. And again, one more thing about the liquidity pools. People need to understand that as Pulse gets closer and closer, and people that are in the X ecosystem know that we are closer, they probably don't see a lot of value of having tokens on the liquidity pools, or even holding either USDC or Ethereum for the fork, right? And those are the two pairs that basically have all the X liquidity, right? And so, unless you are someone that will already have a lot of pulse during the after the fork happened, maybe keeping your Ethereum on the liquidity pools won't get you as much pulse on the other side as if you keep it there, and the same for USDC, right? And so that's another incentive for people to remove liquidity from the pools, at least until Pulse is launched, right? And I believe it's also one of the factors on why the liquidity pool is getting so low at this point in time, and why the slippage starts getting higher and higher. And another point was, at least I checked 2 or 3 days ago, and the slippage when you sell is a lot higher than the slippage when you buy, and that's another factor.
You're saying people are pulling from the liquidity pool because they would get more value simply holding the ETH or USDC if they wanted to bridge it for anything on Pulse. Is that what you're saying?
I would say that maybe they don't want to hold on to ETH or USDC either on the pools or maybe on their wallets because they may be able to get more pulse doing something else. I'm not saying that's all of it, but I see it as a very good reason why some people might want to remove their liquidity at this point in time. At least I would.
Don't you think we would see that potentially reflected in the HEX price?
I believe it's being reflected in the X price.
And then, did you catch how much volume came in last night?
Well, volume is one thing. What actually is locked in the liquidity pools is another, right?
Right, because that's all.
Because volume only tells you how much was bought or sold, right? And you can buy and sell 20 million, and the price does nothing, right? Assuming the slippage is the same both ways. So we would need to dig deeper than that.
I'm learning. Cool. Thank you.
Problem. We are all learning here. Even myself learned a lot in the past months just listening to other people.
Hey, Elmar.
Yes.
Has the God whale ever come into this chat before?
Not that I know of.
Okay. Do you know if he has any official predictions on PulseX or Pulse?
Well, I believe he has now official Twitter handle, and any post would be there, I would say. But other than that, I have no clue.
Okay, great. I follow him. He hasn't like officially said anything. I mean, I know he's bullish on it, but he hasn't put like what he really thinks is gonna do long term.
Well, I know he locked a lot of value for 15 years, so I would say he has some amount of confidence in the project.
Gotcha.
Richard Hart was born in 79, correct? I think I heard him say that on a live stream. I think, are we the same age, me and him? No. What's 79? That's, how old's Richard?
I have no clue when he was born.
I want to say 45.
79 is 43. 43.
43. I don't think he's 43. I think he's younger. I'll have to check. I wonder what 15 years for Richard looks like. Like how old he'll be. Just kind of curious.
I need to go for a while, guys. We'll be right back.
Bye, Elmire. Thank you for all your hard work.
Oh wow, Richard is he's 79. He's 42. October 9th is his birthday.
The magic Hitchhiker's Guide to the Galaxy. No.
10-9. We should throw him a birthday party if this goes off of the hitch.
Yeah, he's just a couple of years younger than me. He's already a billionaire. I'm like, I need to catch up here. What's wrong with that, huh? Allegedly a billionaire.
He's gonna have to provide some liquidity to get his money out. That's for damn sure.
How do you think I feel? I started out in business at the same age as him, and I'm pretty much the same age as him. Damn, I wish I lived in Miami.
Oh, well, here's a story. I'm pretty open about this. Was it 3 years ago? I was in a position where I got my car towed, like repossessed. I thought I was going to lose my house. I didn't have a job. I was like looking for a job, and it was like really sucked, and it was like the low point of my entire life. And now 3 years later, look at me, top of the world. See, look at that. You can do it. Crypto's awesome, even at the low prices we're seeing right now, which sucks. I wish it was like $1 already.
I'm like Illuminati. I bought in at 12 cents and I've been DCAing ever since, and I feel pretty happy about it. I think that people that are so urgent for the launch of Pulsechain are just looking to cash out. And do you know what? The position I'm in right now, when I get those free tokens, and if they pumped and I cashed out, I could keep my business running for another year. But like has been said, do not expect to profit off of other people's work. I expect to profit, excuse me for the noise, off of my own work. What little money I'm able to put into this project is long term. Diamond hands, staking stuff. So it's like I'm not looking to just cash out. I'm looking for the long term profit from it. And that's all there is to it. Everything else is down to me, not down to Hex or Pulse or anything else. That's just a bonus.
I mean, well, what a lot of people
Thank you, Conor McGregor.
Yeah, when one thing that people are like, I mean, maybe not everybody, but like I haven't really talked.
I'm Scottish, not Irish.
I haven't really heard it talked about. Is like, see, launch is just the beginning, right? Like we're all fixated on the launch. Like we're trying to, like a lot of people are trying to survive to the launch. Well, like that launch is like just the beginning. I mean, for me, if you really want to like get like some really good gains out of Pulsechain, you're talking a year, 2 years, right? Can you hold? You have a plan to hold and to like buy dips for the year, for the 2 years after Pulsechain launches? Like that's what everyone should be thinking. Like, yeah, we want to get to the launch, but that's like just, oh my God, okay. So like unfortunately there's a lot of people in chat that are so fixated on the launch that are they gonna sell when they break even? Are they gonna sell it like a 2x? I'm like, that's disappointing. If you could like go to launch and then actually have a plan to hold for a year before you needed to touch those tokens or even buy more, like that's a much stronger position to be in. And irregardless of like maybe it's another month to launch, maybe it's 3 months to launch. I don't know. I got in trouble like 2 days ago for fucking talking about launch. So I try not to do it. But I'm just saying, right? It's like some period of time till we launch. We don't know what that time period is, and then we're live. Okay, now what?
So,
Yeah, I mean, like, I feel like people that are bullish on the launch are just bullish on cashing out. You know what I mean? And like I said, that would be something quite golden for me in my current financial state. But that's just not where I'm at. I'm bullish on the project, not bullish on the launch.
there's this great chart. It's one of my favorite visuals, and people refer to it all the time. If anyone wants to look it up, there's even a book on it. It's called Crossing the Chasm, CHASM, and it's by the guy Jeffrey Moore. And on the front of the book, front cover, it shows the technology adoption life cycle, and it shows this like beautiful ramp, right? This like big kind of hill. In the beginning, it's innovators with like the first like 2.5%. Then you get your early adopters at the next like 13.5%. And then there's this chasm which you need to cross in order to get into the early majority. And that's where we are. And like I can feel, the major industries finally kind of backstopping this, because they also like have to, because this is where all of the disposable income that they just printed out thin air is gone. So, with that backstop, I think we'll start to see some of this, being able to actually get over to the early majority. And like that's kind of where I'm focused. Even I wish I would have, listened to a lot of the people who are a lot smarter than me about, the simple things like bankroll management. It's easy to say DCA in, but if you think you're at a certain spot and you shove a bag in, right? It's like hurts when you didn't think it was going to get to 6 cents. We're sitting at 6 cents. So I think that's my biggest takeaway. But my time frame is I'm looking at this like 3-10 year and where I think the overall landscape will get to, and this is the beginning. And I think for Richard Hart projects, crossing this chasm right here and being able to bring in this whole new ecosystem, like this ecosystem, I think will become the rails for a lot of the early majority, if this product turns out to be exactly what we think it is.
So, Captain Mango, earlier, I was laying forth a framework of saying, kind of like the birth of a project until it becomes like as big as Bitcoin, right? There's a layer, right? There's like things you do and a way to think about the ecosystem. And so, if you could DM me the name of the book, that would be awesome because I love reading. And I think I've seen charts where it talks about this several times. But like earlier, I was discussing like say like a class 1 project is like a new project just launched. Like hopefully it's going to be good, and then like hopefully it doesn't like fucking rug pull and it like actually takes off. And then you got like a class 2 project is something that's been around for a while. Maybe it's been around for a cycle, maybe like it's doing really well, strong community, like it actually has, like a use case and blah blah blah, like all that stuff. And like that's like a class 2, and then you get to like either a class 3 or a class 4 if you want to define it. I'm trying to work on the definitions where you end up going to like more mature projects that are like higher user counts. The network effects have really just taken off, and now it's like on every exchange or whatever, right? This kind of lines up with what you're talking about. And people talk about market cap, but market cap is useless. I mean, like the number itself is basically useless, is made up. But then the actual idea of how or why people use market cap as a metric to determine like a project success is like inherently flawed in so many different ways that it's just crazy that people even talk about it as a metric that means anything at all. I mean, and that's beyond like even just talking about the actual number is derived from made up numbers because people just get projects like the websites just determine what the circulating supply is, and they just remove like supply to make the number reflect the narrative that they need the supplied in the market, so they seem relevant, which is sometimes a lie in all this. So, oh,
Pretty
awesome! You gave it to me.
You know, that book is pretty dated, and it talks a lot about like early internet, like early even like fax machines and things like that. But it's pretty great, and there's even like an updated version. But I think this was written in the 90s. And I always just I don't really love to read, but I'm so visual, and for some reason this chart I was like, oh, this makes complete sense. This is exactly what the type of technological adoption curve looks like.
Yeah, I mean, so books can be dated, but it's not really dated because concepts can be translated to new industries and then new, like brought forward into the current. So you can learn right from the past. I mean, that's what people do. Like I'm reading books from like the 17th century in economics. Like those are totally dated, but they're still relevant to understand like how basic economics was formed in the earliest days. Because I'm like a geek like that. I like all this other stuff.
So I have a question for people more knowledgeable than myself. You know, I got in last November into crypto at its all-time high. Fucking whoop-de-doo. Now, I'm absolutely terrible with numbers, but one thing I can do is see the visuals. So I studied the charts over the last almost year. And what I can see from the charts over the course of the years is that round about November time, you know, everything pumps, whether it be to an all-time high or not. Do we believe that the same thing is going to happen this year with the current economic climate, regardless of Pulsechain or anything else, just the market in general? Do people see it doing the same thing it's done pretty much every year?
That was the top of all tops. I think, you know, we probably should have seen a correction in 2020, but they kept printing money. The stock market was at, you know, all-time highs. These tech stocks were trading at 40x, you know, their year-over-year earnings. So I think a lot of stuff it was a top of all tops, right? Everyone's buying monkey JPEGs, indicators, even though those are holding up all right. So, you know, my whole thing was like, I've always kind of thought that Richard was smart enough, and even knowing that the top was in last year, like he's been building a brand new product that I've just kind of been waiting for the magic carpet ride. I don't know if it's foolish or not, but just because of the product market fit and what he's designing and the problems that he's solving, like I think that whether you like him or not, like the product and the code he's proven can work for itself. And like that's what I'm most interested in. I think that can beat out the bear market if people understand the use case, the potential, and there's enough people that get in and then turn around and get more people in, and we can actually get that network effect pumping in the right direction, personally.
I mean, I know last November was like a ridiculous all-time high. Trust me, I felt it over the last 6 months, and I'm so glad that I found Hex and this group when I did a couple of months ago, even though, you know, I was down on my bag big time. You know, I still feel like I've been saved with this project. As far as what Richard's doing, I feel like I hate to use the word, but it's kind of genius, like the fever pitch combined with the bear market and just everything that's being created, everything I'm seeing on Twitter. Kind of seems like a genius move for the launch of Pulsechain when it does go live. I kind of get that feeling, even though, you know, obviously because for me anyway, because my funds are so low and so at risk, you know, I get that edginess towards my bag, but I still feel like, man, he's really playing this game real fucking smart.
Well, I definitely got humbled, right? I'm sure a bunch of us did, but you know, also there's in this game is so many narratives, and then sometimes when you got your bag, like you almost want to have blinders to some of the narratives, even though Richard gives it to you straight, everything's on the website, right? But the one thing that I thought was kind of interesting is like the Hart's Law narrative, where when everything was dropping and we're still up and hitting 18 cents, and it's like, wow, look, Hart's Law is actually working out, blah blah blah. Like those are interesting kind of narratives. Or even I have to kind of train myself a little bit more to read between the lines with Richard, right? Like and I think maybe some of the OGs were able to do that, where if Richard's calling the top on BTC, he's also calling the top on Hex. Like he's not ever going to tell you about the price action of Hex, but he's telling you the price action of Bitcoin, which if you're leaning into Hart's Law too much, you'll say that they don't correlate. But I think at these early stages, they definitely do, obviously. And then, there's other factors too that can drive down the price.
Yeah. For sure, man. For sure they correlate.
Trying to train myself
Well, I mean,
to
well, then there's also, 27 days after Bitcoin top, Ethereum top, or 16 or 17, like that, between 17 and 27 days, I forget the exact number, is like the Ethereum, that's the altcoin top. And then it's this cascading effect. Like, but we've seen Hex is not immune to the overall market, right? It can like fight against it. It can resist against the overall market in the micro, but in the macro, which is what we're seeing right now, it can't. Like, it's too much. Hex is not that large to fight against like Bitcoin and Ethereum and like every other thing shitting like for fucking 6 months.
For sure.
I think
and hopefully only for now. I mean, I asked this question quite a long time ago. I mean, how long is it going to take before, crypto, or more specifically, Hex, and hopefully Pulsechain does this, where we can break away from that, we can disconnect from that horrible, horrible market that is essentially controlled by hedge funds.
The only way to do it would be the lead. Like, we would need to have so much economic value. I'm not talking about market cap, because that's bullshit. I'm talking about economic energy and exchanges on every exchange. It's the highest traded asset on every exchange that Bitcoin's on, and then it's like now it's a leading player, and now like maybe Hex has an opportunity to be a leading player and lead the market. Until that happens, we're following, unfortunately, because we are definitely not that, right? We're still getting shit on by third-rate fucking YouTubers and stuff.
Even that's like engagement farming, right? Like you look at Eric, and Eric's like buying the bottom. He's asking Richard under his breath how he can buy in. So at what point does that kind of fade away? And I have to believe that it's when, it's almost like when you punch a bully in the face and they're like, oh yeah, oh, you think you're tough, you got any more? But they're like kind of wobbling, and then they don't know that you're actually been studying with Mr. Miyagi and you come with the roundhouse. Like, I feel like Richard's coming with the roundhouse Pulsechain, and then it's just like who is listening to you guys anyway? Like, when I go on to YouTube and I see some of these whatever thumbnails, or just like the algorithmic, stranglehold that these guys are in, it's like I don't even understand who's really potentially listening to them. But then again, like the more that I've even been around the NFT space this year, I realized that, not saying that I know more than anybody, but I would wager probably 90% of them don't really even understand how the blockchain truly works, or like have, I guess, the interest to go and do the research, to like do some of the things and understand about liquidity pools and delegated proof of stake and how nodes work and how mining really works. Even though that they're fully invested in the ecosystem, they'd rather have the VCs, bring in some celebrities and be like, this is the token, this is the thing that you should buy. And they're comfortable with that because they can kind of trust that the normies and everybody is backing it up when they see it in the news, which is effective, right? But I don't know. I think that these products, like we're here to design real products that can help with this transfer of wealth, and I'm trying to be at the beginning of that. So when they do come in, specifically the way that Richard's designed this, like we're the beneficiary of that. And if the liquidity's low, like we'll pump and we'll never give a shit about 6, 20, 40 cents ever again. So fingers crossed.
I suppose my ultimate question is, does Pulsechain further down the line can it allow us to pull away from that shitty market that crypto exists in right now, which is basically tethered to, the stock market, etc. I mean, do people believe that? Because that's what I want to see, is that it pulls us away from that market moving forward.
I think the more we pull away, the more they'll pile in, because they'll see that they don't have control of it, and they'll try to grab for bigger stakes.
I mean, when you look at the spectrum, like I was talking about before, like Pulsechain is like at the beginning, hasn't even launched yet. Now, when I look at the market and when I look at like say Pulsechain and HEX, I try and visualize if it has like the fundamental things necessary for it to be up there with Bitcoin, right? Like, is it an asset that is like worthy of like say 1 billion people having it in their portfolios? With HEX, I think that's possible. I think it'll take a long time, but I think it's absolutely possible as a financial asset. It can be, say, in like everybody's like 401k one day. Like, how long does that take? I don't know, 50 years. Without talking about time frames, you say, is it possible? With a financial asset, it has yield. It's permissionless, trustless. There's no admin keys. It just works. Nobody controls it. There's a large holder of coins, but it's being diluted over time, right? Which is good. Well, that'll take a long time, but like fundamentally, it has the elements of it for it to be a very strong financial asset that everyone holds in their 401ks one day. I don't know, 30 years from now, whatever. We're on the way. And then so you have Pulsechain, layer 1, fork of Ethereum. There's a lot of reasons why people would want to use Pulsechain. There's a lot of reasons why people hate it, but there's a lot of economic reasons why people would adopt it anyway. So that's something that can totally be viable 10 years from now. Very useful, right? Because Ethereum 2.0 sharding is like literally like 10 years away. Don't let anyone blow smoke up your ass, because I'm here to like deflate that. Unfortunately, I'm like the dude who has to like try and think in reality. Where Vitalik says 6 years for sharding, it's probably more like 10 years with delays, which is reasonable. And then the merge doesn't do shit for Ethereum fees. We all like know that. We've talked about it before. Now, does the greater market understand that Ethereum 2.0, the merge, doesn't do shit for fees? Probably not. I think they're all going to be very, very disappointed. And that's an opportunity for Pulsechain, right? But it has the opportunity. PulseX, similar financial asset, deflationary, major exchange in Pulsechain. If Pulsechain is successful, PulseX will be successful. Like, yeah, $1 billion asset, yeah, no problem at all. And that's how I think about it, because I want to be in those assets that are like long-term, 10 years from now, dominant assets, and sit on my hands and not fucking trade.
I mean, let's face it, the reasons that people hate Pulsechain, something that hasn't even launched yet, are purely emotional. So for me, that's a misnomer, and that will dissipate over time. So that's not even something I consider as people hating on it. That's just like, it's not even launched yet. How can you hate on something that doesn't even exist?
Well, I mean, they're trying really hard though to do the impossible. Good for you. You end up loving it anyway, I hope.
I mean, that's like hating on a child that's not even been born yet. You know what I mean? It's ridiculous in my mind. It's just purely an emotional stance. But yeah, I'm just curious because I'm not knowledgeable enough in the crypto and blockchain space to understand if it's a thing that Pulsechain could move away from the status quo like fully. I mean, it already is. That's clear to see from the hate that it's getting, etc. That's already a thing.
I mean, yeah. So one of the things that Pulsechain has going for it that is actually like probably a negative for like a lot of people is like the lack of VC funding and like blah blah blah. So like a lot of projects, like Solana is one example, it gets brought up all the time. Huge VC funding, huge failure, like it fucking sucks all the time, but it has huge VC backing that's propping it up, and fails like every month, like just like it's shitty, right? Because it's in the news and it like breaks like all the time. Pulsechain doesn't really have that because of where it's come from. It does have large holders, like organically, basically, because a lot of Hex people invested in PulseX and Pulsechain, so organically it has a lot of large holders, but it doesn't have a lot of VC, which is good. So it's economically more decentralized, even though a major player has a 90%. So you just kind of have to kind of go with that, right? For the reasons we've already talked about a billion times. But so because it's organically driven from basically a grassroots community, majority funded or majority holding, it's more permissionless. I mean, like permissionless is a thing, but it's, you know what I mean? It's like, it's more decentralized in that way. It's centralized in the validator set of 33, but even those are decentralized more than, say, even Binance. Binance is incredibly centralized. Like I could run a validator node. I don't need Richard to like sign off my waiver to be a validator. I literally just spin up a validator node. I come on this chat and say, hey, I'm going to be a validator, validate to me. And then I have a fucking 5 or 6 billion delegated to me. Yeah, I think I could probably do that. And I didn't need to like ask permission. I just did it. Right. A lot of these other blockchains, they pretend to be decentralized, but they're basically funded by VCs, controlled by VCs. And we always know
Yeah,
how that goes, right? They dump on everybody else who comes in later.
for sure. Yeah, for sure. I mean, I think organic is the key word there, and I think it's something in this day and age that is coming into more and more fruition, certainly and I spoke about this the other day, how it's funny and almost prophetic the way that the Pulsechain is forking Ethereum, and we've got to this point in society where we're kind of forking, where you have to have almost a parallel society running. And I suppose I'd like to think that, Pulsechain in the crypto sphere will be that parallel society where we can all live more happily outside of the centralized system, which is where, let's face it, I mean, I hate even talking about Bitcoin and even Ethereum to a point, because essentially I look at them as compromised, really. I just look at them as compromised. I love how underground, let's just say Pulsechain for the overarching sentiment is. Like, I revel in that aspect of it, because it can be that parallel thing to the commercial, centralized, fucking compromised bullshit that is the rest of crypto.
Yeah, I like the underdog story myself. I mean, I believe that Hex, PulseX, Pulsechain will win in the end, but I absolutely love the underdog story. I love the fact that I'm here now, and then 5 years from now,
Dude,
we're winning,
it's not
and I'm like,
it's not an underdog, it's the other dog. Not the underdog, it's the other dog.
yes. Well, I just like that because I mean, I believe we're going to win in the end, and you can define win however you like. But I think we'll be fine. And then we were here at the conception, and then now we're like wherever we are, and I just like that.
Well, I like the like much as I dislike, like in my industry, if I want to call it that, although I try not to be part of that industry, is the fitness industry. Like the Beachbody. I don't know if anyone's ever heard of Beachbody, doing Insanity and all that shit. Like the guy that ran that, his main concept was, I'm in competition with no one else. Like, I'm not looking to win against anyone else. I'm just looking to win. And I kind of get that sentiment from Richard, although in his current marketing strategy, he likes to, you know, shit all over people because people try to shit all over him. So I get that. But it's not about beating anyone else, it's just about winning. Like, let the rest of them do what they're going to fucking do. You know what I mean? We'll do what we're going to do.
Well, I mean, just imagine. Okay, so Pulsechain hasn't even launched yet. 5 years from now, the total market of cryptocurrency in general is going to be, I don't know, like 10 times more than it is now. And we have some like market share of that, which is well, hopefully quite substantial, but who knows what that number is. Like, and that's enough, right? It's not about like you got to take out like, you know, you put up a gas station on the corner. It isn't like you have to like burn down like every other gas station in town to succeed. No, you just need to be a good gas station that people need in a good location, and you're fine.
Yeah, man. Yeah, exactly. Good analogy.
Wait, but hold up. The thing is, even on top of that analogy, right? Like, we've figured out how to actually become the Tesla charging stations, not the gas pumps. So, you know, Elon owns all the superchargers in America, right? Like, you know, the fact that we're in such a supply chain crunch and natural resource crunch for all these processing chips, and you know, even in I'm doxing myself, but even in New York, right? Like, they put a 2-year moratorium in mining Bitcoin and stuff like that. So, you know, he's creating a product that is a 2.0. It is taking everything that we've learned for the last 13 years, 7 years, you know, Bitcoin and Ethereum, and he's making better products. Like, that's what we saw with Web 1, right? We saw Uber and Airbnb, and they didn't ask any permission. I mean, they built, you know, these apps on top of, you know, Web 2, but you know, he's building. He built his HEX on top of the rails of Ethereum, and now he's going and completely redesigning, you know, BTC and creating a better store of value and creating Pulsechain. And I just think that we're at this second iteration at the end of another cycle, and so getting in on the ground floor of the cycle and looking forward, like you know, a 3 to 5 year pitch. I normally take like 12-month pitches. Though when I was younger, like, I was able to see Steve Jobs and coming back to Apple was super bullish. I was a kid, told my mom to shove into it with my college tuition. She said, no, you have to go to college. I would have been a multimillionaire, whatever. But that was the first time as a kid, I was like, oh, you're able to do this, right? Saw with Elon, you know, was able to get some Tesla shares and stuff like that. So, you know, I see it again here with Richard, and I'm just finding my own, you know, grounded sort of understanding the product, and then trying to look out and project, okay, what's the product market fit? What problems is this really solving? And I think, you know, when you alleviate, you know, those pain points, that's where you get rewarded hand over fist, whether they like you or not.
Personally, I think what Richard doing is streets ahead of, not for lack of effort, but I think it's streets ahead of what Elon's doing. Like, he has this project has the potential to accelerate progress for humanity much faster than Tesla ever could.
Well, I mean, Elon does have like a 20-year head start because Richard, although he's been retired since 2003, he just really started these ventures 2 years ago. So, we don't even know what's going to happen in 10 years.
I think Richard's best product or project is still to come. I don't think that I think we're a couple iterations away. I don't know, maybe that's 10, 20 years, 15 years. Actually, if I had to guess, I'd say 10 years away from
I would
that.
agree with that.
I don't think we're doing anything like that's changing the world here with Pulsechain. What I think Richard is really good at to this point is taking what's out there and making it 10 times better. I'm looking forward to when Richard comes out with a product that's totally, totally different, like that's totally revolutionary. And I think he has it in him to do that. And
I was just about to say that. I believe he has it already. He's just not done doing it.
I think in order to do that as well, you got to have experience. You got to have some, my personal opinion, you got to have experience, you got to have money, you got to have a team. And, that's what he's been working on, and he's been putting out good products. So, with this wallet coming out, that's going to, he's not reinventing any wheel there. He's just taking these
you don't
shitty
need
products.
to reinvent the wheel. You just got to drop one proper freaking project on the blockchain, which he has done, because you look at the rest. You look at the rest. They're falling apart one by one. Who was today? Blockchain's clock was like a half an hour behind. Solana, I think. They were back ordered. You don't need to invent something new. Just take whatever it's there and make it better.
Man, I think what they're talking about is once Richard has conquered crypto, doing something that's just like so mind-blowing that it's like, oh my God, this is so awesome. But he's in the process of reinventing crypto and like dominating crypto, which is going to take a little bit of time. Because we haven't
I think I just answered. I think we just answered my question before. Like, what brings people back to Hex on Ethereum? And I've seen this happen. It's a terrible example, but in NFTs, right, where there was a founder of a project and they launched something super successful, and then what people do is they go through their wallet and they go look to see what other projects they've done, right? So I think as soon as people kind of catch wind and see what's happening on Pulsechain and with Pulse, I think people will then do a little bit more. Obviously, Hex will still be a product on both, but I think people will then they'll have the trickle down effect, and I think people will start to understand a little bit more of the tokenomics, and for the smart ones, see where the value lies on all chains, and then the rising tide will lift all yachts.
In Parkway, like, I'm not in the business of arguing and stuff, but why is it that you take everything I say and spin it into a negative when you're basically, I was saying the same thing that you were, right?
Bro,
But it comes out of my mouth. Whatever comes out of my mouth,
here's the thing.
you just want to say negative.
No, you like to see it negative. Maybe it comes over negative, but it's not negative. But here's the bigger picture, though, right? We're about to launch something which is highlighted as a hard fork. It's going to perform better than its original version, right? So, going into tangents that Richard should do this and Richard should do that, I think Richard should stick to the game and just.
I didn't say that.
I'm not saying you're saying it.
I think I have the right to defend myself when you say things that I'm not saying. So I just.
I don't have anything against you, but you know that, right?
Well, I know that, but I don't like when people don't, when I say something and then they're twisting it around. And one thing is, and I got to work on this myself, and I should follow it. I need to use it myself. I shouldn't have said anything, But if you don't have anything like positive to say, we got to learn to keep some of those things to ourselves sometimes. And I need to take a bigger dose of that medicine too. But like last week, I said something, and then I'm just gonna drop it. Never mind.
I mean, Benjamin.
Benjamin, it was me that asked the question last week and you jumped on me about financial advice, and everybody fucking hopped on you before I could actually speak back to you. And then I believe you actually get banned from the chat for a couple of days when I actually wanted to talk back to you. So I was a little upset, and I spoke to someone about it in DMs. I was a little upset that I didn't get to respond to you before everybody jumped in, because I think it could have been a learning moment for everyone and how to deal with, because I respect you for how fucking passionate you are about what you say. So I get you, man. I get you. I get how harsh you are. I'm like that myself when I'm super passionate in my work and what I'm passionate about. So I like to listen to you.
I mean, here, so somebody who's outside, and I'm just listening to like you guys talk, and I'm like, I think maybe we need to like chill a little bit. I don't know, Benjamin. I mean, you're cool, and we can just let each other talk, and we're good there.
Yeah, but it's also important to listen, man. Like, and not just like I've noticed a few times in this chat, especially like Papa Boner's a classic. Like sometimes when he speaks to people, they get super offended. I've seen it quite a few times, but he's just telling them fucking hard truths. It was like when Benjamin said to me last week, I think it was I asked a question, he's like, yeah, but seriously, you're asking about financial advice. And I was like, well, not directly, but yes, you are correct. Ultimately, I am asking about financial advice. Do you know what I mean? So what he was doing was basically digging down to the core of what I was asking about, although it wasn't directly what I was asking about. I just wanted to make that clear. It's just like, for communication purposes, I think it's important that people just take a breath before they start to respond. And that goes for Benjamin, for me, for anyone else.
I mean,
hey, Didi, I want to tell you this, right? Because I respect everything that you said just now. And I haven't told anybody really what was going on with me that day, because, I didn't want to make myself look bad. But since you had the courage to tell me, and I want to tell you this, that day, the way that I was, normally I that was probably the most weirdest my voice ever came across, because I had been drinking. I quit drinking like it had been 9 months, and I drank for the first time in 9 months. I quit drinking, and what's that?
You slipped.
Hey,
Well,
just
yeah,
let him
I'm
talk,
just
man.
telling you guys. I didn't want to tell people because that's my personal business. But I consider you guys my friends and stuff. And that day was kind of out of character for me, So, like I said, I've been
What's up,
holding
guys?
that tight
Ask a
because I was
question.
yeah.
Not to interrupt, Benjamin.
Go ahead, Benjamin.
Answer
Finish
your
your
question.
statement. Finish your statement.
Hey,
Filipino.
hey,
Let him
Philip,
finish his statement.
yes, can we let him, please?
So yeah, that day, like the next day I was kind of offended myself, because I'm like, damn, I come in here so much and, I spit all this stuff, and I took a big lashing for that. But see, that's the problem. That's why I quit drinking, because, just it's one day out of character. Right. And I guess, that's why I quit drinking, is because I don't like myself when I'm like that. And people tend not to like me when I'm like that. So, like I said, just in closing, I hadn't said anything to anybody about that because I was ashamed, and I didn't want you guys to think less of me. But Didi,
We don't.
I just wanted to let you know that was the case, and anybody that's listening, that's actually what happened that day. And I apologize.
Listen, brother. Sorry, can I reply to him, because it was me that he was talking to, just quickly? Benjamin, zero offense to anything you did that day, and that's what I wanted to say to you. Is like, I would have a drink with you. Obviously not, not anymore. But I would sit down and have a beer with you any day, brother. Okay, I took zero offense to anything you said to me that day whatsoever.
All right, cool. All right, Filipino, you wanted to say something.
Well, I guess my final words is I just got in some respect, all love from the community. Thanks for giving your testimony. But because it can help others. So respect to that. So question, if I wanted to spend $555.05, for example, on a stake right now, 15 years. Okay. My question is, if I do a 555 right now as a strategic player, I don't care about, the fees to do it, transfer fees to do it, before the launch. So I know I'm going to have the
Ethereum's
benefit
cheap.
of getting.
Ethereum's cheap right now. You're gonna do a stake, do it now.
Right. So regardless of like the fees of what the price is. So my question is specifically, in 15 years, will the benefit of all the gains be more than the Ethereum gas fees to cash it out in that time of the future?
That's an interesting question. I would say no, because it looks from my minor knowledge that at some point in the next 3 to 5 years, Ethereum will fix their gas fees, from what I've heard from more knowledgeable people than myself. I believe Y Gamma talked about this. But I mean, there's no guarantee. But a stake that size, it should kind of be a non-issue.
All right, I'll say one thing because I understand like what's happened with Ethereum. I would only do 15-year stakes, like on Ethereum, like right now. 500 is kind of on the low end, but I think it's still doable. But it's only if you believe that sharding will actually exist on Ethereum when that stake comes undone in like 15 years, right? Because sharding, to explain it to people who maybe don't understand what Ethereum is doing, they're creating 63 additional copies of the full system state of like empty capacity of Ethereum. So Ethereum has one like capacity that's overflowing right now, and what sharding is creating 63 additional like envelopes or balloons of capacity, right? That all the transactions can like fill up, right? Which is going to increase capacity for the overall network, decrease fees. Ethereum is going to be worth whatever it is, like 100 grand or whatever it is at that time. But theoretically, if that happens, then an in stake would be like actually okay, right, to do. I mean, maybe at current levels, maybe more than it is now, maybe less, who knows? But like a 15-year stake is doable. I'm doing 15-year stakes. $500 is a little on the low end, but maybe it's okay.
Anybody else wanted to respond to that before I gave a response or asked another question about that? Okay, so here's my game theory. Everybody knows, this is one of a unique time, not just to accumulate hex, but it's always to accumulate these T-shares. So, shout out to HEXdailystats.com. I'm always on HEXdailystats.com because you can really see how much T-share price is within the moment. The T-share rate, T-share price, payout per T-share, and this and that. So I say that to say this, because I was like, I can do one $2,000 stake for 15 years. But what happens if I just broke it up into 4 555s separately for strategic reasons? So God forbid in the future, if I had the emergency end stake one of them in 10 years, I didn't have to do the whole entire bag per se. and I'm getting the duplicate. But of course, I'm just giving the perspective of it because you know, this is not only a time for everybody to understand. Like, it's not just about hex price going down. It's getting the extra discount on the hidden gem of this community, which is T-shares. So, you know, it's legendary. You know, you better get in where you fit in. Like, you know, these T-shares was once upon a time like 8 to 10 grand. Don't quote me on it. But now it's like $1,000 and some change, and it can still be going down. But bottom line is, don't just get Hex Liquid for the duplicate. You might as well get your stakes in and think of the future, because this is the last time you can put a little bit of money, even if it's a $555 stake for a 15-year, not worrying about the fees, knowing you're going to get the duplicate. Come on. But this is my train of thought because I'm trying to onboard somebody. Well, I already did. And we're just trying to game theory on the best strategy on how he wants to diversify his play.
I would never split $2,000 stake into 4 for 5,555. You're just shooting yourself in the foot.
I would concur.
That's kind of where I'm at.
If you're
Just keep on
unsure,
elaborating on that for me.
well, it's just you're making the cost of end staking go ×4, right? So, like, you realize at 100 Gwei, that's 1.4 ETH that you're going to have, right? So at some point, you're going to have to pick up 1.4 ETH, right? If you do for every 5,555, right? Just as an insurance policy, right? So you
What was
look at
that
that. And
metric?
say, you look at that.
Perfect. So what was that
Yeah.
metric? You said 100 Gwei. Is that a metric that you use to determine the end stake? No. The Gwei is
Yeah,
the
it's an easy number, right? You know,
Oh, okay. So you're just using it as a round number, but you don't have like I guess the S load multiple is determined by is dependent on the stake itself, right? Like you don't have
it's basically
That's added in.
there's
That's added in already.
yeah, that's
Contract limit.
it's all factored in there. Yeah. So I have a chart that has different Gwei amounts and how much it's going to cost in ETH and the stake, right? I have like 60 Gwei, 100 Gwei, 140 Gwei, maybe something like that. 200 Gwei. I forget what the numbers are, but I have a chart that says, like, you know, depending on the gas price, how many ETH do you need? And then I have another one that says, you know, what does that mean, right? Because what do you think the price of ETH is going to be? And then it will calculate it out, and it gets scary at times, right? If you get to the really, really large numbers. But I think 100 Gwei is a reasonable number, right? Like normally we like to end stake under 60 would be ideal, right? In most of the times, if you can get it, you know, in the 20s, awesome, or less, you know. But you know, just from last year, I think, you know, we've seen that, you know, if you can get it under 100, you know, maybe near to 80, then you're pretty good. But you can't always get that. So yeah, you need to have 1.4 ETH, basically 1.38 ETH for every 5,555 stake that you have, right? And so, you know, whatever that is, you know, $2,500 or no, $2,800, whatever that is now in ETH, that's, you know, it's not chump change. So, and then what are you getting, right? If you want to hedge your bet against the 5,555, there's other ways to do it, right? There's other insurance policies that you can basically use to be able to get out. Yeah, so I would agree, you know, 100% with Elmire that, you know, don't split it up, right? I'm even advocating. A lot of people have been, you know, the community started off when it was cheap with these ladders, and you know, I saw the ladders, but then I looked, you know, I look at the efficiency side, and I'm like, well, I'm not going to do a ladder that's like every month or every 2 weeks or whatever, you know, some people are doing every quarter. It just seems silly. It seems like a waste of you know, of money, because they're all extra end stakes, right? If you do if you did a 10-year ladder and monthly ladder, then that's 12 stakes for 10 years, right? You're paying 365 times 10 times 12, right, to end those stakes. Or you could just do one, right? Save yourself the times 12, and then if you wanted to get paid every month, you could just stake whatever you're not going to use, like month by month at that point, right? And then it's like nothing, right? You're saving your end stake fee is a tenth of the laddering, right? And then if you just look at what we've went through in the last year, right now we're back at prices that we haven't seen in a year. To me, I think people should be planning on staking and then having to wait an average of 6 months before they actually sell if they want to have an optimal exit price, right? Maybe even up to a year or more.
Can I respond?
Sure.
All right. So thanks for you guys' response. Again, I'm polling when I ask this question. I'm asking a perspective, and I'm using these numbers, to use. And I'm using 555, for the example, for 15 years, and and then if I break it up, whether it's 2 to 4. So is it the same answer if there was $1 million? And let's say if I had $1 million, is it a bad idea now to just split it up in 2 stakes, $500,000, $500,000? Does the answer different because of the amount of money? But just want to keep going with what I'm talking about and to see if that makes any
Well,
difference.
I mean, the end stake of a 15-year stake at $1 million to current prices is so insignificant for the capital you're getting at the end that it probably doesn't make any sense. It's like sub penny to like a normal person, so it wouldn't matter at all because like you could drop $100,000. Well, you wouldn't want to drop $100,000, but you could drop like $1,000 on an unstake to unstake in 15 years, $100 million, right? Pretty insignificant. You started with the example of $500, which wouldn't make any sense at all. Obviously, it would be like 2,000 would be the answer, which is what they were talking about. As you increase the number of capital input now, then the amount you're getting at the end in 15 years is right. Like that percentage is going to be smaller and smaller and smaller. So, I mean, I don't know, you can do the math on that and see if it's worthwhile to you, which I would recommend everyone to do.
Okay.
Anyway,
So thanks for this response. Again, I just want to stay right there on topic. Let's forget about splitting it up because I guess we went straight curveball when I talked about splitting up 2 to 4. So let's start with a basic original question, which was $550 15-year stake. Is the fees are going to be more than the Ethereum versus the profit? Or do you think that it's actually a good play in 15 years, the profit throughout that? Even because now it's duplicate, so it's like a double bet. But that's the
So can I
question I
ask a
want to stick with.
question? Can I ask a question towards your question? The reason for splitting them up, so there's scarcity that the money might be needed? Filipino?
Was that a question? I don't know, or a statement? I
Yeah.
didn't know.
No, that's a question. So is the person who wants to invest, do they have scarcity towards breaking the stake? That's why they want to
No,
split
not
it
at
up?
all. He wants to know. It's just that's the question because there's it's relative right now. People are always talking about the Ethereum price in 15 years on a 55-year stake, and people are talking about the specifics on like, oh, it doesn't make sense if you're only doing like $5 or $50 per se because the Ethereum price and how much you actually make might not make sense.
I
So,
mean,
but
if
yes,
you want to think, if the person wants to
but
think
he doesn't want
outside
to
the
unstake.
box, if the person wants to think outside the box, but still be associated with Hex, I would suggest the layer 2 of Hex that gives them the freedom of having a stake and being able to, you pay extra for it, right? But it just gives you that, so the community doesn't get hurt, is what I'm trying to say, right? If there is an end stake, that way the stake remains intact. It's just the ownership changes.
I mean, as a newcomer, I've got 10k hex staked on Ethereum, and that is literally, well, I've got it staked for 4 or 5 years, and that is the only hex I'll be staking on Ethereum. It seems sensible to me. Everything else will be done on the Pulsechain, where the ecosystem benefits hex and staking, because that's what it's designed for. I mean, that's where it should live.
Stake now and get the copy. Why not have both? Because you don't. It's a good hedge, huh?
Yeah, I mean, I'm going to get that, but the thing is, the stake gets copied over, and I mean, I don't want to lock up all my hex. Do you know what I mean? I would rather wait and then either keep it liquid and benefit from, maybe take some profits from it if it pumps high, but I would rather, do my staking on Pulsechain when it launches. I mean, that just seems like the logical thing as a newcomer, that is, not as an OG.
Yeah, I think it depends on how big you set it out. I was kind of in that same position too, and then started to kind of look at some of the yield, and I'm really excited about my daily yields with the amount of t-shirts I was able to accumulate.
Yeah, but surely, I mean, T-shares as they, I mean, I could be wrong in this, but you could get a much better T-share rate on Pulse chain when it launches if you have stuff to stake fresh on Pulse chain as opposed to it just carrying over.
But isn't there the idea that those T-shares won't pay out as much the more people that are staked over there? So if there's only 10% staked on Ethereum, if there's 30% staked on Pulse, you won't get the same amount of payout per T-share.
Well, I just want to say my final thoughts on it real quick. Thanks for you guys' comments. But I have 3 or 4 nephews specifically that I want to individually gift that are like under 10. But I want to know the perspective. But I'm giving them, a low amount of. That's why I asked the question about the 555. But because I'm just wondering, how low does it have to be? $1,000 minimum for the math to make sense, for the 15-year. But thank you. But this is the way I can give back to ones I really love, is to be able to give them a 555. It might not be much money today, but I bet your ass in 15 years when it's released, it's going to be more money than the fees. And that's what I think. Overall, it's going to be more money than whatever Ethereum fees.
Yeah.
But we'll see what happens.
Closing
It'll be even
comments.
better on Pulsechain, I presume.
Pulsechain solves this. Right?
Yeah, I'm saying do the 15-year on Pulsechain, so that your family, when they get it, don't have to deal with Ethereum at all. With $500, because that seems like what you do. Yeah, if I was going to do $500 for my kids, I would do it on Pulsechain. I would not do it on Ethereum.
And then just to add to that, if you set this up maybe during that 24-hour period before the bridge, then you might be able to gift it to them at 0 cost basis, right? Because it won't have a value. So you can gift it to them right now, right? Talk to a CPA or whatever, tax professional, and see what you need to do. But basically, have it written down that, hey, I gave them this gift now at $0. And then that way you don't have to deal with any kind of gifting rules in the future. It's tough to do.
Oh,
No,
so
thanks.
staking
Thanks for
your
the. Just
Sorry.
want to say thanks for the answers, guys. Again, and I was using those low numbers, for very specific reasons for other people that are listening, because a lot of people don't have that much money, and so
For sure.
if that was the play, because realistically, look, only what 90% of people, there's only 10% of people in the world that has at least $10,000 in their account. Let's not talk about poverty and on the line, but bottom line is like there's instead of spending $500 at the restaurant, or on Uber Eats in 2 days or in a week, that $500 could have went to a 15-year stake on some potential stupid life-changing gains. And I guess that's like the other thing I'm pushing, and the onboarding for somebody. It's just like, man, because the reality is money's relative, and the reality is the lower the money, the longer you got to wait. So yeah, life-changing gains for that low, but yeah, the more money, the less. But for anybody that doesn't have that much money, a $500 bet can take you a long way with HEX.
Sorry, I just want to run something back quickly. Sorry, I don't know who said it because I'm on my mobile and I'm walking, but somebody said there was a huge benefit to staking during the 24-hour period before the bridge. Can you clarify that?
That was PulseX talking about if you're moving money from one entity to another entity during the 24-hour period where there's no cost basis for any asset. So like if I was to gift my whatever tokens to you, I'm doing it at zero. So in theory, I could give you infinite amount of money, like infinite amount of coins at zero value, and then now you own them at that $0 value. And now when you own them, now your starting price is zero. The problem is you got to set that up so that it actually is legal in your jurisdiction, which is obviously not something. It's outside the scope of this talk.
Well, laws are there to be observed, not obeyed. Looks like putting my big stakes out is going to happen in the 24 hours before the bridge.
Well, that's only beneficial to you if you were going to transfer them to some other entity, not for you. But you can do, like, if you stake during the 24-hour period or like after, it doesn't really matter for you. Like, it's only if you're like giving it to somebody else or something like that. Yeah.
Yeah, I don't think you technically don't need to stake it either, right? You can just transfer the funds into a separate wallet or a separate address, and that'll be sufficient.
Yeah, I mean, at the end of the day, it's just about wallets. There's no names assigned to anything.
Well, I mean,
So
whatever. Yeah. Okay, go ahead.
Yeah, as I say, my previous strategy would be get a separate hardware wallet, set up some accounts for everyone you want to gift, right? If that's 4 or 5 accounts or 20 accounts, whatever it is. But I would get a separate hardware wallet, set up the accounts there, right? Label them, move, that way on the first day when it launches, you can basically go and fund all those accounts, right? You put your HEX in there on Pulsechain, you put some Pulse on there, maybe you put some PulseX on there, just for fun. Give them kind of a mix of mixed, assets. But make sure you have enough Pulse on there to end stake, which is like, a few, basically. 100 should be more than sufficient. But yeah, you do that on day one, and then you can still claim, because like you said, the blockchain doesn't know who really owns these addresses, right? So you can still hold custody of the keys to that wallet, and basically control it up until the end of that stake, right? And you can claim that you gave it to them at the beginning, right? You have it all in writing. You agree to that, and do whatever you need to in your jurisdiction. But you still hold custody, because you're not going to give it to like a 2-year-old or something like that, right? That doesn't make any sense. So yeah, you just hold it, and then when the stake comes due, there's enough. There should be enough Pulse in there to end your stakes, so you can go do that, and then you can transfer all the funds to a new hardware wallet when they're, let's say, 17 or 20 or whatever, whenever the 15 years is up. You basically get them to get a new hardware wallet if they don't have one, and then you just end stake for them and transfer the funds to them, and they have to claim the taxes on the end staking and any gains, any capital gains that might have happened in that 15-year span or whatever time frame it is. But that way, it's simple. You're not remembering 20 different seed phrases. You separate your wallets from there, so there's not any cross contamination. Fund
Hey,
that you have
ProFX,
to claim and all that.
one thing is like if you gave them at zero value and they just like take possession of it, I wouldn't think that would be a capital gains because they already own the asset legally if you did it properly. So there wouldn't be capital gains until they sold.
I'm just saying if there's something, if there's some other appreciation, if they're just transferring from the wallet that you have custody of to the new wallet that you gave them, that shouldn't be a capital gain because they're still going to claim that they owned both wallets the whole time, right? Even though you kind of had custodialship of the one, it's still kind of in their name, right? And so it shouldn't be taxable.
ProFX, quick question for you. So the solution to the problem with layer 2 of Hex, which solves it with an NFT, what do you think about that? That eliminates a lot of these problems, no?
It makes it makes it easier. So it makes it easier in one way and it doesn't in the other, right? You still have to worry about who's going to pay for the gains, right? And that's that's a whole other question. That'll be interesting, especially if you're gifting it. It's going to be especially interesting because who's going to pay the capital gains at what price, right? Now, 15-year stake.
Yeah.
How much? If you transfer it to them in year 10, how much of that appreciation do you pay for versus how much appreciation would they pay for, and how would you even calculate that?
So you have the capital gains of the asset that you staked, and then you have the closing price of what you sold it at, and those two values are known. The math is pretty easy because if you say it was an NFT that you're selling, you are getting a value of X, and then you staked it and you owned it at Y, and then so you just add those two numbers together. It seems complicated, but accounting wise, it's pretty easy.
If you're gifting it, right? If you're not buying it, if you're gifting it, I guess you could just pick whatever price you want. Say, hey, I'm giving it to you for $1, and let them pay the capital gains.
You kind of have to do market value. You're getting in trouble if you tried to sell something at $1 when it was really 10,000. That's a slippery slope you don't want to go down. I would imagine. Not legal advice. I'm not a lawyer. I'm just saying.
With lien sales on a car, if a car is not on the property for a couple of years, you have to do a lien sale. And you have to post it on auction. You have to advertise it in a newspaper so people can come and bid on it.
I don't think you'd have to go there necessarily.
Papa Boner, when he was talking about how when you sacrifice, you give it a sacrifice at zero value, which makes sense because you didn't get anything in return, and it has zero value when you get it on the other end, and blah blah blah, and that's all good. But if you had an asset right now, it has $1 value because it's a market price, and you gave somebody else X amount of those tokens at some price that's known because it's on a bunch of websites. And you can't claim that as zero value. I don't think legally you'd be able to get around that, honestly, unless you really want to try and go to prison.
Every one would be like an NFT, which is like a piece of art, right? So one piece of art is different than the next.
Well, this one is different, right? This one is different because it holds the code itself holds the contract to a liquid asset that could be liquidized, right? After 50% of its stake time. So that gives it automatically a value. It's not art anymore. That changes the thing. But the thing is, with
the NFT, however, in between the time frame, you could, first of all, it's DeFi, right? So as long as it's DeFi, it's untouchable, according to a lawyer that is specialized in crypto. So that's that. But as soon as you step out, then you need to declare stuff. Now, there's also a way around it. Obviously, I'm not naming names, but the rich do it too outside of crypto, and it's called having a loan, right? So as soon as you have a secured loan, you become non-taxable. There's none to tax because the money is not yours.
Well, another way to look at it, and somebody recently kind of just gave me this idea of an NFT, and I don't know if it's illegal, but so anything that I say is not financial advice, but essentially we could write deeds in our own contracts, like the banks do, not a CD, but a bond, if you will.
Okay, so here's an example. Here's an analogy. I'm like really good at those right now. So say you had $100, US dollars. Then you put that in a painting and you drew a picture on it. Right? You literally have $100, like literally like inside the painting. You painted $100. You painted a photo of your mom, put it in a frame, put it on your wall. You sat on it for 5 years, and then you sold that painting of your mom with $100 inside of it for $5,000 to your neighbor. What would be your capital gains? Well, you put in $100 and you made a painting out of nothing, but then you sold it for 5,000, but the $100 is still inside of it. I think that you'd have what, $4,900 capital gains on that sale, plus the $100 that's inside of it. Kind of minusing that. That's what I'm saying. That's kind of like the
I
NFT
think
situation.
Gamma, I think in art, when you sell art, I think you don't. I'm not sure, but as far as I understand, you don't. There is no taxable event. It's art.
It's property. It's sold as property. Art is property.
Yeah,
At least in my jurisdiction, it is.
right.
It's not that it's not a taxable event. It's that the appraisal of the value can wildly change, right? And you can magically change it from $1 to $1,000 back to $5 as you trade it. That's the trick to the art, right? Is that it's the value is in the eye of the beholder, right? Whatever they want to say they paid for it, right? So
Yeah.
or whatever they pay for
Yeah, I
it.
mean, so technically,
That's
take my analogy. You put $100 into a painting. It was on your wall. You made it. It's like a beautiful painting of your mom, and then you sold it to your neighbor for 50 cents. Well, now you have 50-cent loss. Who's to say that the thing actually accrued in value? But like if there's a bunch of them and there's actually a fungible asset inside of it, then that $100 that you put inside of it would still have value. So yeah, now we're going into like legal crazy. Like you'd have to argue that in court, maybe. Yeah, now I'm getting a headache.
Well, I mean, if we essentially our own banks and we are on a decentralized network, in the future, But I wanted to ask a question if I could. I didn't want to take anybody's time.
Hey, we got nothing but time here. We're talking about theoretical art, like in your mom's paintings. So you have to ask your question, dude.
I just don't know what's common knowledge and what's not. But I'm quick note and just the fact. I don't know if y'all know it or not. The first NFT that was sold at $69 million. Okay, and by Metazoven or Metazoven or whatever. I ain't trying to promote, but yeah, for that fact, man, we had to, I've been monitoring that. But my
Sorry,
question,
what did you just say? You said the first NFT.
It wasn't the first NFT. It was most paid for an NFT. And that was that painting
Yeah,
with like
and I value my
thousands of dollars
child's
in it.
painting higher than that.
The first official MFer to do it, his name is Beeple, and he's been painting for decades, every day, digitally, whatever. Yeah, man, no, that to me was the first official. Okay, I got to take this a little seriously, because now our currency has a face and stuff. Like, just be thinking like that. But I'm eager to stake. Countdown is 3 days for me to get my cold storage wallet. But I do have my laptop, and I feel like it's 100% safe. It threw me off a couple times, but I went to special places to make sure everything was wiped. So nothing, tied to me or anything. And I'm not even where I really am anyways. I really don't know what exchanges are essentially decentralized, one, and two, I want to get some hex on the exchange, and I'm trying to get my dry powder on there. I'm just curious if they hold more coins, how many, and so forth. I just never really used an exchange as a wallet per se. If I really had to use it, I would just put it in my wallet, and that's a wrap. But I don't have, the wallet that I want.
I've been using Transact. In Transact, I can buy Hex directly to my wallet with pretty fucking low fees. That's been a lifesaver for me, is Transact. Literally direct from a bank to my wallet.
Yeah, if you're already on
pretty damn low fees.
If you're already on chain, then Transact would be if you're already money's in your bank and you want to get money onto your wallet, depending on your jurisdiction. And if you're already on chain, say you already had assets on a MetaMask wallet, like even Treasure or Ledger connected to MetaMask, well, that's great. So it depends on your question if you have, or your current state, I guess. So do you already have crypto in your wallet, or do you have money in your bank and you're trying to invest for the first time?
No, I have money to I'm trying to get my fiat in the exchange, and I've been across a lot of exchanges, but never really utilized them as a way to store something for right now. And since this thing is heating up and all that, I would like my currency tied to some hex immediately, just so I have that.
Yeah,
ready to go.
use Transact, brother. Use Transact. Forget the exchanges.
Sometimes
Well, check it out too. It's a matter of do you have patience as well? Because a lot of exchanges will allow for bank transfers, like Coinbase. You can do a bank transfer and ACH deposit, but it'll take anywhere from 3 to 10 days. But then you're not paying any fees, and then they for certain currencies, depending on what you try to send. But even for USDC, so to speak, say you do a ACH deposit through Coinbase, you're not paying any fees. It takes a few days, but then you're not getting hit with a 3 or 4% fee on your purchase, and that starts to add up, especially if you're making small purchases. So as long as you have the patience, deposit, and then you can send out of Coinbase in USDC for pretty cheap. Crypto.com I found is kind of raked you over a hotbed of coals when it comes to that. ETH is a little cheaper to withdraw, but deposit USDC to Coinbase. You don't pay a dime in fees. It just takes some time, and then it costs you, whatever the network costs at the time, anywhere from $3 to $10 to send that USDC out. And it's ruthless, just ruthless.
Maybe it's just where I'm at, but honestly, I've found Transact way cheaper than putting money into Coinbase or anything else and then trying to convert it and then send it and then convert it again to HEX. Whereas with Transact, I can just take my fiat, convert it directly into HEX for a pretty damn low fee,
Yeah, then you
straight
get
to my
into all these
wallet.
nuances of like, okay, you know, I can send my USDC out of Coinbase for, you know, $4, and then I wait until gas. I don't even have to wait until gas fees are low. I can go on Matcha and I can set a limit order, and all you do then is sign a contract, and you're not paying gas fees. So now I've made a purchase in HEX for less than $5 in fees, you know, and you
Yeah,
really can't beat that.
I mean, I'm paying less than $5 through Transact. So, I mean, in GBP, the most I've paid in Transact has been £2.50.
Yeah, so then you're not in the States though, huh?
No,
Holla.
I can be remotely fully off the grid now. But what was I was trying to say, I'm just trying to have my finger on the trigger. You know, this thing's ready for a ramp. You know what I mean? I got, you know, I want to dive in, and I do. I'm gonna figure it out what I need to do and what I want to do on the staking. I did hear y'all talk about that 555. You know, but like when time comes, I'll ask more questions about it. But for right now, all I
Hey, crypto.
please get the yeah.
So one thing I would recommend is you're trying to get HEX fast, but you need a fiat on ramp that you like know how to use. So I would recommend that you at least, depending on your jurisdiction, I'm gonna guess you're in the U.S. somewhere. Is that true? Or Coinbase. Say you have access to a Coinbase, you have access to a Gemini, you have access to some fiat like your bank account to an exchange for some stable coin. I don't know. I like USDC. I don't know. You can USDC or USDT. Really, basically, those are the only two you're going to use. Probably USDC. Coinbase, you like they said for free, but like you get money on, you're also going to need to get money off. So you need to know where your money is going to go from your bank. And so because you're newer to crypto, you need that. So a lot of times, what I would recommend is you get that fiat on ramp first, deal with the headache of actually getting onboarded to them, and then move your crypto to a say Treasure, hardware wallet definitely, and then you figure out you like Uniswap, and then now you own the coin, and then now because you can reverse that process, then you also know how to get off. If you ever needed to like say you did a 10,000x and you want to shave off $10,000, you already set up to do that. I'm just gonna say perhaps that's recommended also.
Yep.
Yeah, I mean, ultimately, you kind of need to shop around. That's what I recommend to my on boarders, if I want to call them that,
Yeah,
is that, you know, shop around. I mean, I always tell, like, for instance, I tell them I was at watch gas fees for at least a week before you do anything, so you can learn how the pattern works and when the best time is, etc., etc. It's just in my experience, like, for me, Transact has been the best so far. That's all. That's all.
Well, in crypto, like it sounds like you kind of got like a lot to learn. I'm in the same spot, but I know what helped me is to kind of like zoom out a little bit and just look at Hex as just another ERC20, and so then do your research going from there, and you can learn a lot about the nuances of what it takes to purchase an ERC20 in a self-custodial wallet. So do some research, literally just how to buy an ERC20 on a hardware wallet, and like start with that, and that'll take you like a step in the right direction where you can learn what it sounds like you're trying to figure out, and learn how and when to interact with the various decks.
I know. Yeah. I know how to get my money to the crypto. It's just some are really expensive. And then two, like
Well,
I
that's
know
what I'm
trans.
saying. There's cheap and efficient ways to do it. You know.
Yeah, but
So
you know,
let me get in here and just summarize, okay, guys. The cheapest way you're going to get HEX is probably buying it through, what is it, HitBTC, I think is the centralized exchange. That's probably the easiest way to go. Right? If you get some Bitcoin, send it to the HitBTC, and then exchange it for HEX. That's going to be the cheapest. Depending on how much you're going to exchange, if it's, let's say, less than $2,000, then probably going through Change Now and sending them something like a Stellar Lumens or a BNB, which has very low fees, like less than a quarter or less than 10 cents,
Create your own coin.
is a good way to basically onboard, right? If you're going to do more than $2,000, then you can look into doing limit orders on like a matcha or a 1 inch. You can't use 1 inch in the US though. Well, yeah, they want you to, yeah, they don't really allow it. So, but those are the three ways that you really want to get in, right? Any other way that you're getting in is probably not ideal. Even the Transact, again, it depends on the amount that you're doing, right? But the Transact, you have to look probably at the rate that you're getting and compare that the rate that you're getting, like how many HEX, what it all comes down to is how much can, let's say, $100 or $1,000 or whatever you're going to put in, how much is that going to get you in HEX at the end of the day, right? After you get it from your bank into the world of crypto and then transfer it from whatever exchange possibly it's on or whatever, and then exchange it for the actual HEX that you want at the end of the day, right? Obviously, if you go from like MetaMask and go through Transact to buy HEX, right? Then you're kind of maybe skipping a few steps, like of the transferring, and it just goes straight from the bank to the HEX. But there's still going to be an Ethereum fee there that's hidden into the cost. So you just want to kind of double check at the end of the day that, hey, you know, what is the cheapest way to get in? And traditionally, like I said, I think even though we don't use it, that HitBTC is one of the best ways to get in. It's just not maybe as simple as Change Now. And then so Change Now is kind of the main option we tell people because they have very good support. And it pretty
Yeah, I
much
mean,
works with
that's
any
what I
option.
was doing. I was matching up at the same time with Matcha, XYZ, and Transact. I was matching the prices up as well as with on the HEX website, and you know, it's about comparison, I suppose. For me, Transact worked out the best at the time, but like I say to anyone, like do your research. Like it's that hockey stick curve of learning where it goes slow and then boom, all of a sudden.
I'm sorry to cut you off, man. BG, you're very talented. I'm just trying to repeat HIP.BCC, right? I didn't miss a syllable. HIP.BCC, right?
T, like baseball. You know, you're hitting a baseball.
Oh, hit. Oh.
If you go on the if you go on like any of the ranking sites, right? If you go to nomics.com, look up HEX, and then go click on the markets, you'll see basically I think they're at the top because I think they're like the only one that you can do that's a centralized account basically. They're DEX, or not DEX, but SEX.
Yeah. Yes, sir. Also, I'm all the way across the world from Transact, and I'm dropping grenades on them, and my money has been choked up a few times. So it's like, okay, I'm about to send a large amount, and then it cancels on the terminal, and then my money's locked up for like 3 days, 4 days, and I'm like, now I gotta drop some more, because it's a possibility I could lose
Oh
it.
wow.
And it does cost a little bit more over here. I don't get the cheapness of it because I gotta go. It's like I forget what it's called. World Exchange or some on the receipt on like I get a fee too, so I'm getting charged left and right, and I don't know, I just thought
Oh, damn. One of the things I know from listening to other people, one of the big bonuses about Transact is if you're doing really large transfers, there's kind of tends to be no question about it, as opposed to transferring into centralized exchanges, etc.
Okay, I'm gonna check out what y'all are saying. I'm gonna be in the chat. I gotta run, but yeah, y'all kind of gave me a consensus, and it was so great. Yeah, just thank you.
Yeah, come on
Stick
back
around,
when you
man.
roll this
You'll
along.
learn a lot.
Yeah. I went and looked really quick, and it might be Bitmart. I don't know if anyone else can chime in which one it was. It hit BTC or Bitmart that had the cheap exchange. Maybe both do. Who knows?
I love that analogy. Maybe both do. Who knows? Perfect. That. End of story.
Yeah, I mean, it really depends on your position size at the end of the day, right? If you're trying to do $1,000, yeah, maybe you, or even like $200 or $500, then you route through these random weird exchanges. But I mean, Bitmart, Hit BTC, yeah, I know of them. I don't like using them at all. But if you have a larger, like $1,000, even with $1,000, I would route through Coinbase, take USDC, and then buy it on Uniswap and just eat the $20 fee to buy. But that's just me. Because I know how to do it. I know exactly how it goes. Coinbase isn't gonna fuck me. I'm working with Ethereum blockchain. Like I know how to use it, so I'm good there. Yay. Hit BTC. I don't know about that one.
Yeah,
Yeah,
I mean that's why.
Coinbase is a bitch.
Yeah, but like
I
DG
actually, yeah, go ahead.
I say like DG mentioned, right? Just kind of do your own research, right? Go check out the prices like he did, and if you find something, gets you more hex at the end of the day than another process, and you're comfortable with that process, right? It's not too complicated, or you trust them enough that you can go do it, then go do that process, right? And that's what it comes down to.
Yeah. Pull up a few windows all at the same time. That's what I did. And I was like, ooh, I'll take that one. Thanks. And you can also be really nerdy like I was and like just sit and watch it for fucking 4 hours straight and watch the gas fees change. Because I'm just nerdy as fuck that way.
Yeah, that's why competition is good, right? I hope more exchanges and different platforms start carrying Hex. You should come and buy in bulk. You know.
I mean, my approach right now is like, I'm just honestly trying to stay away from exchanges full stop. But that's just me, because I just see them as banks and eventually being controlled by the system, if not already controlled by the system. So I just try to stay the fuck away from them full stop. But that's just me. Even if I have to pay a couple of bucks extra.
Yeah, that sounds reasonable.
Can I ask a question, please?
Go.
Yeah, fuck those guys, man.
This is more of a technical or even a curiosity question. I'm quite new to crypto, and you guys have helped me out a fair bit, Papa Boner included. So I've set up everything in line with what you guys have said in terms of getting a central exchange, getting fiat, setting up my MetaMask the right way to make sure my hardware wallet is using MetaMask just as a pass through. I'm just curious. Does the Bitcoin network have the same idea, or is it just the Ethereum network where you have to do this? It's just a curiosity question. And let me know if that doesn't make sense.
That kind of makes sense. Bitcoin's very similar. It's just not an EVM chain. It doesn't support multiple forms of currency. So like the hexadecimal addresses that Bitcoin use are Bitcoin and Bitcoin only. And so, you know, you're not going to be able to send Bitcoin to an Ethereum address, vice versa. You'll be able to send Ethereum to a Bitcoin address. But yeah, BTC still uses the same kind of things, not necessarily the same interface, but still same deal, like, BIP44 standard to create or generate a public address that is associated with a private key for your wallet.
So they have their version of a MetaMask that you've got to go through to get it to your hardware wallet.
Do you think MetaMask is the best wallet? Hot wallet, excuse me?
It's one of two wallets that will allow you to do a custom RPC setting for Pulsechain. So
It's the second.
The second wallet is the Coinbase wallet. Coinbase has basically three platforms. They have the regular Coinbase, which is centralized. They have Coinbase Pro, which you can basically it's a pro version of it, so you can do limit orders and whatnot, but it's still centralized. And then they have a DeFi wallet, which is just called the Coinbase wallet, and that's basically like MetaMask, right? You can use a hardware wallet, and you can put a custom RPC setting in it. But you hold the keys to it, so you're in charge.
Okay.
Can you migrate your keys from the Coinbase wallet to your hard wallet?
Yeah, same thing, right? 12 key, 12 words, migrate it, same as the MetaMask.
Okay, cool. At least that's something.
Yeah, just like if you were feeling super frisky as an experiment, you could try like importing a dummy instance of MetaMask onto a Coinbase wallet, or the other way around. Like the standard is the standard, those words give you access to the blockchain no matter what front end you're using.
I try not to get frisky, brother. I've got 3 children because of that.
Vlad, did you have a question? You had your hand up for a while there. You got to hit that blue button in the middle if you want to talk. Make it green. So did anyone catch that dip below, let's say 5 cents, 4.5 cents last night?
This guy.
It was damn close. Damn close.
Yeah, I got in at like 4.4.
Nice, nice. I got a screenshot of it, but I didn't count.
A screenshot. I'm
I
waiting.
was trying to get in lower, but the first transaction didn't go through because it was too delayed. Me digging under my desk to get to my hardware wallet to approve it, so lost out on like $10 of network fees, and then got in at like 4.4.
Yeah, I was hanging around about 5.2. Hanging around about 5.2, and then I was like, do you know what? I'm not going to FOMO in. I'll give it time. I get in at 12, so anything under 12 for me is good. So we'll see. We'll see how it goes in the kind of mid-July when the Fed fucking trashes shit even worse.
Yeah, once
Yeah,
I saw it go to 5.3.
I was just gonna say, I feel the same way. I put in a lot, like a really, really big amount, when it was 20 cents when I first found out about Hex in January, and I've been BCAing in. And last night I started the process trying to get in at when it was at 4.4, but by the time I finished it, because I was multitasking, doing a bunch of shit, I got in right when it turned 5. So at the end of the day, I'm happy, because I was
Yeah,
better than
you're
20.
good, man. You good.
Yeah,
You good.
I was once I saw it go to like 5.3 before it continued to wick down. I hopped on the PG&E's website to see if I could delay my electricity bill, so I could throw in like another $250. And then it just started wicking down harder. I'm like, screw it, I gotta go now.
That's funny, dude. You got to do what you got to do, huh? I heard someone last night talking about, who was it? I think it was Mandalorian, talking about I'm selling everything, gold chains, jewelry. So that's funny, man. Do what you got to do.
I'm still of the opinion that anything under 20 cents is a pretty good buy on Hex moving forward.
That's what I said. If you're in it for 2 years, even if you're holding, obviously you should stake. But even if you plan on holding, if you're gonna hold for 2 years, getting Hex at anything less than a quarter right now, I think is going to behoove you greatly in the future.
Yeah, if you're using it for what it's built for.
I didn't expect to see Hex at such levels, ever, basically, ever again. And here we are, obviously.
It never ceases to surprise me.
Good time to
I don't
stack up.
think we'll ever see it again. But,
Hey, somebody had mentioned earlier the relevance of either the big boy Bitcoin or the overall crypto market having correlation to the stock market at a, and I believe that he's right because I've seen a few articles stating that, the crypto market had a 1-to-1 ratio towards the stock market a few times or a couple times, or is it
No, I can speak to this. So they're talking, an analyst, like financial analyst, we're talking about this today, for Bitcoin, not the overall market, but actually Bitcoin as the largest asset. That's what they follow. Was highly correlated, and so was Ethereum actually, highly correlated to the Nasdaq exchange. And recently, say in the last few days or whatever, instead of breaking to the upside, Bitcoin and Ethereum broke to the downside, where the Nasdaq became more expensive than Bitcoin. You know what I mean? How those charts go. So they were thinking the exact opposite, that say Ethereum and Bitcoin would break to the upside as opposed to the downside. So they were actually surprised by that, which, hell, I'm not surprised by it because I don't fucking know. But yeah, I was listening to CNBC earlier about that, and they were talking about it, the correlation anyway.
I mean, one of the really promising things I've seen about Hex, I was watching one of the Discord Syndicate feeds, and they were talking about some Hexkins are setting up a trust that will essentially protect Hex moving forward. I think it's basically to do with them buying up Hex, holding and staking in it to protect it. So, I mean, like, it seems like the community is going to do very good things for the product moving forward, you know. It's a great community. Maybe someone can extrapolate on that.
I think you're talking about another project that I was reading into, but I don't think it can be discussed on this channel.
No, it was a Hex thing. It wasn't a, sorry, it wasn't a separate product. It was Hex. It was a trust to do with protecting the asset of Hex moving forward. It wasn't a third party.
I think you're talking about the HEX Investment Trust, which is a different product. I mean, a different project.
A different project in what way? What do you mean?
So HEX in itself, you know, has nothing to do with that project. I know that that other project is for HEX, but it's not a Richard Hart project. That's what I mean.
Oh, right. Yeah. Okay. Yeah. It's just part of the Hex community. But it is about Hex.
Pulsechain is not affiliated with any third-party projects.
Hell yeah.
I just have an interesting thought, and I'm trying to bring relevance to the game, but you know, uh, what about like a NFT being your KYC, where it's like it's known that John Doe has $10 million or whatever, $100 million, $1 billion, but are you actually John Doe? You know, give me, you know, proof that's your vindication that, you know, you're good for that money.
That was too many letters and numbers for me, my friend.
Or like $10, you know, whatever, or 100. It's like the government's printing money, and essentially these guys made money out of thin air, like Richard Hart says. And these guys on the NFTs is just, you know, creating this shit. And, you know, I know how they are doing it, but yeah, that's just one aspect of it. And I just feel like nobody's really implicated it that way. And I was thinking that before. We're entering the digital realm, so there's possibilities.
Yeah, I mean, they're just crashing the economy left, right, and centre on purpose. I mean, here in the UK, they're going to give a grant to people for their energy bills. Now, they're taxing the companies for like a third of the cost. Like the companies that are, the energy companies that are making billions, they're putting some kind, I can't remember the name of it, but a tax on them that's going to pay for like a third of the cost that they're then going to pay out to people. But then the rest of that cost has to be fucking printed, which is just going to crash the economy more. I mean, it's retarded, man.
I know I'm trying to think of an exit strategy to get off the United States dollar. That's because I know that digital is going to be the thing. And
Well, my exit strategy is Hex, my friend. That's my exit strategy. I've
that's
already exited my money out of that economy.
Hey, and I'm thinking about what y'all said earlier about not staking multiple times, and I mean, I really kind of want to stake multiple times for different time increments, and you know, I
Yeah,
maybe
just
start with
wait till Pulsechain launches and then start doing multiple stakes. Seems to be the incentive, from what I've heard in the discussion so far. Like, wait till Pulsechain launches, then start doing your multiple stakes, unless you were an OG Hex guy, you know.
Did somebody mention that Richard Hart owns like 80% of the liquid supply or 88? I can't remember the number exactly.
Yeah, I mean, that's the same for all coin founders, is it not? Am I wrong?
He staked how much of his liquidity and for how long? Like, I know he probably did it the first day or something, but for 15 years, is that correct, the max?
Okay, here I can address this. Talking about Hex, in the early days, the OA was sending to dollar addresses, and the OA was those dollar addresses were staking, but it stopped staking at some point, like sometime during the AA. But it does have a huge amount of stakes. I don't have the exact number, but it's a huge amount. And from what I understand, they're not really staking anymore. Most of it's liquid.
I don't know. I just want to enjoy it a little bit early, but I want to enjoy it a little bit longer too, extend it. I do respect that y'all are trying to say like do as much as you want first time, one time, the right way, and then forget about it.
I mean, for me, as a late adopter, I've made one semi-long stake on ETH. Like, that's my little, when I turn 45 fund. Everything else, I'm waiting until Pulsechain launches, and then I'm going to start doing my staking ladders, etc. But I don't know shit.
Hey, crypto, I just wanted to let you know I sent you a DM just so you don't think it's a scammer.
Can you repeat that? Sorry.
I was just saying I sent you a DM so you don't think it's a scammer. That was me.
Hey man, I appreciate that, dude. I'm gonna check it out. Okay, one more time. What was your name again on here?
Alsamac 888.
I got it, man. Yeah, good stuff. I don't know if I'm allowed to say that.
You probably not. That's why I sent you
Yeah,
a DM.
I can say yes, I guess. I mean, I think I glanced at them. I had to sit on a screen real quick and look at them, but yeah, I think I remember that.
So I'm wondering, just wanted to bring up this topic since for the past few days it's been brought up. So there's been talk about setting up your stuff so that it can pass on to your loved ones correctly. Whether through trusts or different avenues and whatnot. There was a guy on here earlier, actually a few days ago. He couldn't. I guess his father passed away, and he couldn't access any of his stuff because it was on Binance or stuff like that. So I'm just curious because this is what I think a lot about. Like for example, any of you here listening, like knock on wood, but let's say you don't wake up tomorrow. Is anything you guys are doing in regards to this crypto easily available for someone to just kind of take over, or are you guys planning on that? Because that's like the one thing that I'm like thinking about right now. Like, if I don't wake up tomorrow, can my wife continue this? If that makes sense.
Yeah, my partner has access to everything currently. And she has, fairly good idea of how it works. And will have a much better idea of how it works. I mean, I could get run over by a car right now.
So yeah, we're always talking about security, right? And that's the cornerstone of everything we do. And so if you're married and have kids, and especially if you're married and have kids, right? If your family doesn't know how to use your hardware wallet or doesn't know how to access it, like in my opinion, like your security grade would be an F. You failed because just with one thing, it's game over, right?
Exactly. This is why I'm kind of like trying to put a plan together. I will be setting up a trust and everything. So that everything can this way the state doesn't get their greedy hands on it or stuff like that. But these are things that I think about. So I'm just trying to get ideas from the community, kind of just pick people's brains, see what they're doing.
Well, what's your plan of action? What's your plan of action to take care of this vulnerability as soon as possible?
Well, first things first, I'm actually teaching my wife how to just just the basics of this. I got into crypto in January, so it's been a learning process for me. Like for example, just the other day, for the first time ever, I encountered pending transactions, and I couldn't figure out how to get rid of them, and I had to do all this research, and then I figured out how to clear them, through this process where you like do another transaction and you enter the nonce from the previous transaction. So just little things like that, right? So I'm just like right now I'm trying to teach my wife like just the basics on, these are hardware wallets, stuff like that. And that's actually the step that I'm on. But I do have a game plan, once we do figure all that out. I already have some stuff set up for my daughter. I have some I already have a will and trust set up for me, but I want to include a lot of this stuff into that. It's just I'm trying, like I said, I like when Papa talks about this stuff because it relates to what I'm kind of referring to. But I'm just trying to get ideas from people, if that makes sense.
Does she know where your hardware wallet is and the code to access it? Does she know
That's one of the things.
Does she know that?
Yes, correct. That was one of the first things.
So she knows.
Yes, exactly. Because I told her, I'm like, hey, you need to learn this like right now, because what if I don't wake up tomorrow, right? Like, I need you to know, what this is and what the code for this wallet is, and what the pin for this other wallet is, and we have a stake for 15 years for our daughter, and I need to, like, what if I'm not here in 15 years? Like, you need to know that this is, the wallet for that one. And, just, this is like the basics. So I literally just taught her the basics. I've been like teaching her the basics. But, like I said, I want to be able to like set myself up I'm actually like considering kind of like a turnkey thing. You know what I mean? Like we just, turnkey thing and everything's nice and set up, and she doesn't really have to like put too much work into it. But like I said, me being new into this and trying to figure it out still, this is why I spend most of my days just listening in and trying to connect the dots. And every time you guys are talking.
Well, good. So you're not at an F for security. So if you die, your wife can at least access it. So, you've got a passing grade, right? So it sounds like you're doing, everything that you can so far. So I have to commend you on that.
Thank you, man. That's like the number one thing I worry about because, like I've mentioned here before, I used to sell life insurance and what is it, like retirement and all that, right? So I do know some things, right, like how to set ourselves up for for the future and stuff like that. But now that I'm involved with crypto, I'm just I know that it's a little bit different, and I hear you guys talk a lot about what is it, like when you guys talk about like KYC and like just different things that I've never encountered in my life, and this is why I'm like trying to like figure it out, like how can I set this up where it's like a nice little game plan that'll work for us, because I understand that one size does not fit all when it comes to these things.
Well, I want to congratulate you if you're kind of new to crypto and you've made it to the Richard Hart space and you know everything that you know right now. You know more than 95% of the people out there in crypto, and you're in a way better position. So, you got to thank your lucky stars for that. And you found this channel and you can come here and ask questions anytime, and you have a team of people, man. That is so priceless.
Amen, Benjamin. Amen.
Yeah, that's the thing that when I first started speaking on here, that's one of the things that I mentioned, that I was in a crypto. Well, I was never in a crypto. I had this friend who bothered me for 10 years, always sending me messages about crypto and Bitcoin, but I was busy learning my industry. I was busy learning the insurance industry and retirement industry. So every time he sent me a message, I would ignore it. And 10 years later, which was, January this year, once again, he just sent me another message, just like any other day. And the message that he sent me was a link to the Richard Hart video on how billionaires making people rich. And mind you, I would never click on links that are like more than 5 minutes, because I'm not going to sit there and watch a 5-minute video to see what the message is that you're trying to relay to me, right? But for some reason, I clicked play that night and I watched the whole thing. And the reason I was very intrigued was because I was intrigued with who this guy, I was like, who the hell is this guy? He's talking about helping people. He's talking about changing people's lives. And this is what I've dedicated most of my life to, right? Helping people, changing people's lives. So I was like, who's this guy who thinks like me, right? I was like, who the hell is he? He's talking about Hex. I really don't know nothing about crypto, but but I really like what he's saying, and I like his demeanor, and I can genuinely tell, that he's being real with what he's saying, right? So then when I started looking into Hex, I was just like, okay, well, it looks like Hex is something that people got into and, got very wealthy. And then I seen all those videos, the Hex recap, 2020 recap. And, I was like, okay, so apparently a bunch of people got into this when it was really cheap and they got rich. So the way I see it is, I kind of missed the boat. But then I somehow landed on PulseX, and I went to the website and I clicked on this little like triangle thing that turned out to be the Telegram link.
The boat came
right?
back for you. The boat came back
Man,
to give everybody a second chance.
Exactly,
Yeah,
right.
man.
So I went to the Telegram channel, and I never had Telegram, so I had to download Telegram, and I ended up in this PulseX channel where everybody used to be on before. Now we're over here on Pulsechain, but everybody was on PulseX in January. So when I found out, when I landed on Telegram, the moment that I went on voice chat and I just heard everybody talking and asking questions, like, you guys probably not believe me, but for the next 3 days, my phone was just on for the next 3 days, 24/7. Like, I didn't sleep. Like, I was just up. I was just like, I was so intrigued by what I fell upon. My wife was like, what the hell's going on with you? Like, you're like a different person. I'm like, you don't get it, babe. Like, I just just to backtrack a little bit, we got screwed over really, really bad in our insurance business. And some, our business partners stole millions and millions of dollars from us and pretty much left us in a position where we're like broke. And so the way I told her, I was like, this is our second chance to live the life that we worked so fucking hard for the last 10 years. And it's not going to be hard anymore, right? So she was like, there's something going on with you. Like, you're like a different person. I'm like, yes. Like, I found the solution to like the life we're supposed to live, and I feel very excited about it. So for the next 3 days, like I said, I'm just 24/7. This thing was on. I'm doing, I'm like taking care of my daughter and this thing's on. I'm cooking and this thing's on. I fell asleep to it. I would wake up to it. I never turned it off. And just, that was January. I found out about it January, I think it was January 18. January 19 is when I liquidated all the investments that I had for my daughter. She's 3 years old, so I just put it in a hex and I locked it away for 15 years. I figured she'll be 18 by then, right? And that was day 2 of me finding out about this. So then day 3, 4, 5, and 6, it was just 24/7 listening to this channel, trying to learn, figure things out, taking notes. I didn't know what the hell FUD meant, right? Like, I was just so clueless to this. And I'm just taking notes, I'm just taking notes, listening, taking notes, trying to connect dots, adding things up, looking at videos, looking at YouTube. So I am glad that I fell into crypto through Richard Hart products, because I hear a lot of people talking about how I used to be into this and I used to be into that. And I'm just glad that I avoided all that crap, if that makes sense.
Well, those shiny objects, right, are going to be coming for you. There's going to be in the future here, there's going to be situations that come up that are going to try to get you to sell your bag. That could be personal reasons. That could be trying to time the market. And so you got to be mentally prepared for those things coming, because they're going to come at you real fast, and they're going to come out at you, in so many different forms. And so for myself, that's why I come on here so much, is to get the daily medication that I need to avoid those things and to learn from other people's mistakes.
Actually, that's one of the things that I'm like really, really grateful for. And I've repeatedly have told, a lot of people that are up here talking how grateful I am that they're taking the time out of their day to do this, Papa with security. It's just like I said, to me, it's just so crazy and freaking amazing that I landed on this community, because what you guys talk about, there's nobody else teaching security. There's nobody else making sure that the community is safe. There's nobody else. And I was like, nah, I don't, right? Like, how can that be? So then I just, I went out there just to see, and I'm just like, wow, it's true. There's no other community that I've came across that are, doing what the Pulsechain community is doing. So yeah, I'm very grateful for this community. Like, I cannot express it enough.
Hey, let me just say this. Just over a year ago, I dropped 10 grand on a business mastermind course, right? That's still going on. And in the last fucking 2 months, swear to God, I have had more fucking value out of this community than I've got out of putting fucking 10 grand on a business mastermind. And you can take that shit to the bank.
That is so true, D. That's so true. You say that because when I was learning the insurance industry, I come from the hood. I didn't graduate high school. Obviously I didn't go to college. But I was always very
Amen.
I was always very open to learning what I wanted to learn. Right? Like, I was a nerd in school. I just didn't give a crap about what they wanted to teach me. So me learning, having the BS jobs that I had most of my life, as when I was younger, from the moment that I was 18 to about 29, I just worked a bunch of warehouse jobs, just labor jobs, digging ditches, construction, just anything I can find through temp agencies, because I didn't have a diploma, right? So then when I was 29 years old, I hurt my arm and I could no longer do labor work, right? So that required me to change, so I, long story short, somebody told me about the insurance industry, and I was like the reason I got recruited into insurance was because somebody was saying, do you know that you can live tax-free with insurance? I'm like, what the hell are you talking about? Like, what do you mean tax-free? Like, that's, it's got to be illegal. We got to pay taxes, right? This is me being young and naive. And they're like, yeah, like you can put money in insurance. The rich people do it all the time, and they just pull out loans and they live tax-free and blah, blah, blah. And I'm like, what do you mean? So long story short, that's how I got into this industry. And to kind of, make the point that I'm making, just like you, is I had to, pay for a lot of classes, and I had to pay to go to seminars, and I paid to go to see Tony Robbins, and I paid to see this other motivational speaker, and I paid to go to this, conference. And it was just so, I spent thousands and thousands of dollars, to try to learn things and better myself. And just like you said, D, it just amazes me that nobody has to spend all. Even somebody came in here earlier and said, well, is there a course that somebody can pay so they can teach us, how to make, educated decisions on this and stuff like that? A little while ago, somebody asked that. And it's like, no, because all you got to do is just go on this channel, press voice chat and just listen, and eventually, yeah, there might be conversations that you really don't care about, but eventually there will be conversations that you definitely care about. And this is why I'm always ready with a notebook. And, I always have a little notebook next to me in my pocket, because that's what I learned when I was learning insurance. I got to pick people's brains. I'm the dumb one in the circle. If I'm the smartest one in the circle, I got to upgrade my circle. So this is exactly how I see myself right now. I am so grateful for a lot of you guys here. You guys didn't even get it.
Absolutely, bro. The value is unbelievable. And by the way, if you still have troubles with your arm or any ongoing effects, I specialize in that kind of shit. So feel free to hit me up if you have any issues ongoing physically with your arm or anything like that. Just so you know, man. I just happy to give value back to this community because I've got so much fucking value from it.
Yeah, I appreciate that, man. No, I heard it was just, what's funny? It's so funny that you mentioned that. I used to work, like I mentioned, I used to work a bunch of labor jobs, right? And, operating heavy machinery. And the way that I hurt my arm was because of repetition, right? I was using a freaking rake.
Repetitive strain, my friend, and almost everybody suffers from it. Be it sitting, standing, shoveling, hoovering, it doesn't matter. Almost everyone suffers from it, and that's kind of what I specialize in. So, like I say, don't hesitate to hit me up if you have issues.
Yeah,
or
man.
anyone else for that matter. Anyone else listening for that matter, because I'm very good at doing it through text and voice messages, so I'm happy to help.
Awesome. See what I mean? This is, man, another great example of why this is an awesome community, because, yeah, man, my issue is I have tennis elbow, tendonitis, or whatever people want to call it, right? And I don't know, it upsets me because
Easy fix.
Oh, we're gonna have to jump on the DM then, man, because this happened to me. Okay, so this happened to me when I was 26. I'm gonna be 28, 29. I'm gonna be 40 this year, next month, actually in June. And my arm's been fine because I did go through therapy and all that when it happened. It's been fine. And once again, through, 2 months ago, literally 2 months ago, I was using one of those box cutters that's like safety. It's a safety box cutter that you got to squeeze it for the knife to pop out for you to be able to use it. And once again, it was repetitive use, right? I was using a box cutter to open up some boxes. And then by the end of the day, my freaking arm was hurting. And I was like, oh, shit. I completely forgot that I'm not supposed to And so, yeah, 2 months ago, I re-injured my arm. So here I am walking around with a freaking tennis elbow strapped around my, my arm because it hurts. And, I really don't even know what to do.
You didn't re-injure your arm. It's just your structure was never really sorted after the original injury. I deal with this so often, especially people that have been through the medical cycles where there's no real proper rehabilitation. Anyway, I'm not going to go into a big massive spiel about it, but yeah, I deal with that shit all the time. It's my bread and butter.
I just sent you a DM so that you can have that message on there, and this way I don't lose you because there's thousands of people on this channel. But thank you, man. I appreciate it.
What's your name, man? Sorry, because I'm on the phone and I'm hiking and I don't see any names.
Oh, it's Alsa Mac 888.
Good man, thank you. I will help to the best of my ability. And the best of my ability is only comparable to your effort.
Yeah, I get it. I get it. And see, this is the thing that's amazing because that's also what Richard talks about, prolonging your life, like upgrading your health and stuff like that. So one of the crazy things that I talk about is how I feel that the reason why this community is so close is because of synchronicity. Like a lot of us are like-minded and we think the same, even though we all have our, personal whatnot. Like a lot of us think the same.
Yeah, I believe that too. Although I'm sure there's a few assholes here listening.
Well, of course, we're here always. I'll speak for all of you guys.
Holla!
PulseX 10,000x.
$1 million.
That's too small, mate. 10 million, 20 million.
Well, I mean, it literally that takes time. It's like HEX has been out for 2 years. Bitcoin's been out for 13 years, right? And then Ethereum's been out for 6 years and some change. So, I mean, like we're not even there. We're like a quarter of the way, a third of the way for Ethereum. So we got a long way to go.
Well, I mean, I look at it like we've not even started because Pulsechain hasn't launched. That's kind of the way I look at it. But then I wasn't in from the beginning of HEX. But I look at it as, day dot is launch of Pulsechain.
D-turn.
What?
Yeah, I don't know what the guy said, but I just got permission for 1 more hour of sitting on my back deck drinking a beer, talking to you guys. So that's fun, right? It's a Friday for me. Friday evening.
You got permission? You clearly have a good woman that keeps you in check.
Well, I mean, I was thinking my time zone is 9 p.m. Well, that's in an hour, so it's 8 p.m. Central Standard Time in the U.S. And I was thinking, 1 more hour. 9 o'clock seems nice. And then she came out and we're like, how long you be out here? I was like, can I get 1 more hour? Come on, it's not even dark yet. It literally feels like the same day. Come on. It's Friday. Chill.
Hell yeah. I'm just hitting 2 a.m. here. And almost at the end of my 20+ mile hike.
That's awesome, man.
20 miles. Fuck, man. Perseverance on that one. What, you been hiking all day?
No, just for about, I think I left the house at about, just before 10. just before 10 p.m. So about 3 hours with a stop here and there to look at some beautiful scenery because of where I live.
All while talking on here too, huh? It's pretty tight.
Yeah, man. Y'all been keeping me company and it's been fantastic. You know, constructive conversation, fun conversation, and interesting conversation. Yeah, I like my barefoot hiking, man.
Barefoot hiking. I was doing that. I was doing that as well. That's awesome, man. I used to do that too all the time when I lived in California.
Yeah, it's like, oh, you're doing 20 miles, but you're also doing it barefoot. It's like just one more upping on another upping. Like I don't do 20-mile hikes anymore, and then you're also doing them barefoot. So I'm like, just a little bit extra.
Yeah, I'm barefoot for life, man. I've been barefoot for many years. Yeah, I mean it's the way the human foot is meant to work, and everything begins in the feet when it comes to the structure of the human body. I call ordinary shoes, like, I mean, I could go fucking deep on this, boys, but you know, ordinary shoes, these spongy soles and stuff like that, I call them coffins for your feet because they destroy the structure of your feet, you know. It's like when folks say to me, oh, I can't do that because I've got flat arches. I was like, you get fucking flat arches because you've never used them.
Yeah, I was reading a lot into that during that time, and I actually started doing it because of I wanted to start grounding myself, and looking into that is when I started reading about shoes and soles and how you're supposed to be connected to the planet and whatnot. So that's pretty awesome, man. I remember when I started doing that, all these ladies would be watching me, walking barefoot, and they'd be so like freaked out. Oh my God, do you know you're gonna injure your feet? And just they were just so concerned. And I started out walking, then it got to the point where I can walk fast, power walk, and then, about a month into it, I'm like running in the hills, rocks, twitches, twigs on the floor. It didn't matter. Like my feet just got used to it.
Yeah, I mean, it's what they're meant to do. I mean, let me take you back 120 years, quick history lesson, when Dunlop ruled the athletics footwear community. And, it's the celebrity thing, it's a celebrity thing. So when athletics or athletic sports people became popular, therefore what they did, what they wore became popular. And then when these companies, Dunlop being the first, saw that there was a commercial entity to footwear, they then started developing footwear for the ordinary person, which wasn't a fucking running shoe. And it went from there. Anyway, I'm not going to go into it too deep, but people wear shoes like they do now purely because of commercial sales. It's to get fuck all to do with what's good for your feet. And they lie like fuck, and they should be prosecuted for it because they cause so many fucking injuries in people.
I hear what you're saying. I just wanted to say we got a couple people with hands up. Don't know if they have something to share or ideas or whatever the case for Pulsechain, PulseX, and HEX.
Yeah, I was just wondering if there's an admin. Oh, PulseX is here.
Yeah, man, you, Mr. DG, I'm tuning into you, man. Tuning into a lot of guys. Yeah, amazing stuff, man.
Yeah, I'm a super
like I
nerd,
mentioned
man.
earlier. Like I
Super
mentioned earlier,
nerds.
like how it's not a coincidence that a lot of us think the same.
And it's crazy that this thing is somebody created this voice chat and somehow we all found it, and there's never been this sense of community on this project, and I've been looking for communities and stuff like that for the past year. Didn't even know a community existed on currency a year ago, so it's great to be on this thing. But yeah,
I haven't spoken to people outside of my clients this much, and I don't know how long.
That's funny. Or like a family, this, and in every family, there's good times and bad times. This is why you hear people in here bickering every now and then too.
I tend to think the good times, and aka the dips in this family, are also good. The bad times are good. Never mind Netflix and chill. It's all about Stake HEX and chill.
Exactly.
Hey, Mike. Yeah, I see you down there, buddy. I don't know if admin's in the chat to let you speak. I sent like a little notey for him as well, or her. Yeah.
Yeah, they. So I mean, maybe I'll ask again in the admin chat if I can be an admin in Pulsechain, because this happens a lot. I was literally in the Pulsechain chat, muted for 3 hours, like 2 hours and a half, like 2 days ago, and it was kind of annoying. Like if I was an admin, I could just unmute everybody, and it's fine. I'm an admin in PulseX. I'm an admin in PulseDev. So we'll see. I don't know. I can't help at this current at the current time though. So we'll see if PulseX Profex is in. Oh, Profex is there. He probably stepped away from his computer though. So we'll see if he comes back.
Hey man, patience. I know sometimes I would like to be unmuted, but I'm happy just to sit back and listen.
So I mean, my biggest problem is I just got an admin responsibilities like 4 days ago, so I need to like learn the ropes a little bit. So we'll see. Maybe in a little while they'll make me an admin in Pulsechain that I can help out with unmuting.
See, I love ProfX because almost every time when I drop into the chat, I get almost instantly unmuted. So he's a fucking legend that way.
Yeah, they do the same to me now because I've been so often. They have a group, they have a list of people that have been vetted, and when they see those people, they just automatically unmute them. And then everybody else, unfortunately, has to get like referenced against a list of people that are known like trolls. And the more you're in here, the faster you'll get unmuted.
Yeah, I mean, I've got no problem with the unmuting policy. Like, I'll sit muted. I don't mind. I'll just listen. Because there's a lot of good information. I don't need to add anything for the most part. Because there's way smarter people to do with the cryptosphere than me in here. That is for fucking sure. I'm at the bottom of the hockey stick.
No, it was
Who's
funny.
looking to be unmuted? I don't see anyone with their hands raised.
Maybe they left. Maybe I'm not sure.
I see Mikey down the lane. That's the only one. John was in here maybe like an hour or so ago or whatever, but he didn't have his hands up. I just, just saying.
Well, there's plenty of people, I'm sure, that are unmuted that aren't talking, so it's a misnomer.
Yeah. So I was saying a couple days ago, I got done with the jiu-jitsu, and then I just put the chat on, and then I was muted, which normally happens. I was like, okay, I'm muted, and then I was like, okay, I'm still muted. That's weird. And then I just let it go, and I just waited until, and then eventually, like 3 hours later, I was like, I'm still not unmuted. I'm just gonna leave. I have to go pick up my kids. It happens to us all.
What kind of
It's not a big deal.
what kind of jiu-jitsu?
Yeah, I do Brazilian Jiu-Jitsu here in America.
Ah, cool.
Yeah.
Under what academy? Who do you study under?
Hickson Gracie.
Ah, oh, really? Beautiful.
Yeah.
Have you actually like studied under him in person?
No, he's got a Hickson promoted, like he trained like a few black belts.
He's literally
And
one
so
of my
there's
heroes in
one
martial arts.
black belt. He's one. Yeah, so I'm being trained by Hickson, and then a black belt under him, and then a black belt under him. So it's like 3 removed, I guess.
Third generation. Yeah, I'm a third generation Bruce Lee student.
Yeah, but it's cool. I'm like 3 months in. My instructor finally gave me a compliment for, he's a good guy, but he told me that I did my escape from cross-side 1, which is the kind of like the guys laying across you, like perpendicular to you. Like,
Yep.
Okay, which is like, okay, awesome. 3 months in, and I finally did something right.
Nice. Hey, listen, it's delayed gratification. Let's just use that terminology when it comes to martial arts.
Yeah.
I've been doing this shit for 30 years, and it was only 3 years ago I've been training. First life, I actually had to use it in real moments in my life.
Yeah, I mean, this isn't a jiu-jitsu chat, but yeah, I'm like 3 minutes in, so I'm starting not to suck as much as I used to. I'm starting to know
That's
some
good,
things,
man.
which is nice. And then I keep on going back to class.
So martial arts will serve you well in so many areas of your life, man.
It's part of my routine. Very similar to this Friday night, sit on the back deck, drink some beers, chat with you, you people. That's part of my routine. It's one of the things I enjoy for the week. But then, so I also go to jiu-jitsu.
What do you mean, you people?
Well, the group that's in the chat, the group that's in the voice chat. You know what I mean?
I'm just fucking with you, man.
It's you internet people. That's what I'm talking about. Random
Oh,
internet
those
people.
are the worst people.
I believe the correct response to get him going is you Irish people. No, just kidding. Just kidding.
You fucking asshole.
You see, I was trying to be
because I remember
PC about it. I'm like thinking, like, what do I say that's not like, yeah, I don't know. Yeah, you people, I don't know.
he said he was Scottish like an hour or two ago. So I thought it was funny. Yeah.
I mean,
That was a nice callback.
Because you speak with a American accent. I couldn't even tell.
Hey,
right?
guys.
Be for like us Canadians or Don Cherry speaking about you people. It's kind of touchy.
Ask y'all a question, and anybody can answer.
Yeah, just ask, man. It's cool.
Hey, so besides catching these bags on the blockchain, the new blockchain, what would y'all like to see on the blockchain? What would y'all like to see? Like actual, like instead of seeing the currency, instead of seeing what we already currently have, what would y'all like to see?
Yeah, I mean, there's a place for everything, right? And the blockchain's kind of cool and new, and it's a fad right now. Everyone's trying to add all these things to it, right? These NFTs, all these JPEGs that people are putting up there, and all that, is more or less kind of a fad. We'll see how much of it will actually stick in the end. Like Richard says, it's a little bit silly, you know, because you're not really buying a JPEG. You know, you're buying a serial number that's loosely related to a JPEG if the centralized service, you know, that's hosting that picture, you know, stays up. So, yeah, I mean, I guess it comes down to, you know, a few things, right? Like one of them I would say is, you know, what is blockchain good for, right? What does it do well? Is it a efficient database? No, it's not an efficient database, right? It's very slow and you know, complicated. So it's not really good at being a database, right? What it's good for is basically being decentralized, right? And censorship resistant, right? As long as it's sufficiently decentralized, that's its primary use case. So, you know, anything that fits along those lines that you want censorship resistance for is going to be primary thing that you want to have on the blockchain. But, you know, we'll see. Obviously, the NFTs are a thing. Metaverse is going to be a thing for sure. That's going to be probably the next wave. I can see the metaverse being a big thing yet again, right? It was already kind of big this time around, but I think it's just going to get bigger next time around because already, you know, people were trying to figure out how to monetize the games, right? And they'll give you the game for free, but the content they make you pay for, right? Every little, you know, piece of equipment or, you know, for extra golds, you know, to speed up your progression in the game, whatever it is, you know, they make you pay for it. And especially with basically the Google Play Store and the Apple, you know, I forget what it's called now. Not iTunes, but what is the Google one or the Apple one called? Just the Apple Store, I guess. Yeah. Especially with them basically having like a monopoly over the monetary value of these things, right? Of like every dollar that goes in, you know, it gets taxed, you know, like whatever 30% or whatever they charge, you know, for being on a platform, and then they don't let you be on the platform if you try to go around their rules, right, and try to monetize it in some other way. So because of that, I can see the gaming industry, you know, moving to blockchain just to get around the monopoly that the big providers have, you know, with their platforms, which is cool. I mean, it makes sense. I hope the metaverse comes to Pulsechain with the NFTs, right? I think that makes a lot of sense. They have a lot of good use case, and like anything, usually it's either like the adult video industry or the gaming industry that are kind of pushing the boundaries, right, on tech a lot of times. And so as long as we get one or both of those industries on, I think, you know, blockchain, you know, technology will be successful for a while.
Yeah, I actually forgot that the porn adult industry was one of the leading industries in the internet back in the day. Because I was young then, so I didn't really pay any attention. But it's like interesting that like that industry is kind of pushing the boundaries. Well, I mean, obviously, like in its content, it pushes the boundaries. So it would be like naturally pushing the boundaries of like other ways, right?
Yeah, the VHS tape, right, was defined by that industry basically, right, because it was just cheaper to distribute. So that's why, you know, VHS won over the what, Betamax was it? I think.
Yeah, Betamax.
I'm sorry, Prefect. Did you just say bring porn to the Pulse chain?
No, he's talking about the adult industry. Say like naked ladies doing things, you know, with other people, and like having that on the internet is possibly like currency, like paying for that stuff on blockchains, or doing other things in the blockchain, say like authenticating access to materials on the blockchain. I could see that happening.
It is called Pulsechain. Come on.
Well, it's got to raise your pulse, right? Get your heart rate up.
Pump chain, pulse chain, pump coin.
I should rename it Pump Chain. Anyway, guys, I just wanted to check out and say thank you for keeping me company on my hike. I have arrived at my little spot, my gym, and I'm going to go to sleep. So I was just going to share my place with you quickly. It's been an absolute pleasure as always, gentlemen. Informative, fun, and entertaining. So I'm going to check out now. Take care, everyone, guys. And I will speak to you again soon. And if you're still listening, Benjamin, I'm going to send you a quick PM.
Good night.
Later, dude.
Oh, that was weird. Yeah, later. I went to go zoom in on a picture and Telegram crashed on me. That's kind of a first.
Yeah, that. And don't fuck with too much porn, man.
Just trying to zoom in on your picture of the Loch Ness Monster there and see if you were wearing shoes in it or not.
It's funny because I did the same exact thing when you said that. I was see if you wear your shoes.
I know, I wear shoes. They're just like barefoot shoes with like no socks, just no soles per se. Zero drop, zero pretty much everything. Just basically a cover for my feet when I'm doing long treks on concrete. If I'm up the hills, I don't wear anything, but if I'm on concrete, then yeah, I wear something on my feet, but not normal shoes. Total zero drop. I tend to buy cheap £20 ones off of Amazon, and that's it. You know, don't need any more.
You wild camping there, DG?
Not tonight, no, but I do often, yeah. I try to at least do an overnight, at least once every couple of weeks, yeah. Because I just like to sit out in the wild with a campfire whenever I can. Whenever I have a go bag, I can literally show you it. I have a bag. I won't, but I can literally show you it's sitting right in front of me that I can just pick up and go anytime. Got my machete, my bag, my tarp, etc. And I can just go and fuck off up the hills whenever I want to for an overnight. But I run my own business, so I can't go for too long, you know. But I can disappear overnight anytime I want.
Sounds cool.
Was it Comaximus? You had a question, I guess, you wanted to ask?
Yeah, my apologies about that. When should we expect mainnet to be up, if you don't mind me asking?
Yeah, that's a good question. I don't think at this point we don't have any expectations. You know, hopefully it'll be up, you know, sometime soon. You know, I think we'd all like it to happen in the next month. But you know, the truth is we just don't know exactly how much work kind of there is, you know, in these reviews, right? Sometimes when you go do these like code reviews, you know, you catch something that wasn't quite right. You know, maybe it wasn't done to the expectations, you know, that was set up at the beginning, or maybe they figured something out. You know,
Of course, QA takes time. Quality assurance takes time. You're not building like just a shit coin. You're building the future protocol of like Ethereum 3.0. You know, And I'm sure that Richard is the man that do it. You know, he's succeeded in the past. I have faith in him. I can see this happening. I'm just trying to figure out when so I can be ready and prepared for this.
Well, prepared is basically now. You should have your assets in your wallet, hopefully on a Treasure or a Ledger, prepared for mainnet to happen in the next 2 weeks, in the next month. All right, that's the plan.
No, absolutely, absolutely. It's good to stay liquid and whatnot, but at the end of the day, I was curious regarding. Just give me a second. I just had a brain fart. The snapshot that was taken, is it like any assets that we own now? Like, let's say if I have a bunch of ETH tokens and stuff, is that retained to those tokens today that I maybe purchased, or is it like a further back date?
No, it would be when the mainnet happens, like in the future, could be next week, could be 2 weeks from now. They're gonna pick a block on Ethereum, like sometime in the future, because Richard hasn't said anything, so we can assume that it hasn't happened yet. And so, at some point in the future, they're gonna pick a block that represents like a block in time of Ethereum state, and then that block contains the account balances of your wallet and everything in your wallet. That will be copied to Pulsechain. And that's what they mean by the snapshot. It's like, it's not really a snapshot. It's really like the block height fork. So Ethereum is going block by block every 14 seconds. And then there's a block number. And then Ethereum keeps going. And Pulsechain starts at that block number. So kind of talking to like snapshot, but it's not really snapshot. This is literally a complete copy of the entire blockchain, which isn't a snapshot of some part of the blockchain. It's literally the entire blockchain. So if that explains that. So at some point in the future, he's going to tell you, hopefully he's going to tell us, like it's going to happen within the next 48 hours or whatever. I don't know what he's going to say. And then it'll be this block height in that range of days, maybe a couple days. At some point during those couple days, they're going to pick a block height, block number of Ethereum, and then they're going to use that to fork the Pulsechain. And then you're going to have all those assets in that current state on Pulsechain, and Ethereum will just continue going forever or whatever.
Gotcha.
Can you hear me?
Weakly, but I heard you. You're very weak. I can't really hear you.
Okay. Hopefully you can make out what I'm saying. So, from my understanding, the 6G, like most people have 4G, some people have 5G. They're currently working on 6G networks. With that being said, Pulsechain is going to be around for a very long time. It's the future. So for those of you that don't know what 6G capabilities can do, imagine being able to download 100 movies in 1 second. That's how fast 6G is going to be, right? So we're looking at, 2030, 2029. Those are the stages that these things are going to be starting to get implemented. Now, what Richard Hart is doing is he's got the devs hyper focused on increasing block speed, right? So I was on Twitter Spaces just a little bit ago, and they were talking about how one of the guys at the debate overheard him when the camera shut off and everything like that, talking about how the block speed is going to be faster. Now, we're definitely going to need that. We'll be light years ahead of all these other networks, especially Bitcoin, knowing how the future is going to be and how it's going to play out as far as network speeds on every platform. So I think that's something we should look forward to. Also, if they have issues that they're fixing, just knowing they're coming out with a solid project that is going to quite possibly revolutionize banking. We don't know. So I don't mind waiting a little bit longer. And now that you guys know that, you could take that with you to the bank.
Okay, so one thing. So block speed is 3 seconds because it literally takes, at the speed of light, so much time for one piece of data from one side of the world to travel to another side of the world. So all the validators that are 33 in number have to have the block that was previously mined so they can validate the next block. So there's like, that's a limit. That's a speed limit, like the light speed, right? Latency of like all 33 nodes being able to talk to each other to exchange the data of one node, of one block that's currently like the node in, say, the node in Hong Kong creates a block, and then that block has to be distributed to all the other 33 nodes so that the next validator can process, like collect all the transactions and then package the block into for the next block, which happens every 3 seconds. That's a speed of light, like literally like physical limitation, right? That's not a data download, like speed of data issue. That's a literal speed of light. How fast can data actually travel like around the world problem? So you're not really fixing that unless you can change the laws of physics. So if it's 3 seconds and then all the nodes can get the block, then it's a matter of like how many transactions can you fit in each block. Now that's the next limitation. That's something that they can work on, and they're doing that right now to increase the block size limit and like kind of make that more. So like right now the limit would be max possible like 80 million. Gas limit would be maybe 1,000 transactions per block every 3 seconds. So if that works, that's like awesome. Just to clarify that a little bit technical, trying to keep it simple for you guys to really understand it.
Yeah, I think that's very valuable in nature of information. As we increase the speed of everything that we use, I think it's very important to understand that this is going to be premier. So thank you for adding that as well.
I mean, like, so the transactions per second of Pulsechain, like right now, with the 40 million gas limit, current state is 150 transactions per second. And we don't even exist yet, so we have 0. So if we get up to like 150, 200 transactions per second, I've seen 700 transactions per block. So that would be 200, 250 transactions per second if that was continuous. So it really depends on a lot of factors that I don't really want to go into right now. But right, so you'd say 150 to 250, maybe 250 transactions per second throughput, and then they can increase the gas limit for the overall network to 80 million, which increases the block size, which increases the number of transactions in each block. And it's really a matter of, can the network move those transactions through the network fast enough so that they can be put in the mempool, put into each block before the next block, right? A block is created, it's like circulated throughout the network, right? And then it's a node creates a block, and then it's like circulated throughout the network, and then the next validator creates another block, has all the transactions in the pool, and it's like this very complicated process of like packaging transactions as they come into the network. And as long as you can manage that, then you can increase throughput. But if you start having backlogs and errors and all these problems, then you start having issues, and you can't handle the throughput of the user base you have, and then now you have problems. And our hope is by the time we'd actually have those issues, we have so much users and so many transactions bombarding the network that the network can scale up easily, either through hardware or like through software tweaks, that it can just scale up to like whatever capacity limit within reason that we can handle. Like 1,000 transactions per block would be like a lot, way more than Ethereum can handle. Way more than Binance is doing right now. These are literally doing 150 to 200 transactions per block. So if we can do more than 200 transactions per block, we've already exceeded Binance Smart Chain's actual throughput right now. Matic, the similar situation. Ethereum is doing 1.4 million transactions per day, and we're talking about doing 10 million transactions per day, theoretically. So, I mean, we have to actually have users to test these theoretical limits with the hardware and the software, but it's possible that we're really set up for success.
Yeah, and that goes into we are here early. I think it's time in the market. It goes into how long we can wait because people don't need money until they need it, right? So when it comes to how long this thing is truly going to be around, I'm a pulse chain believer. I think that the longer we wait, the better product will be out. However, I don't think there's truly that much left to fix based on the rate that they're fixing these problems. Now, things can change and different problems are more complicated than others. But I don't speak the Go language. So maybe someone could elaborate on that.
I mean, the actual like internal operations of the dev team and like what exactly they're fixing and what is where is like unknown. Like right now, the public GitHub has like 43 issues, but those are like community given issues that may or may not actually be things that they need to fix, or maybe things they can prioritize for like after mainnet. And I'm sure inside of the actual private GitHubs, the private Git repos, and them working, they have a list of things, but that's not shared with us. All we have is Richard telling us what is happening. So we have to kind of wait for his next announcement to find out like what's going on inside of the actual core team. So the problem is we can know kind of what's happening inside. So we know that some of the system contracts that handle consensus, like validator, rotation, and slashing, some of that was rewritten into Go and put outside the EVM. And there's some other things that are actually still in EVM, and we don't really know the details on that like so much. And then how far along are they actually in that? Are they like completely done and they're just testing, or are they halfway done? Or are they? I have no idea. So we have to get an update from Richard. And unfortunately, all communications come from Richard because the dev team sometimes, like maybe every 2 months, releases like a single post of new information that people like Profex and I like are in there like looking at and go, oh, that's new. I didn't know that one. And maybe every 2 months, but almost 100% of the new information comes from Richard directly from a video. He drops a hint in some random video he's doing, or he'll tweet something out. So he's like definitely the PR communications person for Pulsechain.
Yeah, yeah, definitely. Eric Wall, the guy he debated, I'm pretty sure him and Richard are friends, right? Um, I think that once going over the video, the debate that they had more than once, kind of like a dance that they did, and I'm definitely sure pieces of that are going to be in the documentary. So I'm very excited to see how that goes now.
Hey, I tried asking earlier, but didn't get a response because there wasn't really anyone around who does this. But is there anyone who is actively running a pulse chain node right now that I can ask questions to?
Well, I'm running two, so you can ask me all the questions you want.
I'm roughly wondering, like, how much bandwidth it's using. I mean, I understand it's test net and it's not, but I want just like a minimum baseline.
Okay, so drop me Gamma, drop me a DM, and I would need to look on my website. I use DigitalOcean for my servers, so I can give you a screenshot of my bandwidth usage for I don't know for like a day, and I can just drop that to you in a DM. Like no problem.
I'll try and find your name. Yeah, it takes a minute.
It's Gamma in quotation marks or like and I don't know.
Please.
Yeah, parentheses, whatever. I'm drinking, so it's cool. But but yeah, just DM me and I'll send you a screenshot.
Noticed, I mean, again, I understand this is testnet, but have you noticed perchance like that the number of attacks on the IP address has gone up or not? Any complaints from DigitalOcean about like, you know, the IP being DDoSed and being null routed or whatever?
No, I haven't actually noticed anything like that.
That's good.
Like it's possible, but I mean, minor. Oh, I mean, I've been doing sysadmin for like 15 years, so like the basic security like stuff, like I have, down. So if it's like network wide, if you're talking about attacking the network, that's like a different thing. But like my actual server, yeah, I guess somebody could attack it. But we're on testnet, so I guess we'll see on mainnet how that goes. I mean, I have ways to like test for that kind of thing, but I haven't really noticed anything. Is the answer.
Yep. Yeah. So I mean, I similar. I've run a web hosting company for a few decades now. So I have my own infrastructure and servers that I administrate, and I'm building up what I want to use as a pulse chain node right now. But I'm just trying to get a couple, questions. Like, I mean, one of the things is it's like, how much bandwidth that I realistically need? Like, I mean, I have like a gigabit, but if I need to upgrade to 10 or 40 or whatever, I can easily do that. But I'm guessing that I probably don't need to upgrade to a 10 gigabit network.
Well,
Just
I mean, obviously, I have a gigabit. I mean, I can tell you, I have 1 gigabit. But of course, I'm not using like anywhere near that. And then for mainnet, say we had 1,000 transactions per block passing through the network. Yeah, I don't know what the bandwidth would be. I don't know what the bandwidth usage would be because I've never actually done that. I've never run a node on a network with that much that much throughput. So I would need to like just see that and then take action like you would. So I mean, you're going to run a validator or you're just running full nodes.
thinking of, you know, most likely if I set up a node, it'll be with the intention to be in the top 20 of validators. But that said, like if I mean, it depends on if I have enough pulse, of course. If I don't, and I might not really set up the validator until I see, mainnet running and see how much pulse I need to be in the top 20. But because if I obviously can't make that cut, then I either have to find people who would be willing to delegate to me or just
Well,
give
no,
up that.
I guarantee you're going to need delegated. And if you really seriously are thinking about being a validator, then you need to get on testnet right now, and you need to start developing your network of people that are going to delegate to you, like right now. So like next week or whatever, because you can't wait. Because if people have already been validators for 4 months or whatever, and they've already got people that know them, and on the validator website, you can put your name of who you are, and there are people who are already like establishing themselves as like competent validators. So if you want to be a validator on mainnet, and it sounds like you're going to have the requisite like experience, hardware to be like a good validator, then you should do it now, like next week. Set it up, and then try and collect delegate, and then like slow like work your way up until you're in the 33.
Yeah, I mean, I'm definitely going to be relying somewhat on people contributing to me, but I think I have at least a few dozen people here that know me well enough.
Yeah, it just comes down to like just starting your network like as soon as you can. Like I said, like 4 months, people have been on it. I mean, I'm pretty well. Yeah, I'm just making sure you can hear me. I'm pretty well known, so if I wanted to be a validator, I probably could be. Um, but I'm not being a validator because I think there's going to be other people who can do that function, and so I'm doing something else. But yeah, you need to start now, and then prove that you are competent, and then you're not getting slashes, and then learn what you need to learn, and then you'll be fine.
Yeah, I mean, I've gone through the process at least once. Like, I did set up not a validator, but I did set up a testnet node in early testnet and ran it for a week or so, or then just kind of let it die off, removed it. But so the process isn't anything beyond my technical capabilities, and yeah, I don't know. I'm still just kind of I moved around some money around so that I can finalize some stuff, but yeah, I have to ship in a few parts and build the final system that I want, and so it's you know it depends. Like I don't necessarily want to uh dedicate tens of thousands of dollars in hardware to something that it's not going to really actually happen.
Yeah, that was my next thing. Is I mean, you kind of need to treat a validator like a small business, where you put in the work and then you have to like wait for you to be a net profit, because it could be a year, it could be 2 years before you really start seeing gains being a validator, because the
Yeah,
networks will. We don't know what
all
the we don't know
about
what the we don't know
profit
what
from
the
it. I could care
transaction volume is,
less.
right? Yeah, so
There, but
yeah, you just kind of
yeah,
wait it,
I
and
don't
then
care
people
at
will.
all about the profit.
Well, then you're a validator for us. Non-product, no profit motive, and you're like competent. Awesome. Welcome aboard.
Yeah, I mean, as I was saying, I know there's a bunch of people here who I could probably rely on as being one of the people that they consider delegating to, um, since I've been here since the beginning days. But I know there's a lot of people also that don't know who I am, and because there was like a good several months that I just started playing games and not really caring about Pulsechain for a bit.
Yeah, but yeah, the advice still stands if you want to be a validator on mainnet. It's like everything, like starting early and getting established and get your name out there is probably beneficial. Because what you don't want to do, here's the thing, what you don't want to do is wait for a year, realize, oh shit, I should be a validator, and then all of a sudden, like, all these other validators have like all this delegate, and it's like an impossible task, like scaling a mountain that's like infinite, and you're like, oh my god, how am I ever going to do that? When if you could have started at mainnet and just like built up, and then you'd already be there. You know what I mean?
I mean, that definitely makes sense. I mean, I'm getting a lot closer to actually finalizing building the hardware, but I'm still kind of wavering on exactly what components I want to use and various little things. Like as I was saying, like, do I need to, uh, upgrade from a gigabit to a 10 gigabit just for, the chance that I take on a small DDoS. Like, I have my own BGP routed network, unlike, DigitalOcean. I mean, they do have multiple peers, and then I've worked for a company that was, that hosted DigitalOcean. Uh, uh, and so, I mean, I'm, just various all the networking type questions and stuff that I'm still trying to make decisions on.
Are you in the dev group?
I'm not, just because I am a bit vision impaired. That's why I was like, I haven't found your name yet. And so that's why I'm, on voice chat, because I can't really read the text chat.
All right, so I'm gonna do two things. I'm gonna give you the link to the dev chat in a DM, because we don't want like a bunch of random people who don't really care about dev in there, even though it's public. And then I'm gonna give you a link to my private.
Okay, you started cutting out a bit there.
We can do a voice chat if you want to talk about notes and stuff. Yeah, I don't know. I'm on the cell for my house, myself, my house Wi-Fi kind of cut out, so I went on cell. But for whatever reason, cell phones cell phones sometimes cut out. What I was gonna say is I'm gonna DM you. I'm gonna DM you the link to the dev chat, which is still public, but I don't publish it in any public groups because we don't want a bunch of noobs in there like that are asking like when moon and stuff. And then I'm gonna give you my private group so that we can do a voice chat if you want, and you can talk about nodes and stuff. Like, because I'm running a node, I'm going to be doing it on Pulsechain. You can ask me any question you want about configuration, about whatever. Doesn't really matter. It's cool. I'm literally like on Telegram like all day for like no reason, because I don't know. I just like it, I guess. So I'll DM you that. You can join if you want. If not, it doesn't really matter.
Yeah, thank you. I'd appreciate that. I mean, I've been offered that before, and at the time I didn't feel that I was ready, or just didn't feel that I would utilize it very much. But yeah, I'm definitely getting closer to where I can, probably get some benefit from at least being in the dev chat, and anything else, the other help you can provide, others can provide. I mean, I guess like some of the the questions that I was having is kind of like, in building up the node, like, do I want something like DDR5 memory, which would be faster, or should I go with like slightly slower DDR4 memory that has ECC? And just kind of technical questions, and I don't know.
Yeah, I mean, it's a block. Geth is designed to literally work on like the worst system imaginable in your house, like on your laptop. So it's not really designed to be like enterprise grade efficiency. Although I believe Richard and the devs will actually like alter the code to make it a lot more efficient for like enterprise grade, like data center use. Right now, it's not really designed for that. So it literally works fine with like 8 gigs of RAM, 4 CPUs on a laptop. That's for a full node, right? I mean, obviously it's not a validator. Um, so a lot of the considerations that you'd use in an enterprise grade installation for some other applications are not going to be really, I don't know, relevant, I guess is the word for it, because the way Geth is designed, it's just like it's not designed for enterprise grade hardware or enterprise grade uh, usage, I guess is the word. You know what I mean?
That's interesting because I haven't really heard that perspective before. So I don't know.
Well, I
I've
mean,
always just been kind of trying to find the best and fastest components that I can in building out this node. In general, just price, taking price into account, but
yeah, I mean, I'm the counter to like most people, I guess, in a lot of things, and it kind of gets me in trouble sometimes. But it's like, if you understand Geth, you understand what Geth is designed for. Geth is designed for literally running a node on your laptop in your house and having Ethereum actually function to like sync data, which is much different than like an enterprise grade like website or whatever. So in that respect, it's different. And since we're forking Ethereum Go, which is Geth, then it takes over those components. So the design intention of the network and like the subcomponents really like have a huge impact. Now with Pulse 33 33 nodes, then obviously it's in a data center. You want to have like RAM, you want to have CPU, you want to have like data storage that's obviously SSD, um, yeah, NVMe. I've been drinking, but like like fast SSD, and then CPU that's you know enough to do the transactions, and then enough RAM to store mem, which is about half of Geth, right? Geth stores when you configure the Pulse Go, it takes about half of the available memory, and that can be used for say mempool and some other functions that a Geth needs, and then that's like the minimum usage. So people will talk about how it needs like 128 gigs of RAM and it needs like so many CPUs. I'm like, yeah, it only needs those if you have the throughput, like actual transactions and actual users that are using the network that are pushing the data through the nodes. But if you don't have those transactions, then you don't need that much RAM. You don't need that much CPU. But the more transactions you push to the network, then the more you need that. So you basically need the ability to like, you can have like a kind of a like a lower end system. I don't know, 64 gigs of RAM and 16 or 32 CPUs. And on testnet, that's fine, right? But then if you go to mainnet and you start pushing 200, 300 transactions per second, then maybe you're talking about 256 gigs of RAM and you're talking about 64 or 128 CPUs. And then, you know what I mean? It's like that, those basic stuff.
yeah, the system that I'm building out right now will be designed so that it will be, somewhat upgradable. Like, I'll probably start with a minimum of about 128 gigs, but if I need to, like, I could upgrade it to a terabyte or 2 terabytes of RAM. I feel that I have the storage side already taken care of. That I'm confident on. My solution will be adequate. But yeah, it's gonna be interesting. Gonna be fun.
Yeah, I mean, for the memory, actual, like if I was running a validator, I would not do NVMe, not SSD, because that's, obviously it's 25 times faster. But right now it's like 700 gigs of memory for the database, and so I don't know. I did like 750, and then as long as you can increase that, say a terabyte, you're fine for a while, and then it's all about CPU and it's all about memory, RAM.
Yeah, the storage system that I built out for right now is a grade 10 4 terabytes. So total usable space, that is. So like 2 terabytes times 4.
Yeah, I mean that's way more than you need just for running a validator, so that you'll never have any problem with that.
That's what I'm hoping for. There's probably about say like half a dozen to a dozen other like small layer 1 blockchains that I run full nodes for, just like Bitcoin and other random shit. But yeah, how much you were saying, like it seems to me like you were saying that a multi-core processor, the more cores would be more advantageous.
Yeah, it's about Geth, and then if you can look into how Geth runs, then you can see what's most advantageous for that.
Serious question. What are you going to be thinking about the next time you drink a Red Bull?
Well, luckily I don't drink Red Bull, so I don't think about it because I don't want to think about Richard's. You know what?
No matter what, seems like people can't just like get off that topic, huh?
Well, it just came up now for the first time.
In general, like within the community and social media and whatnot.
That shit was funny, bro. It's cool. It's cool.
No, but the answer to the last question about the CPUs is like I'm using DigitalOcean, and so I actually don't even know what CPUs they use, but I use the higher end ones that they use in their data center. So I haven't actually bought and like created my own system, which I totally do, but I would have to do a little bit more research so I get the right CPU to make sure it's good. It actually came up in the dev chat whether like an i7 or an i8 was like better, and I was like, I don't know.
I think you at least want an i7, I believe. I forget what it was, but because someone was trying to do an i5, and that's just kind of weak sauce. The i7 have something that's better for databases, if I remember right. I just don't remember what it is.
It's interesting. I mean, but honestly, I'm not really. I haven't yet been looking at the Intel Core class processors. Most of the ones that I've been looking at are Xeon Scalable or Xeon 3.
I hope Filipino makes that left turn at some point.
Wrong turn.
Yeah, I mean, it's been so long. It came up in the dev chat earlier, like i7 versus i8. I was like, I don't know. I use shit on a data center. Like, they just upgrade their stuff all the time. Is there even a difference? Like, I used to care more, but it's sometimes I forget the different chipsets have different functionality that's built into the software, and then I have to remember that sometimes. People get into the weeds more than I'm used to.
I'm not gonna lie, Papa. You're right. That was a left turn, not a right turn signal. Just wanted to let you know that though, but my bad. But I got eyes. I was just smoking a blunt, yeah. But I just smiled. Hey, you're hot micing, dude. Hot mic, hot mic.